the UNSGSA. She is the honorary patron of the G20's Global Partnership for Financial Inclusion. And she's a Global Agenda Trustee for the World Economic Forum's Global Challenge Initiative on the future of the global financial system. India is a focus country of the UNSGSA's advocacy. She has traveled to India many times and will be with us hopefully very soon. And it's my honor to welcome Her Majesty Queen Maxima to the Global Fintech Fest.
Your Excellencies, ladies and gentlemen, it is a pleasure to join you by video and to be part of this wonderful festival for the first time. Over the last decade, as the UN Special Advocate, I have witnessed just how quickly financial inclusion has made a difference in people's lives. As of 2021, 76% of adults have an account, a 50% increase since 2011. This sharp rise has been fueled by technological revolution stretching across the world. New data from the Global Fintech report shows a long reach of financial technology. From India to East Africa, even the smallest rural merchant are being paid and making payments with the mobile phones they carry in their pockets. Women are a big part of this change. Barriers to mobile ownership are starting to fall, and the gender gap has narrowed from 9 to 6 percentage points. This means millions of more women can tap into the benefits of fintech and digital payments. We have come a long way since mobile phones were first used to leapfrog brick-and-mortar bank branches. People are sending and receiving payments in real time. Those who never had the right documents to open an account or take out a loan can now do so with digital IDs. Also, innovative credit products are being developed under enabling regulatory approaches. Sandboxes, innovation offices, accelerators, and tech sprints have been springboards for exciting new fintech solutions and regulatory adaptation. To sustain these gains, certain policies and infrastructure need to be in place, namely digital public goods. Some are critical for accessing fintech and the digital economy, such as connectivity, network towers, and digital IDs. Others make markets work better for customers, such as fair competition and interoperable payment systems. Some protect the financial system and the people using it, like cybersecurity, consumer protection, and digital and financial literacy. Too often, digital infrastructure and policies are considered in separate silos, but really, these public goods work best together. One digital public good that requires more attention is data governance and privacy. When individuals and businesses share their data, they often do not know how valuable it is. Most grant consent without reading the terms and conditions, which, as we all know, are often long and hard to comprehend. Accessing one's data is another challenge. For customers, it is nearly impossible to share their own data and use it to select suitable products or get better terms such as lower interest rates. So, they cannot access their own data and they're also not benefiting from it. Customers deserve more transparency and involvement in how their data is collected, shared, and used. To better understand how we can empower individuals and small businesses, the EU Data Act and India's Data Empowerment and Protection Architecture are two initiatives to watch. India has been a global leader in showing what is possible with the Indian stack, which combines Aadhaar ID cards, the United Payments Interface, and account aggregators into a powerful tool for inclusive digital finance. Similar tools can be applied elsewhere, and not just in large economies. Peru and Estonia are examples of small nations that have created robust and inclusive digital public goods. We have to learn from each other. Organizations such as the Bank for International Settlements, the United Nations, and the World Bank Group can act as facilitators for governments and central banks to exchange knowledge on global public goods. New global platforms are also guiding the conversation, such as the Digital Public Goods Alliances. Others are mobilizing global funding for digital public infrastructure, such as Co-Develop. And critical international forums such as the G20 and the IMF World Bank annual meetings can help prioritize digital public goods high on the global agenda. At the heart of all of these activities are the customers who want to live a financially healthy life and to seize opportunities that the digital economy can create. Digital financial products and services should not only do no harm, they should also do good. Credit products can help people meet their long-term goals, but too much debt can damage financial health. There are many opportunities to promote financial health. For example, with saving products that nudge people to reach a financial goal, or by encouraging financial institutions to measure the financial health of their customers and flag rising debt burdens. During this week's festival, you will be able to discuss these important issues. How can the public and private sector come together to effectively design, invest in, and govern digital public goods? How can we empower individuals and small businesses with their own data? How can we encourage the development of financial products that build resilience and financial health? I wish you every success in your efforts to create a digital financial system that really benefits everyone.
Rajesh ji.
A very good morning, everyone. A warm welcome from obviously the Advisory Council. Chairman sir has already said. I just wanted to say a couple of words. One is, as you are aware, and this, we are Reserve Bank Innovation Hub, and we look forward to meeting you over the next 3 days, a wholly owned subsidiary of RBI. And this Global Fintech Festival holds, a lot of potential for our work, because we want to ensure how do we get finance and technology to 1 billion people. So it's an honor for us, and we look forward to working with all of you. All the best.
Thank you, Rajesh ji. I'll now invite Srinivas sir to do the closing for part A, and then we move into another important event for the day, which is the report release. Srinivas sir.
Good morning. Oh, what a phenomenal opening session for GFF today. We sincerely thank our Honorable Prime Minister Shri Narendra Modi ji for his message on constant innovation for inclusion and how in India, fintech domain has earned goodwill for enabling inclusion. Under his able guidance and leadership, India has emerged as a digital leader in fintech. We thank you from the bottom of the heart, sir. We are also very thankful for Her Majesty Queen Maxima, United Nations Special General Secretary, Advocate, for very powerful message on inclusion finance for development, especially on how women are one of the key groups benefiting from fintechs and digital revolution. While a lot of good examples were given by her on how digital public goods are impacting the world as a whole. Also, a special thanks to Chris sir for his guidance and his leadership, and especially chairing the advisory committee for this GFF event, a grand event, along with all our committee members. Special thanks to organizers, and a special thanks to NPCI, FCC, and PCI for putting this together. I would be actually lacking if I were not to thank RBI, Department of Economic Affairs, and IFSCA for their partnership in designing the program, and of course getting us powerful leaders to speak in this event. We would also like to thank our multiple sponsors and exhibition partners who are there today and tomorrow. Please do visit their stalls. Today is actually a very power-packed day. We are starting off this event immediately after this with the launch of a report by EY. Immediately after that, we have the most important session of the day, the address by the Finance Minister, Srimati Nirmala Sitharaman, along with conversation with Krish sir. We have an interesting session followed by Finance Minister on bridging the digital divide by WhatsApp team. Another very interesting session to look out for today is Health 2.0 by Dr. R.S. Sharma. We're going to talk about all the innovative things India is doing on the new national health stack. There's an interesting session by Rajya Sabha MP from Odisha, Mr. Amar Patnaik, on how regulations will define Indian Fintech. There's an interesting session by NPCI, and should not miss it, on barriers and drivers for driving for the next billion. That's coming later off in the second half. And one of the important keynote speeches today in the second half will be by RBI Governor Sri Shaktikanta Das. He will be physically present here and talking to us. We have multiple product launches and hackathon planned during the day today. Of course, we have a very important event in the evening, recognizing all the FinTech winners or the leaders of FinTech, followed by a special NPCI-sponsored Sundowner event after the award. So we have a really power-packed day today. Looking forward for interacting with each one of you. I'd like to invite the host to carry from here. Thank you very much.
Thank you very much, sir. Firstly, good morning, ladies and gentlemen. My name is Kavya R. Chavali, and after hearing from our leaders and the revered minds of the industry, we will now be unveiling the annual GFF report titled Winds of Change, for which I'd like to also invite on stage Mr. Abhizar Divanji, Head Financial Services EY, and Mr. Nilesh Nakar, Partner EY. Can we have a huge round of applause? We'd like to request all of you to come together for the unveiling of the report. Yes, sir. And let's have all of you come together for a group photograph as well. Can we have a huge round of applause one more time? And as our dignitaries are holding the report, let me also inform you that this report can be also downloaded on the GFF Thought Leadership webpage for those who want to access. But before that, we'll also be getting to hear some nuggets of insights on the report in a short while. With that, we'd like to thank all our dignitaries. Thank you very much. And we request you also to please take your seats and join our members of the audience to also enjoy the rest of the show. Thank you very much, ma'am. Thank you, sir. Thank you very much, sir. And on that note, while the report has been launched, ladies and gentlemen, it's also time to gather the insights from Mr. Abhizar Divanji, Head Financial Services EY. So, sir, I'd like to request you to please share your words.
Thank you. Gentlemen, I'll try and make it as brief as possible. It's a big fat report that's been issued out here. And my job is to summarize it in 5 minutes because most of you here know everything about FinTech. All I can do is add our bits to it. Just a bit of statistic. India has 7,300 plus FinTech startups. It's an amazing number. It actually means that we have 7,300 ideas. We have had 363 rounds of funding, which is again amazing. The kind of money that's sought after and that is available in India is phenomenal. We've ended up raising close to $14 billion. And we now have 24 unicorns. It's an amazing feat to have in India, in a country where we knew that there was a lot of brain, but a lot of that brain was drained to other countries. It's good to see now that that brain is right here and it's developing India's own ecosystem. We've contributed significantly to the Green Initiative. They are the enablers of SDGs, more than 17 SDGs, which is amazing. We're into green energy, inclusiveness, global. I think at the end of it, the diversity of our fintechs has really brought about a lot more inclusion than normal banking could ever have gotten. The report basically talks about 7 trends. One is, as everybody else has spoken, the immense digital adoption that this country has seen, the horizontal expansion of the payment ecosystem, neobanking partnerships, ecosystem banking, capturing every aspect of a customer, not necessarily his financial needs. InsurTech, our insurance penetration is pretty low, and the use of technology in insurance is tremendous. There's a deliberation on that too. Alternative investment platforms. We were a nation which talked about putting a lot of our money into bank deposits. Technology has enabled penetration of that money into mainframe investments for productive use, directly, without the intermediation of banks. And that is a huge, huge benefit to the direct creator of value. Regulation in India has also been pretty proactive in this regard. And I must say that against a lot of popular belief that regulation in India has been, in a way, regressive to the growth of fintechs. Let me tell you, as Chris also said in his talk, sustainability is by far the most important thing. And I think our regulator has been much more on the path of sustainability to make sure that anything which is growing at an immense pace as fintech is, there needs to be controls to make sure that that growth remains sustainable. Otherwise, we'll have most of them grow to large levels and then fall by the wayside. What we really need as a system is to make sure that the ultimate customer is protected. And protection of that customer is what's going to create value for most fintechs. I think there is a massive intermediation that fintechs can do. So we are basically heading towards a trillion fintech economy. India has got fantastic global landscape of payments. We've seen that through UPI. We have seen a fantastic ecosystem being created in India with the whole India stack, making available a lot more information, and information in a responsible way to be used in a responsible way. We're now going to have ONDC, which is a free market, where basically aggregators try to monopolize markets. Things like UPI and things like ONDC will enable democratization of those markets for the benefit of the customer. And if the customer benefits, ultimately the fintechs have to benefit. Regulations will evolve with account aggregator type formats coming in, with more on the FLDG being curtailed and regulated in a way. I think the core of any fintech is to deliver value to the customer, not subsidized revenues through an FLDG process. And I think that's what regulation aims to do, and that's what regulation should aim to do. Lastly, I would like to say that the fintechs should not ever compete with the banking system. In effect, it should collaborate with it. And the collaboration of an existing, robust financial services ecosystem that this country has can do well with the fintech coming and overlaying on it. Because that's when the customer will see the maximum value. And if the customer sees the maximum value, there will be benefit. The other thing is, who is the customer? For the traditional banking, that customer is somebody who has a balance sheet or who has a tax return, or somebody who has a formal source of income. What fintechs, with the use of technology, with the use of data, with the use of India Stack, with the use of transaction mining, with the use of ecosystem-based financial services, be able to create credit surrogates, which will expand India's credit markets. Everybody who is not eligible for finance will find a way to get finance. That's the aim of technology. And this country will, where it has only very minimal taxpayers, will actually see a lot more income coming to the fore. The other thing the fintech is doing very well is formalizing the Indian economy. I mean, the simple use of a Paytm machine, Paytm app, or a simple use of any other Google Pay or whatever else, gets a particular individual's transaction within the formal domain. And getting that within the formal domain is a huge contribution to the Indian economy. Because going forward, he has entered the formal domain and will continue to be part of it. As he is part of the formal domain, he will then be more credit accessible. And as he is more credit accessible, the economy will demand. And why $1 trillion? Fintech should be a $2 trillion economy and possibly be part of India's integral growth. Thank you very much. I'll take more time.
Thank you very much, Mr. Devanji, and thank you very much, Mr. Nilesh. Well, that being said, ladies and gentlemen, you can go ahead and download the report from the GFF Thought Leadership webpage as well. And that way you can also get an access to the report that's just been unveiled in front of all of you. With that, let me also take the opportunity to thank our title partner, NPCI, and our theme partner, WhatsApp. As I say WhatsApp, it also means it's time to take the conversation forward, which is why we will now deep dive into a special address on how technology can help build a sustainable, inclusive, and global financial world. We have with us Mr. Abhijit Bose, Head of India, WhatsApp, to share his thoughts with all of us in the form of a special address. So ladies and gentlemen, can we have a huge round of applause? And please help me welcome on stage Mr. Abhijit Bose, Head of India, WhatsApp.
All right. Well, good morning, ladies and gentlemen. It gives me great pleasure to be with you here today. This is my 4th year as head of WhatsApp in India. And for the last 3 years, we've been a proud partner of the Global Fintech Festival. And each year, I've had the privilege of presenting at the GFF. And as I was looking back at what we presented, our sessions at GFF have been, in many ways, a roadmap of WhatsApp's digital journey in India. Do we have the presentation? Can we load the presentation? All right, there we go. So, when I first spoke here in 2020, I talked about how India's WhatsApp moment, to use a term coined by Nandan Nilekani, and our country's digital transformation was inevitable. More than other markets, we were building a new digital architecture and ecosystem powered by the India stack. This new architecture, coupled with a new generation of digital entrepreneurs, when it all came together, would solve some of the world's toughest social impact and financial inclusion problems at massive scale, and ultimately become templates coming out of India for the rest of the world. Now, we were all still evangelists back then, and while the components like UPI and Aadhaar were obviously scaling, the actual social and business solutions that would be the capstone of India's WhatsApp moment were still being pitched in PowerPoint. But we knew at WhatsApp, especially with our reach to a huge section of the underserved people in the country, that we had an important role to play. We began opening up as a platform, not just a messaging app, on which any organization, NGO, small or large business, even the government, could build a great native mobile experience that any Indian could access digitally from a phone via WhatsApp. We announced our strategy, and like a social impact VC, we wanted to partner, support, and seed many experiments to learn and see what was possible. Last year, the first of the experiments and programs had gone live. Some worked and some didn't. But we did clearly realize that there was an untapped demand and value for people who were looking for a different way to engage. The major example were all the programs launched in partnership with the government to scale health info and services for COVID over WhatsApp. The smallest volunteer groups could mobilize and connect people to oxygen, while the government could manage vaccine appointments and certificates on their MyGov portal, all fully digital and easy for people via WhatsApp. We celebrated the phenomenal success of UPI, taking its place next to Aadhaar as one of the great digital leapfrogs in our country. Moreover, we highlighted the upcoming services from India Stack, like the Beacon Protocol, which will help small businesses manage logistics, and the DigiLocker, which was launched this year on WhatsApp and is now accessible to all WhatsApp users via MyGov. Now, the point I reinforced last year is that while we should certainly celebrate the progress that we have made, this was only phase 2 of a longer digital journey in which many building blocks were coming online in a real way, and both organizations and people were becoming aware that they might be able to change the way that they manage their daily lives and maybe access potentially life-changing services digitally. Our common goal is not to simply scale digital payments or IDs or documents. Those are building blocks for solutions. The end goal is to scale access and adoption of social, business, and financial impact services. And we should do this through redesigned digital experiences using those building blocks. And to do that, through a growing and entrepreneurial ecosystem, who in turn will often be partnering with the established and trusted service providers which manage those services, including banks, other financial institutions, and the government. So, when we discuss how technology can help build a sustainable, inclusive, and global financial world, the problem we're all trying to solve is this. Until now, this was our old model of how people, especially the underserved and rural population, might, if they were lucky, access services such as banking, microcredit, microinsurance, micropensions, and even government and health services or retail goods. Each industry was siloed and often vertically integrated. Legacy systems were impossible to customize. Redundant, inflexible, inefficient, time-sensitive, paperwork-based processes all put the onus on people to put in huge effort and work, some of which was impossible to complete if you didn't have things readily available. Massive feet on the street and physical retail distribution and collection created an unscalable cost structure, which ultimately meant it was not economically possible to deliver and support 500 rupee or 1,000 rupee financial products. Instead, one-size-fits-all products and marketing favored the largest but least flexible companies and aggregators. So in summary, on the demand side for people and also micro business owners, especially in Tier 3 and rural parts of our country, they had no access, and the processes were not easy, if not impossible. On the supply side, for the service providers, their cost per person was non-sustainable, especially for the underserved segment, and they had no ability for micro-segmentation and personalized experiences. So is there any wonder why hundreds of millions of people in micro-businesses were left out of our economy and financial inclusion? By the way, this is not a problem that's just exclusive to our country. This is a problem across emerging economies, and hence, once we solve it here, our model will inevitably become a template for the world. So here we are at the end of 2022, and our new digital model is flexing and ramping up. And this new Indian digital ecosystem is not simply about redeploying existing old systems and broken processes in an electronic format. No. Instead, we took the old siloed model and sliced it and broke it apart into platforms and components through which each sector and organization and use case, from access to adoption to payment to delivery, could be reimagined and rebuilt into native, intuitive digital journeys in which the 1,000 friction points and inefficiencies of the old model disappeared. Moreover, this is not just about technology and components. Success and adoption depends on mobilizing the ecosystem and partnerships by enabling digital-first entrepreneurs to partner with and help scale the supply of goods and services from trusted government programs, financial inclusions, institutions, network of small retail businesses, healthcare providers, etc. On the back end, these companies that are experts in creating great digital experiences can leverage the India stack and platforms like WhatsApp to create frictionless digital user journeys that plug into, while hiding the complexity of, the existing systems and supply chain of the institution and service providers. On the front end, people have apps like WhatsApp in their pocket and can now easily access and interact with the businesses and services of their choice, matching their specific needs in a simple, trusted, secure, and common user experience. Finally, adoption by the underserved, especially those who may not be digitally native, will often require further partnership with groups on the ground who understand and are trusted by the people to help them learn, onboard, and get their first interaction successfully done securely and easily. The new Indian architecture and model is democratizing our economy for both people and small business. There's always been a demand for financial inclusion, products and services, but many of the consumers had no awareness, choice, or access. That will now change. On the supply side, for many organizations, there was always a cap on how far they could reach and how much they could profitably scale. Moreover, the smallest NGO, innovative financial service provider, micro business, or even regional hospital could not have the same access and ability to serve new markets when compared to larger players. That will also now change. The new Indian model is a unique template of public and private collaboration and integration, digital plus on-the-ground hybrid go-to-market, and restructured unit economics and business models that can hit scale for the underserved at a cost structure that is unimaginable in mature markets, mainly because the mature markets had the margins and type of customer bases to not need to solve for this. So let me make this real. Let me share 4 different examples across 4 very different segments to showcase how technology, when coupled by the right partners and redesigned with the customer in mind, can materially change access and effectiveness of almost any sector and help build a sustainable, inclusive, and global financial world. WhatsApp has 2 products to help organizations and businesses. The first is our WhatsApp for Small Business, which is a specialized version of WhatsApp designed especially for the Kirana shop owner. Over 15 million small and micro businesses in India rely on WhatsApp Small Business app. WhatsApp Small Business app affords them the opportunity to build a digital storefront, a professional identity of their business, and serve customers more effectively, right from their phones. It's amazing to see how technology, like the Small Business app, can get adopted in traditional, unorganized sectors such as handicrafts, education, and in turn help millions of underserved micro-entrepreneurs, including women and homemakers, run successful businesses. An example is our partnership with Seva, with whom we work to enable and empower SMB women entrepreneurs at the grassroots. During the pandemic, WhatsApp enabled women farmers in Kashmir to connect with customers in Gujarat, to sell thousands of kgs of apples and cherries, creating an alternate supply chain using WhatsApp. Mandeshi is another women's empowerment nonprofit we work with. During the pandemic, small enterprises that ran tailoring units for school uniforms were left with loads of fabric but no food on the table. And they decided to turn the fabric into masks to continue their livelihood. They created videos of this skill and circulated it within the community members using WhatsApp. Soon there were several small groups of women operating and coordinating the mask making activity within their villages. Together, these women made 10 lakh masks within a few months and sold them in urban cities. So here's a short video further highlighting our partnership with Mandeshi Foundation and how it can impact the grassroots. If you could play the video, please.
कुछ तो बात है महाराष्ट्र के इस गांव की औरतों में। भारत के आर्थिक विकास की रफ्तार से जुड़ने के लिए रोज सुबह अपने घर से निकलती है, सबको साथ लेके मीलों दूर चलती है। कुछ तो बात है महाराष्ट्र के इस गांव की औरतों में। हर दिन कुछ नया सोचती है, हर बदलाव को सीखती है, सिखाती है, बेझिझक, बेखौफ अपनी एक नई पहचान बनाती है। कुछ तो बात है महाराष्ट्र के इस गांव की औरतों में। कभी फोटोग्राफर, कभी मार्केटिंग गुरु, कभी टीचर, झट से जो चाहे वो बन जाती है। टाइप किए बिना अपनी आवाज से ही सबको अपने प्लान समझाती है। कुछ तो बात है महाराष्ट्र के इस गांव की औरतों में।
व्हॉट्सअप व्हिडिओ कॉलद्वारे ट्रेनिंग घेतलं होतं, काम केलं होतं, मी सक्सेस झाली.
200पेक्षा जास्त लोक महिला माझ्या स्टेटस बघते ते आणि मला रिप्लाय करते ते.
अभी अपन व्हाट्सएप बिजनेस पर टच किया तो उसमें सब दिखाई देगा तुम्हारा कितने दिन दुकान चालू है.
When women want to do businesses, WhatsApp came with the solutions in your hand.
एक लक्ष्य, एक विश्वास, एक बटन के साथ ये सभी औरतें हर दिन भारत से इंडिया की दूरी कम करती हैं। हमारे डिजिटल इंडिया के सपने को हर दिन एक नई ऊर्जा से भरती है। सच, कुछ तो बात है महाराष्ट्र के इस गांव की औरतों में।
दिवसाची सुरुवात पण आमची व्हॉट्सअपनेच होते आणि दिवसाची शेवट पण व्हॉट्सअपनेच होतो. एवढं सोपं आहे व्हॉट्सअप.
और व्हाट्सएप गर्व के साथ मानदेशी की औरतों के साथ खड़ा है।
Thank you. The second option that we have for businesses is our WhatsApp Business API. It lets businesses in collaboration with digital partners create customized and awesome digital journeys that are accessible to any customer on WhatsApp. One of the first pilots that we pushed in 2020 was to explore how the Indian National Pension Scheme, or NPS, could scale significantly and digitally over WhatsApp. Pensions, along with insurance, banking, and credit, make up the core of financial inclusion for the poorest and underserved segments. This was indeed reinforced in RBI's vision document published in 2019. In 2020, Pinbox, a startup founded by veterans of India's micro-pension sector, partnered with accredited and well-established financial institutions such as HDFC to launch a service to make micro-pensions much more accessible and available. They also knew from experience that the process had to be reinvented digitally, as the cost structure of the existing model would not scale to serve our population. We helped Pinbox launch on WhatsApp, and today you can both activate your own pensions from NPS or gift a pension to staff or people you know, all end-to-end through WhatsApp. I've set up pensions for all the people who help my family, and it's honestly amazing. The setup takes 10 minutes, but it can be done from your kitchen table and mobile at home or via an agent or a BC in the field. Compare that to the old multi-day paper-based processes in which applications needed to be handed in, signed in person, at service points that were kilometers from people's homes. And the minimum investment is only 500 rupees. Impossible to recoup as an institution if you consider all the manual costs of application, verification, and collection in the old model. Once set up, people get issued their permanent retirement account number and can access the NPS portal to see how their retirement is growing. True digital financial inclusion. Even more amazing is that once set up, further top-ups by you or the pensioner literally takes 30 seconds using UPI. During the process, 4 different components of the India stack are used: Aadhaar, DigiLocker, eKYC, and UPI. It is a great example of how the new digital ecosystem of India is coming together. NPS institutions like HDFC, digitized and simplified by innovators like Pinbox, with reimagined user journeys and cost structures thanks to India Stack, are now accessible to any Indian with a mobile phone via open platforms like WhatsApp. At WhatsApp, we've been consistently investing in awareness and adoption by rural and new to digital users. For our third example, I want to highlight a program that we launched last year in partnership with OneBridge, a foundation focused on digitizing rural India. Our joint goal is to onboard the next 500 million Indians into our digital economy and payments ecosystem. For this to happen, we realized that digital literacy and an assisted onboarding in the field was an important first step. So, we launched a pilot for 500 villages across Karnataka and Maharashtra, where we are helping to educate users at the grassroots about the use and the benefits of digital payments. The results and impact of the pilot program have been very encouraging. We helped familiarize users with the how and the what of digital payments in villages where the economy is predominantly cash-led. And in parallel, we helped build a robust network of local merchants who are now pushing digital payments over UPI. The results were lakhs of activations in over 1,200 villages across 45 districts, of Maharashtra, Karnataka, and Telangana. The final example I'd like to show you today is one that we've been working on for a while, and I think is truly game-changing, especially for small and mid-market businesses. A few weeks ago, Reliance Jio announced the launch of their JioMart experience on WhatsApp. Now here's a brief view of how it works. If you could play the video, please. So I think you'll agree it doesn't look like any WhatsApp experience or UX that you've seen before, certainly not for me. And eventually, it will be generally available to all businesses of all sizes on the WhatsApp Business API. Now, small and rural businesses make up the backbone of our economy and employment. Imagine yourself as the owner of a small business. Your access to new customers has been limited to whomever can walk into your store or maybe find you in a variety of aggregators. Again, this all democratizes the digital economy for everyone. WhatsApp is only the medium. Customers are connecting and interacting directly with the businesses that they choose. Also, I believe the versatility of what one can do on the WhatsApp Business API is shown here. And because WhatsApp is an open platform, it opens up opportunities to many, many areas. I expect and hope that this medium will be used to create similarly amazing journeys for other sectors like education, skilling, healthcare, and more over the next year or two. Today, technology, combined with the growing digital ecosystem, can create a major impact in our economy and help us move towards a more sustainable, inclusive, and global financial world. But this is just the tip of the iceberg. There are so many more case studies across sectors that are coming online and ramping up right now. And we expect these to increase exponentially over the next 2 to 3 years. And I expect that these next 2 to 3 years will indeed be WhatsApp's moment, India's WhatsApp moment for financial inclusion and digital empowerment, especially for the next 500 million Indians who are ready to benefit from our dynamic and growing digital economy. Thank you all so much for your time today, and thank you all for being an integral part of the evolving India Fintech and financial inclusion story. Enjoy your day.
Thank you very much, Abhijit, for sharing across how small businesses are able to make a big impact using the WhatsApp business, or for that matter, looking forward to a digital inclusion like never before. And I think I'm also reminded of an example wherein in my alternate avatar, I get to work with the weavers back in my hometown in Andhra Pradesh. And I've seen how the weavers back there have literally shifted their conversations, how it used to be earlier, and now how they're able to use WhatsApp and sort of build on the conversations and also build on the designs, and at the same time contribute towards the heritage of our economy. So absolutely wonderful indeed. On that note, ladies and gentlemen, we're also about to move forward towards our next session. With that being said, I'm sure some of you would have also noticed that we have placed some mics right in the aisle area. Now, in case there are certain scenarios or certain sessions where we do have room for Q&A, we're going to be urging our members of the audience to step forward, take the mic to ask your questions to our speakers. And at the same time, I hope all of you are also taking a good look at the agenda, because we have a lot of sessions taking place right here on the third floor as well as on the second floor. We've got a lot of breakout rooms. We've got a lot of sessions, panel tracks taking place. I do hope you're all at the right track, at the right place, in the right room. With that, we'll now move forward to the inaugural session and address by the Honorable Finance Minister, Srimati Nirmala Sitharaman. And Srimati Nirmala Sitharaman will be joining us virtually. But to steer this particular inaugural session, I'd like to once again invite on stage Shri Chris Gopal Krishnan, the Chairman of GFF 2022 Advisory Board, Chairman Axelor Ventures, and also co-founder Infosys. So, ladies and gentlemen, what we're going to do is deep dive into the inaugural address. And to steer this inaugural address forward, we'll once again invite on stage Mr. Chris Gopal Krishnan. Well, let me inform our members of the audience that while we are having hybrid sessions over here, Srimati Nirmala Sitharaman will be joining us around 11:30 a.m. So I'm going to request everyone to please be seated, stay tuned, so that we can steer forward the inaugural address in a short while. So I'm going to request everyone to please be seated. We'll commence the inaugural address in just a couple of minutes. Thank you.
Four, three, two, one.
gentlemen, as the inaugural address will commence in a few minutes, we kindly request everyone to please take your seats. And we request everyone in the pre-function area to kindly proceed inside the hall. The inaugural address will commence in a few minutes, and we kindly request everyone to please take your seats. Thank you. Well, it's wonderful to see, ladies and gentlemen, all of you indulging in some wonderful conversations yourselves, and why not? I hope all of you are also getting some time to connect with one another, considering that after all the virtual editions, here we are with the in-person edition on such a beautiful scale. That being said, we'll be having the inaugural address any moment right now, so I'm going to once again request everyone standing near the hall, please come forward and please take your seats. We'll get started with the inaugural address by the Honorable Finance Minister, Srimati Nirmala Sitharaman. As we're about to begin in just about 2 minutes, I'm going to request each and every one of you, please take your seats. All the delegates who are entering inside the hall, I'd like to inform you that the inaugural address is about to begin. So we request everyone to please take your seats. Ladies and gentlemen, let me inform all our members of the audience that our finance minister is, in fact, joining us live from the Delhi office. So while we'll be waiting for her to join in, let me inform you that this conversation will also be steered by Shri Chris Gopalakrishnan. So I'm going to once again request everyone to please take your seats, as the finance minister will be joining us live. And we're just waiting for her to join in. It's a session wherein she'll get to interact with all of you. She'll get to share her thoughts. So I'm going to request all the ones who are also standing near the exit of the hall, very quickly, please come inside and take your seats. And very aptly, we have titled this as the Global Fintech Fest. Across 3 days, we have a lot of conversations, a lot of insights flowing in. And at the same time, we have distributed these tracks beautifully across so many halls so that you can all get to be part of the pertinent conversations that suits you and that you'd like to, sort of indulge in. So I do hope all of you manage to also scan the QR code, take a look at the agenda, because the agenda has all the details of all the speakers who are joining in, all the sessions that are in store for all of you across the 3 days. And yes, very aptly, we've called it the Fest, because it's just brilliant to see such a scale, such a large number of attendees joining in for the 3 days of the Global Fintech Fest. So on that note, once again, we're going to request everyone who are joining in to please take your seats. And probably even during the later part of the day, I hope all of you also take some time off to visit the expo. At the expo, we have a lot of our partner booths showcasing the latest initiatives, latest solutions as well. So I do hope all of you take some time off to visit the expo booth that's in the adjacent hall, but a little later towards the day as well. So please do take some time off to connect with everyone, to connect with our partner booths. And in just a couple of minutes, we'll also have the Honorable Finance Minister joining in live from the Delhi office. So once again, kindly please take your seats. And on that note, we've just been informed that Srimati Nirmala Sitharaman, the Honorable Finance Minister, Government of India, has joined us. So to steer the conversation forward, once again, I'd like to invite on stage Shri Chris Gopalakrishnan. Over to you, sir.
Honorable Finance Minister of India, Srimati Nirmala Sitharaman ji, delegates. During the COVID crisis, Government of India supplied free food grains and basic requirements to millions of people below poverty line. They made sure that the people who lost their livelihood could feed themselves and their families. Again, during COVID crisis, India vaccinated 80% of its eligible population with 2 doses, better than any large country, better than developed economies. And the whole program was tracked through the CoWIN application, and people received their digital vaccination certificates instantaneously. MSMEs received support. The reason I'm mentioning these are that our response during the crisis was effective and did not increase the money supply and add to inflation. In fact, I would venture to say inflation by and large in India is because of outside factors. In the last 8 years, India has become the 3rd best location for startups and entrepreneurship, attracting more than $65 billion of investment, many from overseas investors. Today, the economy has more than 100 unicorns. And again, especially in the fintech space, we have seen that there are many unicorns. The unique architecture that we have created in the fintech space, accessible, inclusive, affordable, and sustainable, is again a true partnership between government, regulators, and industry. Recently, a McKinsey report said that this century could become India's century. The Economist magazine reported that India is one of the brightest spots in the global economy. The world expects India to grow faster and do well in this century, becoming one of the leading economies of the world. We need to believe in this ourselves and work together and work smarter to indeed make this happen. It's my honor and privilege to request Honorable Finance Minister of India, Srimati Nirmala Sitharamanji, to deliver the inaugural address for Global Fintech Fest 2022 and share her thoughts. Ma'am, over to you.
Thank you very much, Krish Gopalakrishnan, for inviting me to attend the Global Fintech Fest. You've asked me to speak on creating a sustainable financial world, global, green, and inclusive. Green itself, sustainable itself, is a vast area to talk, also because the way in which Prime Minister Modi has committed himself and came up with a nationally determined goal, set up goals in COP21, which were very close to 90% fulfilled, well in advance of the given time. Subsequent to that, in COP26 again, we heard the Prime Minister set goals which were very ambitious for a developing country, emerging market like India, and that itself gives us quite a few challenges. The commitments which were made in COP21 Paris, as I said, were largely completed, achieved, and the reportage made. But the most important aspect for me, being in the finance ministry, is it was achieved entirely with India's own funds. So if greater ambitious goals are set for COP26, and we are looking at that to be achieved similarly as we did in COP21, there are several more challenges. Even more so, given the global circumstances. I've said this several times before, but I think Global Fintech Fest would be also an appropriate forum for me to recall that statement which I've made earlier. India planned to have natural gas as a transitional gas. Energy source, transitional energy source to be derived from natural gas. We were moving very fast on solar and wind energy, renewable energy. We are still going ahead with our commitments for renewable energy. But the transitional energy source, natural gas, has become more expensive. And not just for India, for every country in the world, that many countries are going back to coal. India also will have to get back to coal, at least somewhat, so that we are able to keep the base level of our energy requirement sustained. So it's sustaining a base level of energy requirement slightly different from the sustainability debate. But I would like to confine myself to sustainable financial world. Creating a sustainable financial world is what you want me to speak on. I'm talking less, therefore, on global, green, and inclusive, Inclusive, yes, global and green, as I said, is a vast area, and I'd like to definitely talk on it, but some other time. Now I focus only on creating a sustainable financial world. India started this financial world, which is going to be all-inclusive, and at the same time, depending a lot more on sustainable ways of doing it. So the first thing on that is we have led the way in bringing an inclusive financial world by making sure that financial services will be accessed through the India stack, and that itself for 4 different layers. It's a very good approach to look at financial inclusion on the through the route of how many people have got covered, how many poor have got covered, what's the kind of amount which flows to their accounts through DBT, how many have kept a good reasonable balance so that their credit scores go up, and so on. But I also want to bring you this dimension whereby we say the inclusive nature of financial inclusion program of the government is very well established at various different levels. The levels which are being covered here are one at the presence-less layer. The person need not be present. His identity is established. He can definitely be recognized for what he is, that unique human being, unique individual for whom the service is being restored or services being extended. So you find the presence-less layer level in which Aadhaar has served our cause. The next one is the paperless layer, which is enabled through, again, an Aadhaar, eKYC, e-sign, and also the digi-locker level. So you saw the presence-less layer, then you're seeing the paperless layer. The third layer is the cashless layer, which is the UPI, the AEPS, and ABPS, which show that it is possible to lift it one more layer and make it paperless. In a way, not so much on the financial side, but also the Ayushman Bharat is also bringing a paperless, cashless way of dealing with individuals' health, where he doesn't have to have upfront money out of the pocket money to be spending on his health. So in health as well, as much as in finance, that one layer of cashless layer, which is the third layer from the bottom, which has brought in a revolution. And the final thing, which has happened as of September 2021, is the account aggregator framework, which has been brought in, where the consent layer comes in. The consent layer, which will have to have, not always, in a way, opacity is good. But when you're bringing in consent layer into a digital framework, which is through the account aggregator, well recognized by the Reserve Bank of India, you have a certain opacity which gets cleared only on the consent given by the individual, data privacy. So the 4 levels in which we have brought in inclusion and in a sustainable fashion is very unique to India, and that is what is capturing the eyes of the world. Countries today like Singapore, Bhutan, France's Lycra, which is a network there, and also many others are now seeing the use for RuPay cards and also for the entire UPI payment. India's stack, particularly the payment stack, has been very well recognized, and people are looking for sharing their thoughts with India, and many of our bilateral engagements with our counterparts today focus on this, and therefore the Global Fintech Fest in India will be better off for having a lot more information shared on these scores. Now, the digitalization of financial services actually has made many unbanked Indian citizens who were remaining in the informal layers of the economy, helped by middlemen and so on, today come over to more formal sources of credit, formal sources of accessing financial services. And therefore, many unemployed youth have benefited from it, and the casual workers have now seen the virtue of getting into the formal financial terrain. And that is why you find suddenly an increase in the extent to which UPI is being used, not just in urban metropolitan areas, but also in tier 2, tier 3 cities. Financial technology, therefore, today plays a very critical role in India's financial inclusion schemes, financial inclusion program of the government. So the whole idea of Sabka Saath, Sabka Vikas is going to be better achieved when we are able to use our technology to help us through. A few data which are stunning figures, which for any other country would have been a story of the impossible, the story of that kind of scaling up, which otherwise is just not achieved elsewhere. India and its population, India and its people who are ready to adapt technology have shown that set of achievements, which I would want to specifically draw your attention to. Other numbers which have been issued to Indian residents is 131.68 crore Aadhaar numbers. I just want you to grapple for a moment, if grapple is the right word, with the numbers that I'm reading before you. 131.68 crore Aadhaar numbers. UPI has been instrumental in promoting digital payment in India, and what has it achieved? It has achieved a value of $940 billion during 2021, which is equivalent to 30% of our GDP. In 5 years since its launch, the CAGR growth is 160% in value and has eclipsed all other payment forms. Now, the scale of these things is what I want you all to appreciate. I'm sure many of you all are already aware of it. As of 2022 July, there are 338 banks live on UPI platforms. 338 banks in India which are live on UPI platform. In July 2022 alone, in that month alone, the UPI registered 6.288 billion transactions valuing 10.62 trillion Indian rupees. The scale of this achievement is something which is worth repeating. NPCI is, of course, taking the UPI internationally, helping countries also to create their own payment systems and networks. It is also making the cross-border payments easier, and by means of UPI or RuPay card, acceptance and UPI integration for remittances. I've already told you that Singapore, Bhutan, and we've signed an MOU also with France, Lycra Network. These are all now expanding the scope of the India stack, particularly in the payment arena. The account aggregator network, again, is going to revolutionize the credit flow towards our medium and small industries, and they need to have sustainable sources of finance. Here, one real-time information which is important for us is this account aggregator system went live in September 2021. As of September 2022, just within 12 months, 52 RBI regulated entities, including banks and NBFCs, are on the account aggregator network. So apart from banking sector, insurance sector, pension sector, the players are also joining the platform. Other players are also joining the platform. Number of accounts enabled on the AA network, account aggregator network, stands at 1.1 billion. Again, the scale at which account aggregator has grown in the last 12 months is a wealth of opportunity lies there for the global fintech people to see what more can be done creatively if people have come on board. 1.1 billion people are already on the account aggregator mode. Of course, the inclusive digital highway, which has been created through the ONDC, Open Network for Digital Commerce, Open Credit Enablement Network, OCEN, are taking the digital platforms in the name of financial inclusion and getting businesses to transact on them, so that there's just going to be a very high potential for formalization of the economy and the possibilities which emerge for fintech in that. The regulators in India, the Indian regulators have not been behind in this revolution that is taking place. I like to underline here that the Indian regulators started emphasizing on green and sustainable practices even from 2007. However, it was only in 2015 that the RBI included lending to social infrastructure and small renewable energy projects within the priority sector lending. And that is very important because once it comes under the priority sector lending, it becomes a lot more open for many sections which otherwise cannot access it. The terms are also very favorable. In September 2020, the Reserve Bank of India also released a revised priority sector lending, a set of guidelines wherein loan limits for renewable energy have been doubled. So that itself is again a beautiful interplay of the financial sector with the sustainable campaigns that we run. RBI also joined the network for greening the financial system, NGFS as it is referred to. Reserve Bank of India on 27th July 2022 released a discussion paper on climate risk and sustainable finance to help regulated entities to deal with issues arising out of alarming the warming of planet. Now, if this is RBI, SEBI also was one of the early adopters of sustainability reporting for listed entities and had mandatory ESG related disclosures. So as per the business responsibility report, for the top 100 listed entities by market capitalization, and that's already in effect. The IFSCA has also taken steps to develop comprehensive regulatory framework for listing of bonds, the green bonds, social bonds, the ESG bonds, sustainability bonds, and also sustainability linked bonds. The regulatory sandbox mechanism which the RBI has provided a structured and institutionalized framework through which the fintech companies are able to test their new products, new innovations before scaling them up. So this has actually helped in testing it in a controlled environment, and post that you're able to scale up rapidly so that markets can get the benefit and you can accelerate your product innovations. Now, there are opportunities for fintech players to play the role in a sustainable financial environment. It's interesting that the breakthrough agenda in COP26 in Glasgow, endorsed by 42 countries, this agenda has been endorsed by 42 countries, including India, that is. It would be a game changer which aims to accelerate the development and deployment of clean technologies and sustainable solutions in areas such as clean power, road transport, steel, and hydrogen. There are specific opportunities in green finance, which is a financial arrangement for specific use of funds for environmentally sustainable development products. So for green financing purposes, New financial instruments such as green bonds, carbon market instruments are all being drafted. As a part of my budget announcement in 22-23 towards sustainable infrastructure, I had announced to issue sovereign green bonds for mobilizing resources for green infrastructure. So, fintech may locate promising growth opportunities in India's demographic transformation, and with some players who can opt for full service offering to boost access for specific underserved demographic. For instance, I'll just give you one example and leave it there. SBI, the State Bank of India, has launched YONO, Y-O-N-O, Krishi, YONO Krishi. And it was launched in 2019, a digital platform which it is to serve farmers that offers specialized loans such as crop loans, insurance and investment opportunities, as well as a universal platform where farmers can see live prices for crops which they have for sale and buy inputs and make sales directly. So the opportunities are galore. I have just given you one example of what the State Bank of India has done. They are, after all, fintech innovations which have gone into banking scheme, and the banks are also ready and looking for more fintech innovative offers which will come by their way. I think today the Fintech Festival is a good way of showcasing India's capability. It's time that all of us partner together with India in its goal towards a sustainable development route towards achieving greater financial mobility, and also achieved through the financial technology integration developed India by 2047. So thank you very much, Gopalakrishnan, for having given me this opportunity to put a few ideas across to all the participants who are before me on the screen. I wish the program all success. Thank you very much.
Thank you very much, Honorable Finance Minister Srimati Nirmala Sitharamanji. If you have, oh, she is not able to hear. Can you hear me now? Okay. Ma'am, if you have a couple of minutes more or 5 minutes more, can I ask one question and maybe invite one or two people from the audience to ask a question? So, from my side, from my side, you talked about the various initiatives we have taken together as government, regulator, industry, especially on the India stack, the digitization of the economy, talked about how the architecture is built as a sustainable, inclusive, and affordable architecture. One key component, I believe, is trust. Can you tell us very briefly, how do we ensure that the trust in the various players, industry, business, regulator, government, and the security aspect of financial transactions can continuously be enhanced? Or if you have any suggestions for industry to look at this, we would like to listen to you.
I don't want to sound cliched, but distance brings distrust. So cut the distance down, have greater engagement with government. This is a government, whether it's a Prime Minister or any one of us in the Minister Group Council of Ministers or Niti Aayog, all of us are constantly available for engagement, discussions, exchange of ideas. So the greater the engagement, the greater the trust which gets built up. So I think one sure short way of retaining and building on trust is to keep the constant engagement going.
Thank you, ma'am. Any questions? Anybody? Yes, please. Can you bring a microphone there? Please identify yourself and be very brief and make it a question, short question.
Thank you, ma'am. I'm Dinesh Arora. I've been a banker for nearly 40 years, so it's kind of a semi-retired life. A small, crisp question is, with so much having been done on India Stack, I think, yes, at these forums we get to know about what has been done by India. But within the country, I mean, could there be the finance ministry or Reserve Bank play a more wider role in reaching out to the local populace, India-wide, region-wise, so that, you know, we ourselves become more aware about what India has been doing, rather than only listening at these forums or maybe being talked about international levels? Thank you.
So, ma'am, the question was about the government, the Reserve Bank of India, reaching out to all the all the people in the country so that they become more aware of the various schemes and initiatives by the government.
I think both the government and the Reserve Bank are doing some, and of course there is scope for always greater engagement, greater building awareness, and that's a continuous exercise.
Yes, the lady there.
Hello, ma'am. My name is Alka and I'm a chartered accountant. I have a question. I'm representing a woman from Akola whom I met during an MSME exhibition, and she told me that when she started out, she never got a loan. After 20 years also, she's never got a loan. So what should I tell her? Because she's in the business of manufacturing and selling Nawari sari. She needs 30 lakh rupees right now. So what should I tell her?
So,
that she should approach a bank.
In these 20 years, in her 20 years of her business experience, she's never got a loan from a bank. She kept on fighting with the banks. Till date, she's never got a loan.
Would you please send me her details and I'll ensure that a bank will entertain her? I find it difficult to believe, but never mind.
Yeah, back there.
I'm Kenzo Fujisue from Japan, a professor of Tokyo University. So I would like to know about how to coordinate and harmonize international regulation system. Now Japan changed a legal system related to fintech. However, so our discussion about the fintech regulation, very domestic. So how do you coordinate international regulation in the terms of fintech, please?
I'm not sure I've got the complete sense of the question, but on the word coordination and on the question coming from a foreign national, my answer would be, it'll be either the Reserve Bank of India or the Ministry of Finance. I'll be quite happy for him, the person who questioned, to contact me in particular if he chooses to, and I'll ensure that there are people put in place who he can engage with for greater clarity. And that system can always continue. It need not always be at the finance minister's level, but for the benefit of ease of doing business, I'm quite willing straight away to handle this and show the right people who can handle it.
One last question. Yeah, here.
Good morning, ma'am. I am Pavan Bindal. My question is, what role does the Reserve Bank and the Finance Ministry see for the proposed digital currency in promoting further fintech inclusion and innovation? the digital
Well,
currency
the
as
role
was
for a digital currency is largely with the Reserve Bank. It's been an announcement in the budget that the Reserve Bank will come up with a central bank driven digital currency. It's entirely their activity, particularly when it comes to the question of a currency, a digital currency. The central bank will work. Of course, if there are consultations which are normal practice, Ministry of Finance will be engaged with them.
Thank you, ma'am.
Thank you very much, ma'am, for not just addressing us, but also taking questions today. When we met you, you readily agreed. So thank you very much for addressing, making the inaugural address today. And hopefully, just as you said, trust means meeting together. I hope that next year you will actually be here in person. Thank you very much.
Sure. Thank you very much.
Thank you very much, sir. And we'd also like to thank Srimati Nirmala Sitharamanji for joining us live from her Delhi office and for also taking up some questions. I do believe that we had some more hands raised, a lot more questions coming in. But on that note, what we're going to do is move forward towards our next session at 12:20 p.m. I repeat, our next session on bridging the digital divide will take place exactly at 12:20 p.m. Meanwhile, while I can see the movement happening over here, I hope you're taking some time off to also visit the expo, or for that matter, the parallel tracks taking place in the Jasmine halls, in the adjacent halls as well. But I request everyone, for those who wish to be part of the Bridging the Digital Divide session, please ensure you're back at 12:20 p.m. Thank you very much. All right, ladies and gentlemen, let me quickly inform everyone that the next session is about to begin. This is around bridging the digital divide. So I'm going to once again request all those who have headed to the pre-function area, very quickly, please come inside the hall and take your seats. It's wonderful to see the massive participation here at the Global Fintech Fest. So while you participate and while you gather insights from all of our speakers, I hope you're also sharing your thoughts using the hashtag GFF. It's right up here. So please go ahead, tweet about it, or share your thoughts using the hashtag GFF. Well, I'm guessing everyone's headed for tea, coffee. That's the only way you can bridge the gap between one session and the other. Well, that's how it seems fair. But that being said, I'm going to request everyone in the pre-function area, very quickly, please come inside the hall. It's time to get our next session started. Our speakers are all set. All right, once again, I'd like to request to everyone entering inside the hall, please take your seats. We're about to get started with our next session as well. And we're trying to find the key to driving inclusion in India by bridging the digital divide. So that's going to be the theme for our next session. And once again, everyone, all our members of the audience, all the delegates, I request you all to very quickly take your seats. I'd also like to remind you all to participate in the conversation using hashtag GFF right up here. So all the insights that you gather from our speakers, from our thought leaders, I'm going to urge you all to please also contribute your insights using the hashtag GFF. And with that, I'd also like to inform you that our next special address is about to begin. So once again, let's have everyone please take your seats. All right, so on that note, time to get the next session started. And first up, we do realize that when we're talking about bridging the digital divide, what really requires are solutions, whether it's for accessibility, affordability, or for that matter, the digital skills that touch social economics, or for that matter, infrastructure and technology. So let's find out the key to driving the inclusion in India. And to spearhead this conversation, we have with us Mr. Shivnath Tukral, Director, Public Policy, WhatsApp India, and he will be in conversation with Dr. V. Anantha Nageshwaran, Chief Economic Advisor, Ministry of Finance, Government of India, who will be joining us live virtually. So can we have a huge round of applause? It's going to be another very interesting hybrid session. If you all enjoyed your tea, coffee, bring the energy back in the air. Can we have a round of applause, everyone? That's right. Louder, louder, everybody. Let's bridge the gap between this stage and right up there with a round of applause. Thank you so much. On that note, I'm going to quickly hand it over to Mr. Shivnath Tukral to spearhead the session. Over to you, sir.
Hi, everyone. As we wait for people to trickle in, my name is Shivnath. I work with WhatsApp. And we're waiting for people to settle down so that we can have the Chief Economic Advisor of India log on. I request you all to have a seat because it's only fair that someone who's giving his time, Dr. V. Anantha Nageshwaran. Before I introduce to him, just a quick word of compliments to Naveen and Gaurav. I don't see them, and the PCI team for organizing this fabulous conference. I believe it's the first physical event, and the scale and size of it is quite mind-boggling. So thanks, PCI, for doing this. Should we bring on Dr. Nageshwaran? Can we have him log on? Oh, there he is. Hi, Dr. Nageshwaran. This is Shivnath. Can you hear me?
Hi, I can hear you well. Hope you can hear me too.
Awesome. Thanks so much. I'll do a quick introduction, and I believe you will have a small slide deck post which we will have a quick conversation. Dr. V. Anantha Nageshwaran is India's Chief Economic Advisor, so part of the Ministry of Finance. And we were fortunate to just hear the Honorable Finance Minister as well, Dr. Nageshwaran. Ms. Sitharaman just spoke to us and kind of outlined the vision for where she sees the fintech revolution unfolding in the future and the phenomenal numbers and the progress India has made in just getting to the whole India stack out in ensuring how people feel included from a financial perspective. But clearly she also outlined that there is much more to do. But before we get into that, just a quick introduction about Dr. Nageshwaran. He's a very well-known economist. I've had the good fortune of working with him briefly when I was in a think tank. And Dr. Nageshwaran, as they say, is a growth bull. He has written extensively on India's economic growth prospects. We introduced one of his papers, very famous papers, called Can India Grow, back in 2016. And I think, Dr. Nageshwaran, fast forward, we seem to be in a pretty good spot. So some of your predictions did come true. Dr. Nageshwaran is a well-known academic economist and also someone who talked about how India would fare purely from a financial market perspective back when I was a journalist. And Dr. Nageshwaran, today's topic being Bridging the Digital Divide, Key to Driving Inclusion in India. Just a quick note for the backdrop for your presentation. We are already hearing the word, this is going to be India's decade. The Prime Minister has talked about it earlier this year when we were in Gandhinagar, when he spoke at the Digital India Summit. The numbers that are being shared now is that more than 1 billion people will be on the internet in the next 2 to 3 years in India, which is like largest than anywhere else in the world, in a single country, and what that means for India's amazing fintech revolution. In this backdrop, why do we still have 400 to 500 million people who are still untouched in some form and shape, and what can we do better? With that, I will hand over to you, Dr. Nageshwaran. I think we're going to run your slide from here. So over to you. After your slide deck, we will get into the conversation. So over to you, Dr. Nageshwaran.
Thank you, Shivnath, and, and good afternoon to all the distinguished members of the audience. I'm waiting for the slide decks to be uploaded. Thank you. So let's, my topic given to me, and it's, as you correctly pointed out, Shivnath, the fintech revolution. In fact, I would even say the entire digital transformation of India that is unfolding right before our eyes is very exciting. It's humbling for me to follow in the footsteps of the Honorable Finance Minister to speak about this topic. She would have painted on a wonderful canvas, outlining the vision and the plans that the government has. I hope to do some justice to the topic given to me on bridging the digital divide, key to driving inclusion in India. So India's digital infrastructure, which enables finance to reach out to the nook and corners of the country, whether it is individuals or businesses, that is the key to bridging the financial divide, the income divide, and the wealth divide. And the availability of affordable technology makes it possible to bridge these divides through the means of digital technologies. Next slide. So what I'm going to, first of all, just to set the context, given that the world is experiencing the after effects of the pandemic and then the ongoing conflict in Europe, and India's own growth rates have come off the projections made in January down to about 7+% for the current financial year. Nonetheless, the economic momentum and the animal spirits are unmistakable. And many external visitors and observers are also noticing that when they pass through these shores. And just recently, India has surpassed the United Kingdom to become the world's 5th largest economy in absolute terms. While that is a creditable achievement, that is not exactly a surprise. And I think this decade, while whether we call it a decade or something more than that, India looks at the moment well poised to repeat a sustained growth rate of around 7% for the remainder of the decade as we go into 2023 and beyond. Next slide. So India's fintech model has been built on 3 pillars: enabler, awareness, and then there are business models built on top of that. So the public-private partnership has evolved in such a manner that the public sector provides the infrastructure, and then there is awareness build-up happening. And on top of that, the private sector comes and innovates and creates a model. So you have Aadhaar, you have adults with bank accounts through Jan Dhan Yojana, and then you have tele-density, and of course the entire GST network is also enabling the formalization and digitization. It is both an enabler and a consequence of the digitization. And then eKYC and CKYC, which are still unfolding, will also have paved the way for account aggregator, about which I will talk a bit later. You have awareness building being done by the Ministry of Electronic Information Technology, the Reserve Bank of India, and the public sector financial institutions, and as well as non-profit organizations like iSpirit, Sahamati, etc. The Digital India mission is part of that. On top of that, the private sector is creating payment options, digital wallets, contactless payments, and then there are apps being created for digital unification, etc. So this is the layer on which India's fintech revolution is being built. Next slide. And so how has been the fintech growth in the country? India is among the fastest growing fintech markets with the market size of $31 billion, and it should reach about $1 trillion by 2030. That's about 32 times growth in the next 7.5 to 8 years. It is the third largest fintech ecosystem, and as you can see here, the compounded annual growth rate is expected to be around 30%. And it has a highest fintech adoption rate of about 87% globally, significantly higher than the average rate of 64%. And then the major shift towards a more equitable distribution of investments across sectors, including insurance tech and wealth tech, etc., are beginning to happen. Payments, lending, and insurtech are the preferred sectors from the point of view of investors and startups, but I think we are going beyond the metrics that please investors and wealth creation. We're talking about bridging the digital divide and the economic divide, and therefore the focus is not so much on unicorns and startups and the top line growth rates, but how the combination of technology and finance is combining to enable access to finance and access to opportunities. Next slide, please. So, at the back or at the base of the fintech revolution is a very strong government support. That is what distinguishes India from the United States model, where much of the developments, innovations on the finance side or on the tech side or both are in the hands of the private sector, and they determine the access, and that also has implications for affordability and choices. Whereas in India, it is a combination of government and the private sector. The regulator enables, the regulator regulates, and the private sector innovates. So you have Ministry of Finance, Ministry of Commerce, Niti Aayog, RBI, National Payments Corporation, Ministry of Electronics, Information Technology, the telecom regulator, Unique Identity of India Authority. Can I have the slide back, please? Okay, iSpirit and the Competition Commission of India. iSpirit, of course, is a private sector, not-for-profit body. So you can see here that it is a combination of government, regulators, not-for-profit, the corporate sector, all of them combining to create the ecosystem for enabling financial inclusion and fintech innovations to happen. Next slide, please. So the phase one of financial inclusion was all about ease of opening new accounts. It all started with the unique identity, Aadhaar, which then led to eKYC and the Jan Dhan Yojana accounts being opened, which are now majority owned by women, where the average balances are rising every month as we see the statistics being reported. And more importantly, Aadhaar and Jan Dhan Yojana combined to create the unified payment system and direct benefit transfer. DBT, for example, played a big role in the pandemic era in terms of reaching the benefits, cash directly sent to people's accounts when mobility was affected, and even visiting ATMs to withdraw cash was that much more difficult. The next phase that happened even as the pandemic was still raging is about increasing access to financial services, credit, insurance, investment, driven by the digital platforms and also propelled by the fintech and banking innovation. These are the two phases. We are moving away from creating the infrastructure to building the superstructure now. Next slide, please. So, and now just as the earlier pillars are talking about the infrastructure, enablers, and then the payment apps, similarly here as well, we have the ID and the registries, Aadhaar, PAN, and GSTN. And then we have the transaction-specific platforms, and then on top of that, data and credential specifications. So if you look at the various transactions here, you're talking about G2P payment model, $311 billion, and this is also the direct benefit transfer. There are 300 million micro ATM transactions per month, 6.5 billion UPI transactions per month, higher than all credit cards put together. And just in the month of August alone, UPI transactions are worth $134 billion. Now, I want to mention two things here. While these numbers are impressive, it is also a fact that Brazil is another country which also has done quite a bit in terms of using technology for enabling financial inclusion. And but the good news about the Indian model is that it is not about financial inclusion alone, but about entire digital empowerment as we look later into digi lockers and Ayushman Bharat, etc. And also during the COVID era, we basically managed to use technology to ensure vaccination and follow through as well. So India's digital footprint is touching areas other than finance. And that is why India's entire public digital infrastructure is now winning acceptance, not just in developing countries, but also in developed countries like France, Norway, Australia, Japan, and then among developing countries, Philippines, Sri Lanka, Rwanda, etc. Next slide, please. The unified payments interface, all of us know very well, and there are enough stories about even how 20 rupees and 10 rupee payments are being made through, QR codes, etc. It is an open payment protocol, 6.5 billion monthly transactions, universally interoperable. It is now enabling cross-border remittances. Singapore's Deputy Prime Minister is in town in India, and we are going to enable interoperability between UPI payment systems and Singapore's e-Nets platform so that our workers living in Singapore can remit money back to India instantaneously. This has been facilitated with the UAE as well, because remittances from Indian workers overseas is such an important component for their families back home. And the cost of cross-border remittances has come down from double digits to 6% levels. But making it almost free is the goal that G20 countries have accepted for themselves. And therefore, interoperability is a critical interface for cross-border remittance to happen seamlessly and costlessly, and UPI is enabling that. So this is now being elevated to the next level with e-rupee for digital vouchers and UPI auto pay for instant regular repayments and subscriptions. In other words, India's UPI model this fast retail payment system is actually already mimicking some of the features of central bank digital currencies. So we are sort of leapfrogging the technology even as other countries are grappling with the design of CBDCs. India's fast retail payment systems are providing many of the functionalities that CBDCs are expected to deliver. Next slide, please. I don't need to spend too much time on this in terms of the payment statistics. I mentioned this to you earlier, and the number of financial institutions going live has also gone up by more than 12 times in the last 5 to 6 years. And the more important thing is, Indian digital payment model is creating person-to-person transaction much more than what international credit cards are able to do. And that is why India's payment infrastructure is a citizen-centric, citizen-friendly, and affordable payment model. And that is the unique feature of India, and that is what attracts the attention of both developing countries and developed countries. Next slide, please. As I mentioned earlier, India's fintech revolution doesn't stop necessarily with finance and access to finance. It involves, for example, highway transport and seamless movement of goods and passengers through FASTag. Open network digital commerce is also an inclusive technology. It is going to enable even our micro enterprises to be able to list their goods and to be able to sell in international markets. GSTN and traces enable formalization because they create footprints of transactions, financial transactions. Diksha is about DG lockers and creating credentials and accreditations and certificates to be open anywhere. So it's also a safe harbor for digital credentials. Ayushman Bharat Digital Mission is about creating access to insurance products. CoWIN app, all of us know about it. It's about vaccination and health record eventually. And finally, account aggregator, which is a more recent phenomenon. And that will also become even better when common KYC becomes a reality, because account aggregator enables us to direct financial institutions to provide information to other financial institutions as we all seek to use the entire range of financial services, seamless transfer of information across financial institutions with our consent. protecting our privacy is going to open doors for finance that are unprecedented. So account aggregator is as important and as disruptive in a positive way as the Jan Dhan Yojana was 5 years ago. Next slide, please. The digital public platforms, because India's model is public infrastructure, private apps. There are 8 of them. One is, there is the National Strategy for Financial Inclusion, of which the first pillar was Jan Dhan Yojana, and then the India chain, and then came the Unified Payment System, and then open application interfaces for e-governance. Now the account aggregator, which is now becoming a national reality. The cash flow based lending, open credit enablement framework, because most of our lending until now was collateral based. And micro and small businesses, women entrepreneurs don't have collateral to offer. So cash flow based lending will be enabled by OCEN, artificial intelligence, and data protection law has to be there underpinning all of this. These are the various pillars of our fintech enabling system. Next slide, please. So data and credentialing infrastructure. If you look at fintech, it is not just about enabling access to finance, but also creating the documentary credentials that will unlock the doors to finance. So you're talking about 5.6 billion digitally verifiable certificates and credentials, 123 million DigiLock users, a long way to go, and 500 plus participants in terms of academic institutions and others. And in terms of account aggregator, 1 billion accounts have already been enabled, and they can now seamlessly transfer information between financial institutions. So in all these cases, we always have the pillar of identity, and then there is payments, and then there is privacy and security. So you have all these pillars operating interchangeably, but underneath all of that was the foundation laid by identity. So identity, connectivity, and security, and that keeps changing depending on the context in which we are speaking. Next slide, please. How does the fintech revolution enable the closing of the digital divide? So what are the various drivers of digital divide? A, financial literacy. B, creating a cashless economy. Identification, collaterals not being there, access to formal credit. In all of this, if you move on to the right side of the slide here, what is the fintech intervention that is being either enabled or already enabled? One is voice bots and chatbot integration, UBAM. It also enables access in multiple Indian languages. You have the UPI, Aadhaar-enabled payment system, identification, again, Aadhaar-enabled eKYC, and then collateral for loans. We're talking about credit guarantee funds for MSMEs, and also cash flow-based lending, and without any collateral. And that is what is both a plus and a minus, because non-collateral based lending can be done through digital apps. It has also created abuse of the system. So there is a need to make sure that cash flow based lending apps do not exploit borrowers, especially if they are financially illiterate. That is why making these things available in local languages is critical to bridging the financial divide and the digital divide. Telecom networks are spreading, and then we have basically UPI-enabled payments for trading and neo-banking. Low insurance penetration is being addressed through doorstop services by Indian Post Payment Bank. So we are having applications and interventions for each and every aspect that has in the past caused the digital divide and financial divide as well. Next slide, please. So ultimately, all of these things may be exciting for us in cities in terms of the technological features, but we should never forget the end user in mind. Therefore, all that we are doing is to enable a financial system and the digital system developed for the benefit of the Rajanis of India. We have to give them access to loan, and starting from Aadhaar, a credit marketplace app needs a loan. She agrees to share data. She's able to see many types of loan offers, accepts the best offer, receives loan, sells goods and repays the loan, and expands her business, raises the family standard of living, etc. So ultimately, the center of attention in everything has to be the Rajanis and the low-income micro entrepreneur with ambitions and aspirations for herself and for her family. Next slide, please. Next slide, please. The account aggregator is important component. As I mentioned, various institutions have signed up, and the more we see this grow, the more we will see in the years ahead financial inclusion and access to finance leapfrogging, just as we are now seeing in the tax system network. The digital footprints have played a big part in driving India's tax revenue growth in 21-22 and 22-23. So in a way, whatever we have been doing in the last 8 years are finally coalescing together to create this synergistic sort of inflection point, both with respect to fiscal revenues as well as with respect to improving financial access. So in that sense, we are on the cusp of the inflection point. Having done all the hard work, now the payoff season is beginning, and account aggregator is one such payoff for the digital infrastructure we have created. Next slide, please. So the next wave in fintech, therefore, will be cash flow based lending to MSMEs using account aggregator, UPI and OCEN. Lending potential of about 3 trillion rupees next year itself will be based on GST invoices and bank statements made available on account aggregator and banks adopting OCEN. So essentially, it is about the fact that ultimately, what has been the biggest hurdle to growth of India's small and medium and micro enterprises has been access to finance. It is not just about access to loans, it is also about access to working capital. So part of the solution comes from enabling financial innovation, which enable non-collateral based lending, but also through enabling large enterprises to pay their bills on time. So what is not mentioned here is the emphasis on receivables and bill discounting, so that large businesses allow financial institutions to pay their invoices, and they in turn pay the banks and the financial institutions on their due date. That is being enabled by GST. When buyers accept invoices on GST, it should enable acceptance of invoices for bill discounting purposes, and therefore suppliers get paid on time. So the next wave in fintech will be cash flow based lending based on GST invoices using the fintech innovations like account aggregator and OCEN. Next slide, please. Since in the interest of time, I will probably not go into the slide because it is not so much about fintech digital divide. It's about the digital health mission through provision of health insurance and the health claims exchange, so that primary, secondary, and tertiary care, all of this, as well as hospitalization needs can be addressed seamlessly, because we know very well that health crises can make or mar a family's financial standing. And with that, I will move on to the next slide. Government is now pivoting from digital financial inclusion to digital financial empowerment. So Jan Dhan 2.0 will be regular savings and access to insurance, strong gender focus, Prime Minister Swanidhi scheme to facilitate working capital loans, and eKYC and digital onboarding. And lastly, protection of digital customers, because regulatory environment that places the consumer, their rights and their individual agencies at the core. So these are the elements of empowerment from inclusion, because as I said, we are moving to phase 2 right now. Next slide, please. The tax administration part of it also has to be a key feature of financial inclusion, because tax footprint as well as transaction footprints are going to enable financial institutions to reward an individual or business with financial products. So in that sense, the digital tax administration is not just about compliance and revenue mobilization, but also about creating the digital footprints which enables financial access. Next slide, please. Public technologies as a foundation for Fintech case study of GST and income tax. So basically both faceless assessment, citizen-friendly tax administration, and as well as creating the building blocks for providing automatic acceptance of invoices are all enabled by GST's digital approach. In fact, with the e-invoicing, and therefore automatic linkage of GST into the account aggregator system is going to enable very small businesses to incentivize them to become part of GST network, and also for large businesses to accept supplies from businesses from whom they wouldn't have accepted supplies earlier because they did not have a formal presence. So that is why GST is much more than about improving compliance on indirect taxes. It's also about facilitating financial access. I know I'm being repetitive, but these are very revolutionary concepts in linking both the private sector and the public sector in improving financial access. Last slide. Okay, so more important thing is, having created all of this, is India ready to take advantage of its intellectual digital ecosystem that it has developed? Which is not the case yet. That is the next step. India has to move forward in creating the IP rights, because it is about soft power. India is distinguishing itself from China in terms of OBOR because we are not providing loans to other countries in return for assets. We are willing to transfer most of our know-how and technology. Most of them are open source, but basically India is still paying a lot for IP, but now India has developed the right kind of IP which it can now evangelize to other nations, partly on a pro bono basis and partly in terms of commercializing them, and that is also part of the next journey as far as India is concerned. Thank you. Next slide. I think we are done.
All right. Thank you, Dr. Nageshwaran, for that very, very insightful detail of how you are seeing the whole financial technology layer that is powering what you are saying, from financial inclusion to financial empowerment. Time permitting, I have a couple of questions for you, if you may permit me. One, you talked a lot about the digital highways. And again, just to kind of pose a question from the people who are still left out, there is a sizable chunk of 300 to 400 million people who are not either included or empowered. So the question I have is, how do we make sure that the digital highways actually route themselves through not just near the metro, tier 1, tier 2, tier 3 cities, but actually touch upon the lives of rural India, the 300 to 400 million who are not yet digitally either included or empowered? That's my first question to you, Dr. Nageshwaran.
I mean, absolutely. The entire purpose of e-Shram portal, which creates a method of registration for individual informal workers, and then the Udyam portal, which enables micro and small businesses to register themselves on the Udyam portal, and simultaneously they are automatically registered in the GST portal. They get a PAN number. So all of this is about bringing in people who are hitherto excluded, the individual informal, and then once they are registered, then many other services open up through their Aadhaar and the registration IDs, etc. So what is happening is there is also a marriage of these different portals that is happening. Even these government portals are becoming interoperable and interconnected. So, as I said, the entire fintech revolution is not about startups and unicorns, but about ensuring that all these developments come together to be able to provide access to finance and opportunities for individual businesses, micro, small, as well as for low-income population. And that is the entire focus. And it is happening through cash flow-based lending, through e-Shram portal registrations, through Udyam portals, etc. And that is why over time you will see even the bank credit data that you are seeing today. Much of the loans are going towards micro and small enterprises in terms of bank credit rather than to large enterprises. All these are all consequences and the outcomes of what has been done in the last 5 to 6 years. And this will only grow even further.
Right. One question on the role of private company that you talked about. You said that all that the government is doing is building the rails and the private companies will take it to the last access point. Do you see that the profit motive of private companies is consistent with the provision of the public digital infrastructure that the government is making? Because eventually if the final consumer, if they do not have the economic power, how do you think the same private company participation will lead to self-sustaining model based on this public digital infrastructure?
Oh, sure. I mean, the profit motive is critical for innovation. At the same time, profit motive cannot be a source of abuse. And that is why, most of our apps are developed by the public infrastructure is created by the government almost free of cost. And then, therefore, that also reduces the upfront investments to be made by the private sector in developing their own applications on top of that. And given the volumes that India is able to provide, many of the private sector providers, and these are all financial institutions like government-owned banks, insurance companies, etc., and the unified payment system has been enabled, therefore, to have no transactions cost, etc. So that is why we are able to replace the international credit card companies. So the model has to evolve with emphasis on volume rather than price. And India provides a huge opportunity for volume-led growth rather than price-led growth. And that is something that will have to be the case for several years to come.
One last question, and I don't want to stand in the middle of, I believe, the next session and the audience and you. Dr. Nageshwaran, you made an interesting comparison between Brazil and India. Fortunately, if I may, both the countries big for WhatsApp as well, but just the role of the way technology is making sure that we are able to provide access. The first thing is access, right? I mean, eventually, then will come the change in behavior, right? India continues to be, despite all this phenomenal progress, underinsured and underpensioned kind of a ecosystem. In terms of government's goals, when you talk about empowerment, how much stress is being given to change the behavior, to accept the fact that you need these, investment options to change your life? That's social behavior, that's one. And secondly, how do we make sure that everybody's on the same page? The government's goal is pretty clear. But given that the country's labor force is largely in the unorganized sector, how do we connect those dots between the role of tech, role of government, and those whose behaviors need to, have to change if they have to accept this?
I think what we are seeing is now what C.K. Prahalad used to talk about, that there is opportunity, business opportunity in the bottom of the pyramid. Therefore, there is no need to convince them, because now businesses are seeing that there is an opportunity here, and they used to be reluctant to accept the premise of a business opportunity at the bottom of the pyramid. But now technology is enabling them to do so at a cost that they can afford to bear before they start to see revenues and returns for themselves. And in the meantime, what behavioral change that needs to happen is actually in convincing our large businesses in the private and the public sector to be able to use the technologies and actually enable payments on time to happen to small businesses. That is the big behavioral change that I would like to see happen. Everything else, actually, technology is making it possible for both businesses and consumers to see the developments as a win-win solution. Right now, the only behavioral requirement is to convince the private sector, large businesses and public sector, the government ministries, state governments, etc., to embrace technology, to enable them to pay their bills through the bill discounting platforms, so that our small and micro businesses get their working capital on time. That is the most important behavioral intervention that's required. Everything else is being enabled by technology automatically.
Fabulous. Just out of greed, Dr. Nageshwaran, I know the entire country is quite focused on India's presidency of the G20 this year. I believe a lot of this phenomenal work that India has achieved will be talked about. From a fintech, from this kind of a room, what is it that we can expect the G20 to adopt and take forward, which are examples, which are India first?
No, it will be too premature to anticipate the conclusion, but as I mentioned in my slides, there is a lot of interest among several G20 and non-G20 countries on what India has done with this public-private partnership of public digital infrastructure, and we hope to be able to carry this forward.
Fabulous. Dr. Nageshwaran, on that note, I believe we are completely out of time, but thanks so much for joining us. I know you're very busy in Delhi, but hopefully next year the organizers will be able to convince you to get you down to Bombay. But thank you for your time and thanks for the insights. Thank you, ladies and gentlemen. Dr. V. Anantha Nageshwaran, Chief Economic Advisor of India.
Thank you. Thank you very much indeed. A power-packed session out there, ladies and gentlemen. And with that, we're going to go back to back with our next set of sessions. Well, up next, we have another very interesting panel discussion lined up around sustainability, the energy transition path ahead. And on that note, while the panel discussion is about to begin, I'm going to quickly invite our speakers to please come on the stage. First up, I'd like to invite our session moderator, Dibirat Sen, Managing Director and Head of Global Banking, North India and India Lead for Sustainable Finance, HSBC India, to please come on the stage, sir. Warm welcome indeed. Let me also move ahead and invite our panelists as well, our very esteemed panelists. We have with us Pulkit Khurana, co-founder and CEO, Battery Smart. Anirban Bhattacharya, founder and chairman of board, Amplo Global Inc. Mr. Shailesh Vikram Singh, founder, Climate Angels. And Kushagra Nandan, co-founder and managing director, SunSource Energy. Let's have all our moderator and our panelists together. The energy transition path ahead, ladies and gentlemen, that's the focus of our panel discussion. So I'm going to quickly hand over the proceedings to our session moderator, Mr. Dibirat Sen. Over to you, sir.
Hello. Good afternoon, ladies and gentlemen. On behalf of HSBC, a very warm welcome to all of you to be present here for this session. This session, which is being hosted by HSBC on the title theme, reaffirms HSBC's strong global commitment to sustainability and our belief that finance or sustainable finance could be a great lever for inducing positive change. This change or transition in ways of doing business by incorporating E, S, and G, or in other words, balancing planet, people, and profitability, is a topic on which enough has been said and discussed. However, what we intend to do here today in this panel is get an insider's view from our guests here. These guests or our panel, these are tremendously capable people who have committed their careers to their ideas which they believe can have a very profound impact and change in this world. So just a very quick round of introduction. I think essentially our panel consists of startup founders who are at various stages of their own journey, but they are all working towards a common goal, and that common goal is essentially to prepare us, this world, to tackle the transition path ahead. It is essentially the path to net zero from ambition to execution. Of course, their path ahead has a lot of opportunities, but there are challenges as well. So let's dive into this panel discussion to hear more from our panelists. So I'll start with you, Andy. Request a very quick introduction, but getting to the question. ESG is more than good intentions. It's about creating a tangible and practical plan that achieves real results. But it's a new area, and skilled human resources are not abundantly available, rather they are at a scarcity. So therefore, corporations across the world are grappling to cope with the ever-increasing regulatory requirements on them, as well as shareholder activism and pressure to get their act together. And of course, the time is ticking pretty fast. So in this context, how is Amplo Global solving this problem for corporates with their platform AmploFly 4.0?
Thank you, Devi. Our organization, Amplo Global Inc., we are a 6 IP-led business simulation platform. We are based out of platform company. We are based out of New Jersey and California, and also Mumbai and Calcutta. So, Debbie, what we are seeing is, if you really see the sustainability value chain, it has an upstream where you would be knowing your journey, where you are, where you want to be. Then you have a midstream where data gets collected, and the downstream where reporting is a mandate right now. So what we have seen in the last 4 or 5 years of our existence, most of the leadership have heavily focused on data collection and reporting. Our mantra to the ecosystem is, do not look reports as your starting point. Measure your risk, measure your readiness, do some business simulations, and really focus on template-based platformation. Let's say, an example, GRI 11, one of our oil and gas customers based out of Houston, we discussed a business problem on scope 3. And scope 3 is one of the very painful area to really get into the whole value chain. So they decided to collect data, and they then quickly turned around and said, no, we need to call a few suppliers and distributors on the table to really figure out what life cycle analysis means to them. And AmploFly 4.0, it's a business simulation platform. That platform was fed we collected data into the platform from that oil and gas company. We also buy data from outside, and some simulations told them that even to enable an LCA for one of their suppliers, they need to really go through for a tremendous exercise of understanding the greenwashing, which means that they have so much data and there is no clarity on what data they would be focusing on, what attributes they're focusing on. So the way we are helping customer is really measuring the risk, what you're getting into, what the investments you're going after before you start reporting. Thank you.
So if I were to sum it up, it's the convergence of technology, artificial intelligence, and ESG in terms of making life much simpler for corporates to deal with the complex issues that arise on account of ESG.
Templatized with the best practices like GRI, TCFD, and others. Yeah.
Fantastic. Now, getting into the sunnier side of life, so the solar industry. So my question to you, Kushagra, we are all aware that India had planned for 175 gigawatts of renewable capacity by 2022. Now, of course, it's a different matter that it's not going as per schedule for a variety of reasons that we are aware of. Out of this 175, 100 gigawatt was supposed to come from solar. And out of this 100 gigawatt, 40% was supposed to come from what we call as rooftop solar, RTS, off-grid solar, OGS, broadly defined as distributed renewable energy, DRE. There is also one report by a think tank that talks about investment requirements of $18 billion by 2024, whereas in 2019, it was 1/10 of what is required. So there's a huge amount of scale-up required in terms of investments also. Please talk us through the current and the emerging landscape in the DRI space in India.
Sure, thank you. First of all, SunSource is country's leading commercial and industrial focused solar project developer. So we own assets and sell power on a long-term basis. You hit a very good point where it is very clear the power requirements of the country is increasing, and the commercial industrial segment accounts for about 50% of the country's power requirements. And the estimate is by 2030, that number is going to grow from 50% to 57% of the country's power requirement. So that shows the growth ahead. And at the same time, what is also happening is with net zero companies signing up for, we see the greening of supply chain is happening. So that is putting pressure on commercial industrial clients to go for renewables. And solar definitely comes as a choice. And when we say distributed solar, which includes rooftop as well as open access, where you develop a project somewhere else within a state, and then you bring power through utilizing the grid's existing infrastructure. Although now there is a provision where you can, through interstate, you can transmit the power. So the challenge has been on certain aspects on the policy aspects, because at the end of the day, electricity is a concurrent subject, both central as well as state. But those issues are getting sorted out as we see. And the good news is there is a green open access rules which have just come out, which will be a major booster for the industry. Second is the new Electricity Act is already there in the Parliament. What we estimate is a lot of the challenges which were there in front of the industry, government is very serious in ensuring that these issues get resolved. Because as you also correctly pointed out, there's a lot of value which is waiting to get unlocked in terms of this sector, in terms of overall greening of the supply chain. So, so I can say that we are at a very sunny side of the industry.
Sunny side indeed. Indeed, what we are also finding is that a lot of utility scale solar companies are now eyeing your segment, which is the CNI. So obviously competition is going to heat up quite a bit in that space, but I'm sure companies such as you, who have had an early start, will always continue to maintain a lead. Coming to you, Pulkit, battery swapping, or essentially energy as a service business, it could be actually viewed as a holy grail in solving the trinity of challenges that become entry barriers to EV adoption. And these challenges are high upfront cost of acquisition of EVs, range anxiety, and long charging time. Now, of course, there are multiple startups operating in this space right now. And the good thing is that one is expecting a nationwide battery swapping policy, as well as some incentives and subsidies to come over the next 2 to 3 months, hopefully. So with all these tailwinds assisting the sector, how do you visualize the future for Battery Smart and its role in assisting the last mile e-mobility in India?
Sure. So just to give some introduction on where we are, Battery Smart is currently India's largest battery swapping network. We've been able to scale this in a rapidly, in a very short frame of time. It's been 27 months of operations, currently present in 12 cities, 250 locations, serving 20,000 battery swaps every day. All right. Now, this is obviously on the back of the problems that you mentioned. EV adoption is really constrained by the fact that almost 50% of the capex is batteries. That's a recurring capex and really deters people to move to EV. And the second problem is the charging downtime, especially with the commercial vehicles who cannot really afford a 4-hour downtime every day just to charge the vehicle. That means loss of income for them. Both these deterrents get solved through a battery as a service or a quick 2-minute swap solution. Our focus has been 3-wheelers and 2-wheelers currently, especially on the commercial side. A lot of government incentives are upcoming, but the business has been built despite them. This is because EV is a very large opportunity and probably the largest opportunity of this decade, whether you consider ESG or otherwise. It is estimated it's a $602 billion transition that India is going to go through. $50 billion worth of opportunity probably exists just for battery as a service and swapping. Now, if that kind of opportunity has to be captured, I think when you say there are tens of startups, that's too little. It's a very large opportunity and we really need everyone coming together to kind of make that EV transition happen. It's very critical for us as a country. And I'm very hopeful that on the back of all the regulatory tailwinds that exist there, as well as a lot of private sector as well as public sector participation that is happening, this would happen fast.
Great. Interesting anecdote to share with the audience. If you look at the history of battery swapping, I think it goes back to 2007. And it started with a company in Israel by the name of Better Place. started by a gentleman called Shai Agassi. In 6 years' time, they had to shut shop because the costs were simply not commercial. Guess who was the next company to have tried a hand at this? It was Tesla. They tried to do this for the Model S. That didn't work out, and that they thought that it's not a viable model. And it was until NIO and Gogoro actually made a success out of it in China, it was believed that this cannot happen. And of course, Pulkit and the other startups operating in this space in India, I'm sure will make a success story out of it. Coming to a very important person now, Shailesh. Shailesh is the money bag here. So, Shailesh, the climate change and adaptation space, it is unfolding at a very frantic pace. We see very high frequency technological breakthroughs or obsolescence. We also see multiple competing technologies all try to solve for the same problem, sodium versus lithium ion battery, for example. So this is an amazing crucible of innovation and commercial potential, but it's also fraught with high risk. And hence, it's a thriving ground for startups. So while conventional funding has shied away from it because they really do not understand the risk-reward curve or the equation, how do you see this space, and what is it that makes this space interesting for you to invest?
Thank you, Bharat, for having me in the panel. So I'm Shailesh. I run a fund called Climate Angels Fund. We invest in the startups which are solving climate change, for the matter. Now, coming to your point, why we are looking at this while traditional banks or traditional investors are not looking at it, for a simple reason, I think climate is hot from both sides, from the real weather-wise as well as from the perspective-wise. Today, whether it's a consumer, today whether it's a government, both have moved the climate. Every consumer is looking for a climate solutions. Every government policy is pushing for it. But unfortunately, majority of the VC money is still going to pizza delivery companies. That is not going to solve, right? So you are looking for something which is going to change the game. Sorry to say, I think majority of the consumer internet, which is, as we see today, is probably dead, if you are not aware of it, or probably going to die. There's not much there. The biggest innovation I see, because the IP we are seeing is in climate tech, which has been traditional VC investment. Look at companies like Cisco, Apple, Google, they were all IP-driven companies. Then there came the era of networks. And I think the climate is, again, the era of IP. All the companies which are doing, they are building a huge, what we call IP-based investing. Building is something thesis where there is huge traction. Look at what Battery Smart is doing. I think in less than 2 years' time, they are doing almost 20,000 SaaS per day. It has not been done by crazy discounts. I don't think they give any discount at all. They rather make money, right? So there's no discount coupons. There's nothing at all. So what we are seeing, why we are investing in this, because it is at the what you call the fringe of the innovation which is happening. We are not at the lab level, which is what DARPAs of the world do, but we are doing where the POC has been done. Some kind of proof is out. The team has capability to do it, and the market can be very large. And I think we are not the only one. Few funds have done, and I will again quote Battery Smart here. Way back in 2010, Tiger Global wrote a check of $25 million to Flipkart. And I think everybody that time said, are they mad? Because Amazon of India will be Amazon. You cannot have Flipkart and all, right? A lot of VCs were negative. Everybody wrote a lot of op-eds, column, everything else, because nobody thought the market will be more than $100 million, right? 8 years fast forward, that company got sold for $17 billion. I think same thing Tiger Global has now done in clean tech. They have written a $25 million check in a battery swapping company, right? So it is a proof that the investors are moving in a bit slowly, but yes, that is happening.
A very connected question, Shailesh. What qualities or filters do you generally apply when you choose which startup in this space you want to back?
So I think it's a very cliche answer that everybody talk of team and team. But in climate tech, we are also much more concerned about one thing, and that we are concerned about scale. Unfortunately, a lot of climate tech founders, they also feel that they are impact founders, right? To use the word, they think they are revolutionizing the world. So they say, oh, I'm giving the impact, don't ask me money, right? What you call Jhola entrepreneurs. So no offense. The point is, we are looking for the company which can really scale. I will again quote here Mark Anderson. He said, every entrepreneur should have only one metric. Either he should be doing impact or he should be doing the scale, the business, right? If you give people two metrics, they build a good houseboat, which is neither a good house, neither a good boat. So same way, we are looking for companies which can really scale. Can you create a 1,000 crore company? Can you create a 10,000 crore company? If yes, and the revenue metrics, any of the growth metrics should correspond to climate. So like say, if the battery smart 20,000 battery swaps are done, I know so many kilometers are now running on electric rather than running on, gasoline. So there are clear cut metrics for us. So scale and relation to impact metrics directly. That's what we do.
So Andy, let me come back to you and something connected with what Sailesh just talked about. So overall, if you look at it, the total addressable market or TAM for corporate ESG solution is in billions of dollars, and it can accommodate multiple players. However, what we are finding is that we are finding the big four and some of the global consultancies very hyperactive in this space. It is also understandable because they already have an inbuilt client base, they have a strong credibility, and their marketing outreach budgets are quite large. So they are very well placed to benefit from this tremendous opportunity. In context of this background, how do you see a startup such as Amplo Global competing in this space, and what do you think is the USP that will take you places?
Absolutely. So I will start with emulating what Sailesh just mentioned. Scale is a big factor. So initially when we started, we got a big pushback from the big fours because it's a platformation. And when we are platformizing something, it would cannibalize some of consulting business in ESG space. Time forward, especially post-COVID, our product has been leveraged by 4 mid-market to large market consulting companies. And the partnership, we call this, in my language, I call it a sell with to the end customer. So these consulting firms are now looking into more of a volume business than a body business. Suppose you have 5 ESG experts. Yesterday, they would be putting them in 1 or 2 projects, but now they can put them in 5 projects with an accelerator like ours. So now the consulting firms are treating this platform as an accelerator that sets the stage for their end customer, that where they should invest, when they should invest, is the organization ready, is the right template being delivered to the office of CFO. So we started with that competition, but now we have made a place with the consulting firms. To the end customer, it is also a similar situation where, again, volume and scale and repeatability, end-to-end visibility, transparency, because once you platformize something, you can always go back 5 years, go back and see that why you actually shelled this program and why you actually executed this program and what value you have got from this program, especially focused on environmental, social governance. Last 30 seconds as an example, we are delivering a program simulation with a cosmetic company based out of Cincinnati, Ohio. They want to launch an inclusive product, which means the comb can be leveraged by he, she, LGBTQ, disability, everybody. And this is a great example where our platform has been leveraged by a global consulting firm to do simulations around all these personas. So I want to finish up with this example.
Fantastic. Great job so far. And despite all this hard work, you still managed to find time to write a book, Ruins of Hope. And ladies and gentlemen, I understand it's a love story. It's selling quite well on Amazon.
No, I would like to say about that then. 30 seconds, I know you're running out of time. So the book is The Ruins of Hope. I did not know that you will mention that. It's on Amazon and Flipkart. So it's about a protagonist who fails many times in aspect of relationship, career, but this person comes back and leaves back a legacy in a small village in Bihar named Forbesganj. It's a very vulnerable town. A lot of trafficking happens there. how this protagonist comes from New York and lives there for 9 months and really saves around 89 women. It's actually a true story. I'll leave it there.
Great. Coming to you, Pulkit. You know, one of the key challenges that we see right now in the EV industry is the lack of financing. I think banks have mostly shied away from it so far, and we do see NBFC activity, and that NBFC activity is growing pretty fast, but essentially the problems that I, at least as a banker, find when looking at EV financing is there are two things. One, you know, the risk associated with new technology, and also the fact that the residual value of the battery, there's no benchmark to that. So these two typically become the challenges. While there have been calls for banks and financial institutions to entirely come up with a new EV financing model, but that's some time away. So as an integral player in the EV value chain and as someone who's had an insider view of this industry, what would you say to traditional financing institutions that could make them more comfortable to lend to this segment?
Sure. Before giving any advice to lenders, and I don't think I'm suited to give any advice, but I'll just lay out how we look at it and how we have been able to solve it to a certain extent. Despite being a very young company, a small balance sheet, we have now partnered with a couple of banks who are lending for batteries. We've partnered with a suite of NBFCs. Obviously, it did not happen on day one. And there was a lot of education that had to happen. Every lender would have a risk framework, right? And that is, I don't think we should say that is a problem. Lenders are in the business of lending money, right? We as borrowers or end users need that money. It is about bridging that gap in terms of understanding and explaining what true risks are. Obviously, EV is very different from ICE, right? Internal combustion. The salvage value is not determined today. Let's just talk batteries. You don't know how long they will last, whether a new technology will come up, what about redeployment or repossession. But that is a framework, right? There exists a framework to assess risk, and you need to fit yourself in the bankers or lenders framework to explain that risk. We started with very high cost of capital, working with operating lease companies who were willing to take that risk because there was high cost of capital that they were getting paid for. We traversed that journey and then did NBFCs, explained them how this works, why as a platform it is more secure to lend through us because we have the redeployment and repossession capabilities. All these are connected assets, which means they can be remotely shut down, they can be remotely managed and monitored at all times. Post that, obviously, banks found it interesting, including, say, HSBC and others, where we were finding better cost of capital, better terms, and obviously more quantum of capital. And we have traversed that journey now. We're now looking to traverse further and say whether international impact-oriented debt capital would be willing to underwrite these assets or not, right? And I think that's the gamut of debt journey that has to happen. Being in a capital-intensive business or a asset-heavy business is very different from creating a internet-only brand. But I would say that's a characteristic of the business that we are in. That is not good or bad. That is the rule of the game, and you have to play within those rules, right? You have to deploy a large value of batteries to become a battery swapping network because you are taking away 50% of the asset value from the customer. You are removing 50% of asset value of all the EVs and taking that upon you. So obviously the risk is getting reduced because instead of writing a bottom of the pyramid customer, probably who was not even in the banking system as an e-rickshaw driver, you are underwriting now a large company which has a strong balance sheet and strong unit economics and has the ability to help you repossess and redeploy. So that is how at least we think, and we have been trying to explain to our lenders.
No, thank you for understanding a banker's perspective. I hardly find that happening. We are at the end of getting bashed. Interestingly, also talking about residual life, I read somewhere that there is increasing amount of work happening around the residual life of these batteries. For example, one European company, NL, they have taken 90 Nissan Leaf batteries and which are at the end of their life cycle, and redeployed them for renewable storage. So there is still some time left for these batteries before they can be recycled, because recycling has its own issues. Kushagra, coming to you, coming to some of the challenging aspects of the industry. I think your industry, as you said, is a concurrent subject. And more often than not, we find central policies or the way states are going about it at loggerheads. The situation in the ground is far from ideal. And in the morning, we are talking about things like net metering, etc. So if I were to ask you to very quickly put for us your wish list in which you want to see all this come together and play out for the industry, which will be good enablers for you.
Sure. I think the number one wish list. So first of all, I think we now know what the challenges are, and the government also knows what the challenges are, and everyone is working towards finding a solution. So the draft electricity bill is already in the parliament, and if it passes, it should sort out a lot of the challenges which are already out there, and which should also bring state and central issues on the same parity and resolve a lot of challenges, which will start enabling a lot of projects which are stuck in a very fast moving direction. The other thing which has happened is the green open access rules, which have been just notified. There is a process which has been notified. It'll take another few months to get those in motion. So our expectation is next few months are going to be very critical in order to streamline the blockage what has happened. But what we see is the government is aligned, the industry is pushing forward to it, and the scale up is there. And we already see, especially if I talk about our sector, which is commercial industrial sector, as the greening of supply chain is happening, companies and corporates are understanding that they can save up to 50% of their energy cost just by going solar, right? And that also saves, helps them towards meeting their ESG requirements. So I think the market side is there. So the deployability is getting sorted out. The other thing which is also, which the industry is also carefully looking at, the deployment of solar plus storage and hybrid solutions as well. So that during daytime when the solar is there, but how do we broaden that time horizon, right? Be it with solar, of storage, be it with wind or some other renewable form. So all those policies are also getting formed. So I think the biggest factor which the industry is asking for is pushing the Electricity Act, which is or draft Electricity Act, which is in the Parliament, and moving ahead with these draft or these green open access rules which are out there. Yeah.
Thank you. I think I really want to thank the four of you because we are doing pretty well on time, is what I understand. So I would get into my last round of a few questions for each of you. Starting with you, Andy, again. How receptive are you finding global corporations and local corporates in India to walk the talk and earmark investment budgets to make themselves ready not only for now, but for future, especially scope 3, which is kicking in?
Yep.
So very quick.
Very quickly, first of all, I feel that being in the Indian origin, the homegrown family business has done sustainability without saying it to be sustainability in the last many years. And now when I see the MSME sector, they are really accepting it. We work with, I'm going to take a name, Wadhwani Foundation in India. So we are partnering with them for the MSME journey. So there is a decent acceptance out there. And we have a customer in Bangalore in fashion retail. They have, of course, they are a conglomerate. They really have accepted it. One thing is important, which you talked about, scope 3. It's both sides. So when Indian tier 1s, tier 2, tier 3 companies going to global level, they have to follow the OEM's method and the madness. Similarly, when conglomerates in India are bringing international suppliers, they have to follow the BRSR, which I think the Indian team has done extremely well. So I think the acceptance is both sides. it's mutual. It's important that it's just like we talk about 10Ks, this is a part of every finance office journey. I would like to see more acceptance a little bit, especially in the MSME side, and that also has a range. But I'm glad that there is an awareness. We have champions like Sailesh, right? And I would say my answer will be yes, it's getting accepted.
Pulkit, coming to you. Very important question in the current context. You know, Battery Smart's model of rolling out charging infrastructure, it's pretty capex intensive. So it's very natural that while your top line growth will be pretty high, negative free cash flow will be the order of the day. And we are finding a world today where investors are increasingly pushing their investee companies to reach unit profitability pretty fast. So, and that's for a variety of reasons based on some of the recent experiences. How are you finding your own investors on this, or are you seeing this pressure come into your sector as well? And if so, how are you dealing with it?
I understand as macros change, people start talking profitability and growth and keep cycling between those discussions. But I don't believe that, say, profitability or a path to profitability is a macro or an investor driven decision or a discussion, and that is not how it should be, right? The business by definition is something that should generate cash flows and profits. Either you create as Shailesh was saying, either you do impact or you do business. But if you are in business, you are there to make money. You are there to generate cash flows and profits for your shareholders. And that is the purpose of business. You are right that this is a capital intensive business, and I touched upon this in my previous response, which is a feature, right, of the line of business that we have chosen. That can be looked at as a constraint, but that can also be looked as a moat. You will not have hundreds of people deploying $1 billion towards swapping. There would probably be 3 or 4 large networks that will exist eventually who are doing swapping. So that means you have to constantly solve for capital and stay extremely capital efficient, right? There might be negative cash flows when you are establishing and reinvesting your cash flows into your business to grow. But having a very capital efficient model is extremely necessary in such line of business. When I say that, there are a lot of companies without naming, let's say, who would spend 3 rupees to earn a rupee, right? You can do that at some phases of your life, but you cannot say that that's a business model we are in for tens of years. And a lot of people would fail to understand that as a business. We, because are at an intersection where we are working with, say, highly risk-averse private equity and lenders, and also on the other extreme, early stage growth-driven ventures. So we have to deliver both growth and profitability is how I would say.
Deliver both growth and profitability. I think the answer lies in strong cost controls. Coming to you, Sailesh, on the same aspect, I think broadly there are talks about a funding winter, but that may just be a terminology. There is generally a risk of sentiment that prevails today because of the macroeconomic circumstances, and we are all aware of it. When you look at it from your own side, are you actually seeing challenges in terms of raising your own funds or getting enough funds to have a high velocity of deal closing from your side?
So, interestingly, we are not seeing any of this. We have done so far 8 deals. In last 3 months, we have done last 3 deals, and we are now on the 9th deal going on. In each of this, we are almost getting oversubscribed. There are multiple investors chasing. So I do not see funding winter, especially in climate tech, as of today. Overall sentiment is down, which is very good, which is very healthy, because otherwise there was too much of fluff which was going around and which was unnecessarily increase the cost for everybody. But overall, we are not seeing such challenge.
Fantastic to hear that in climate tech you are not finding a dearth of funding. Last question, Kushagra. I think we talked about some of the challenges and you talked us through what you see could be possible potential solutions. Do you see scope of partnerships emerging in your segment? For example, Battery Smart, when they are charging and you are a renewable player. So to actually make it green, ideally when we are charging our EVs, it should be green power. So do you potentially say, I'm not talking per se a partnership with Battery Smart, but do you see potential partnership models develop within the ecosystem which brings CNI players such as you? For example, data centers are huge consumers of power and they necessarily should be supplied by renewable power. So how do you see the scope of partnerships emerging in your sector?
So I think it's a very good question. So first of all, we surely see the partnership emergings, and the terminology internally which we bounce off is called as share of the larger energy wallet, because we are already there in our customers' premises, and we have been a trusted solutions provider. So then either us or if somebody is already out in our future customers' premises, we can be a better solutions provider to them. So what we see is if you're already providing them, let's say with open access or with solar rooftop solutions, selling power to them or energy to them, we can provide energy efficiency services, for example. There is opportunities coming up in battery charging, right? EV charging. So, and what we are trying to build is ecosystem around it, right? Either we do it or we partner with some long-term reliable partners in these segments. So, and we see that emergence which is starting to happen, not only in commercial industrial sector, but also what we see is in utility sector as well, where the larger plants which are getting built out will have to include battery storage, for example, right? So that will be an added, so storage companies will get an added advantage on those fronts. So we see a lot of these things happening. On the upfront side, what we see is AI-based decision-making starting to happen, right? Understanding the client data. If we understand the client data well, then we are able to provide them better solutions, right? With one of these technologies which we can provide, predicting their and sourcing power for them. So there are multiple opportunities. If we start looking at the data more in detail, we are starting to see that more partnership opportunities are starting to emerge. Yeah.
Thank you. I think that takes us to the end of our time. So I wouldn't be in a position to take any audience question. My apologies for that. Nor will I summarize the customary way that a moderator does. All I'll say in conclusion is that a big thank you to my panelists. I'm sure that the audience found your views as insightful as I did. Eventually, sustainability is an all-encompassing lifestyle change for everyone, and its second-order effects have actually caused ripples or tectonic shift, the way you look at it, already in the corporate world, the governments and policymakers. Finance will, of course, be a key fuel to ignite more actions across this value chain. And each of us here, as constituents and beneficiaries of this large ecosystem, have our own role to play. And let's start here and now and pledge to lead a sustainable way of life. Thank you.
Thank you so much. I'm going to request all our speakers to please come together for a group photograph. And I think we managed to extract some really interesting insights and a lot of anecdotes as well. Ladies and gentlemen, this session on sustainability, the energy transition path ahead, has been powered by HSBC. With that, thank you very much. I'd also like to urge our members of the audience to please connect with all of our speakers in case of any further queries, any questions at all. And that being said, we're now going to gear up for the fireside chat. That's right. This is where we're focusing on the cross-section of payment and lending. And we also have two prolific speakers joining us right away. So I'm going to request everyone, take your seats. It's going to be an interesting fireside chat and on a very feisty topic, especially when we're talking about the cross-section of payment and lending. So let's look forward to this session. And this particular session will be spearheaded by Mr. Nitin Gupta founder and CEO, Unicards. And joining in conversation, we have with us none other than Parag Rao, Country Head, Payments Business, Consumer Finance, Digital Banking and Marketing, HDFC Bank. So we're going to bring on board both of our speakers to come on stage so that we can get up for this interesting fireside chat. Once again, I'm going to urge our members of the audience to please also keep your tweets coming using hashtag GFF. Welcome, sir. Wonderful to have you here. I think our team is still setting this up for us, but I believe it's just the two of you. So we're just going to request you to take your seats. We'll just give a quick makeover to the stage as well. As a team, we are also the cross-section of all the details on the stage over here. But that being said, a warm welcome indeed. Thank you very much for joining us. I'm going to quickly hand it over to Mr. Nitin Gupta to take forward this fireside chat. Over to you, sir.
Hi, everyone. I'm Nitin, and GFF, thank you so much for organizing this wonderful event. It's a real pleasure to be here. I know you want this to be very spicy, so I've prepared a list of tough questions for Parag, and here I go. Parag, you've been a veteran banker for 20 years. You've been in HDFC since 2002. You have seen everything in payments, whether it's consumer side or the merchant side, from prepaid cards, credit cards, payment gateways. You have seen everything in lending. You head the digital banking for the bank. How has been these 20 years in terms of evolution of payments and in terms of evolution of credit for India, in your opinion?
That's a pretty interesting question, but first of all, I think it's lovely to be here at this forum. It's awe-inspiring. I mean, I'm sitting in this room and I'm feeling so small. You know, it's exactly like payments. Whatever you do, I think the roof is sort of, you can't even see it. It has unlimited potential. Well, to answer your question, yeah, 20 years has been a pretty, how do I say, awe-inspiring and learning journey. Okay, yeah. When I got into the payment business, by the way, I joined HDFC Bank from a completely different industry with FMCG. Prior to that, all of FMCG, the bulk of my career. So it was a completely different domain for me. But then I entered it with the thought to say, hey, fundamental business principles are the same, whichever industry you look at. So I just plunged into it, and it's been an ever, journey of constant learning. From the days 20 years back when relative today, you could say payments was primitive, but it was still quite advanced at that point in time. And now I've been learning day on day. There's always something new, which is why I call this the payment business or credit cards as the lux of the FMCG business. You know, it's glamorous. It's a wonderful mix of future-looking strategic content, but at the same time, transactional operation, huge amount of detail, and it's a wonderful place where any budding, professional in the financial services space would actually learn. Having said this, I think what we've seen is the evolution of, in the initial, let's say the first 10 years, the evolution of many payment forms which were conventional, the debit, the prepaid, etc., building up form. Then the card industry itself was pretty nascent at that point in time. We were probably the last players in the industry. And I think we all were learning the ropes in 2-3 things. And some of these basics still remain. So how do you build scale? How do you build profitable scale? How do you manage a good built-up book? That means what we call portfolio management. How do you churn customers? How do you get them to spend? How do you manage delinquency? How do you manage operating costs? Good amount of learning and expansion, etc. So I think the industry was chugging along, how do I say, at its own growth rate, reasonably sheltered, if you may call so, over the first 10 years. Post 10 years, when the initial green shoots of, if you may call so, digital and sort of growth started coming in, of course, pushed by certain events, economic or ecosystem events like Demon, the whole Silicon Valley explosion, etc., is when it started becoming even more interesting and actually became challenging for a lot of professionals, including us, wherein two, three things started happening. Different types of players going beyond banking sort of entered the industry. People started looking at the form factors and started questioning the existing form factors and say, hey, new form factors, what can we do? Okay. Payments, which was reasonably isolated from the traditional banking, started becoming even more integrated. And then questions like Nitin, you've asked for, which started emerging even 8-10 years back, to say, how do you convert a payment transaction into a loan? And that was the genesis of the starting point of this whole question, which you're saying, the cross-section or intersection of lending and payments. Okay, and so a lot of that became interesting. True competition in that sense, as the way we call it, actually started coming in. And then, of course, in the last 7-8 years, we're in 2022, I keep on forgetting the 3 years of pandemic, but 7-8 years back, when the digital sort of, the whole, it started dawning on us, is when, bang, the whole denominator base changed. Suddenly you started looking at a base which was 100 has now become 1,000. Okay, paradigm shifted, customers started asking for different things, significant amount of different innovation, what you call innovation, new ideas, thoughts coming in, rapid consumption also happening at the same time, rapid ask for new different types of thing, and this convergence between payments and I think lending has become even closer. Net, for any financial service player, the way I said, if I were to summarize all that I said in sort of one chain, in today's world, what are we living in? We're saying that you can't isolate payments with lending, and let me add a third leg of banking also. When I say banking, I mean the typical liability side. Okay, all the three are interlinked. When you look at it from a profitability perspective, when you look at it from a loyalty and customer stickiness perspective, and when you look at it from a customer wallet share perspective. All these three are deeply interlinked, and probably some of the questions you'll ask, we can sort of delve into it a little more. But fundamentally, what we're now saying is, on one side, you manage technology to be able to innovate and constantly provide products and services, ever needing demand. The second aspect of the way probably a business manager looks to look at it is, how do you manage this immense scale? Payments is about scale, profitability comes about through scale, and those paradigms have also changed. So how do you manage scale, the infrastructure, the investments, the go-to-market, all of that? And the third bit is, how do you manage this elusive thing called customer loyalty or customer stickiness? Because simple, you just want the guy to keep on coming back to you again and again and again and again on a sustainable basis. And when you put all the three together, you still need to build, you need to have a profitable business, profit enough to pay for your business and you reinvest into the business, profit enough to give back to your stakeholders. Okay, investors, if you may call so. Yeah. So that's a sort of summary.
Very helpful, very helpful. But prodding there further, right? It's long been said, at least in India, you can't make money from payments. There are companies globally like PayPal who have been successful in making money from payments. But at least in India, whether it is consumer side payments or merchant side payments, payments is used as a hook to acquire the customer, to engage and retain the customer. But you're practically not making money in the transaction because you're operating it at bare minimum cost. So credit becomes a very important means to make money from that customer, or banking for that matter. How much would you agree with this statement? What's your view?
So I agree with your statement when you look at it using a conventional lens. So I can't convince my CFO, to give me more investments because he looks at it the conventional way. How much money do you make, EBITDA, etc., etc. But the way I think we need to start looking at it, and all serious players in the payment business and even banks, even banks too, is you need to look at it from a commercial, a holistic look at the way a customer looks at financial services. I made a brief mention about a statement saying that payments, lending, banking are interlinked, and it leads to profitability. Unless and until you don't start looking at it holistically, it's not going to do. And I think all of us know it, and we build it into our business model. So look at it this way. When you say someone offers payments, not too much money, okay, given the pricing, but then you want to cross-sell. What's cross-sell? Cross-sell is about building revenue. It's also building stickiness and annuity income streams. Okay, coming to your question, can I use the payment and payment rails to lend to you, okay, and thereby make you sticky because I make money on the loan? Can I ensure that you pay using my network, but then I have your account at the back end, and then I sort of make money. So that's the way I think you need to increasingly look at it. Look at it holistically from all the financial service products that you may have on your suite, okay, and that's the direction in which way. Then in that case, what you do is, if you have 3 products or 4 products or 4 cohorts or 2 cohorts, whatever you may look at it, one of them could be payments, where your margins are dropping, unit margins are dropping, okay? And that, by the way, is globally happening across all. You look at it, whether it's MDR, interchange, whatever you call it, whether it's intervened or natural market forces, you will see unit margins dropping globally, okay? And the only answer to dropping unit margins is scale, period. Okay, then you make money on absolutes, you don't make on this thing. And so therefore, payments is about a scale business. Therefore, a lot of your investments, your go-to-market need to be focused on how much a scale can you build in, okay? But that's not enough, okay? Then you need to ring fence using other financial service products which give you annuity streams, which give you stickiness, which give you, extended tenure of customers onto a loan, etc. And so to answer your question, doesn't it make money? In the conventional way, no. But when you look at it holistically, I think it makes tons of money. On top of it, because the nature of payments is transactional, you have the customer's wallet, you have the opportunity to have the customer's wallet on a day-to-day basis. So that is invaluable, ultimately.
Fair enough. That makes sense. Look at the customer holistically. Continuing to the topic at hand, the cross-section of payments and lending. Today, as far as my knowledge goes, on the consumer side, HDFC Bank has 3 distinct products where payments and lending come together. One is credit cards. The other is your BNPL product called FlexiPay. And third is the EMI on debit cards. I would love to understand, how does the bank, are there more such products, first of all? And how does the bank look at these different products from a customer segment point of view, from a strategy point of view, from a profit pool point of view, from objectives point of view?
Okay. So 2-3 dimensions in which I'll try to answer this question. When you look at the profitability curve, well, yeah, obviously credit cards is up there, okay, in terms of potential profitability, and then sort of as you go down the thing, debit, lending actually comes before that, debit, and then maybe sort of UPI, the profit pool sort of drops. However, the role of each of these products, I think, is very clear. So to answer your question, why would you have a credit EMI and a debit EMI? Okay, well, the answer is, let's say on my bank base, we have 65 odd million customers. I've got only, 17, 18 million credit cards issued. The rest of them have debit cards. Why should I not offer them an underwritten debit EMI kind of product? Because they have the instrument in their hands. Okay, so the point is saying that, can I offer lending across all my instruments? Is the point which you hold. Okay, that's point number 1. Another angle which I think you need to look at it is that different credit products have different streams. Even within loans, you have from the you have subprime lending onwards, PL, business loan, all in the unsecured line, and then you have secured loans. Customers have a choice of picking up each one depending on his convenience, on his mode of repayment, on his cash flows, on his future capability to repay, so on and so forth. Similarly, lending in these 3 products which you talked about, they actually cater to different types of customers. Slightly better yield, and I don't mean it in a negative sense. People use card and card loans. A card, 30-day credit, is finally it's an OD. It's an OD line. It's a dynamic OD line which you pay back, etc. You get loans on credit cards also if you choose to use them. A BNPL or FlexiPay, I've got a BNPL product, typically is an entry-level lending product which targets small ticket conversion into a loan, and thereby, and the way I look at it, it's a funnel for acquisition, but it also helps onboard a lot of new customers to lending and get them into a habit of lending. Okay, so each of these products actually has a slightly different role the way it has evolved. Okay, is there overlap? Answer is yes. Okay, but is that overlap minimal as we speak? Answer is definitely yes. Is the upside to grow on each of these form factors? Definitely yes. Okay, so I'm not too worried about whether there is an overlap or not. I think it's very clear that each of these three products, and probably many of the other products which you now have credit on UPI, and many other forms which will come in. I think customers will find their own convenience and level of factor in which what they want to use. You want credit on the fly, you want planned credit, you want planned EMI repayment purchases, you want collateralized, you want non-collateralized, multiple forms in which a customer does. So it's actually a good choice for the customer, but fundamentally I'm saying I don't see too much overlap. Each one will find its own place of water. Okay, but do you need all of these form factors to be able to address different customer segments and different needs of one single customer? I believe the answer is yes. You need to have a product suite of lending solutions.
So let me push this thought process further. You mentioned that there are 65 million customers of the bank, about 17, 18 million customers have a card, the rest don't. Right? If I look at the overall credit card market as well, there are about 40 million unique card holders. And while this number has doubled up in the last 5 years, there is an argument out there that, hey, why is this 40 million, not 80 million? And the same applies back to HDFC Bank as well, right? Why 17, 18 million card customers? Why is that number not 30, 35 million for you? So what's holding you back? Or what's your opinion of why the bank, or why is there this larger perception that one needs to be very conservative when giving out a credit card product to a customer?
Okay, so I would not use the word conservative, I would say prudent. I would use the word prudent. Why are we in the asset business, or why should anyone be in the asset business? It's to, one, you need to build a sustainable book. Okay, by sustainable, I mean a book which survives and grows over multiple credit cycles. That's point number one. Obviously, it should give you profitability, but that still comes later. More importantly, as a player in the financial services space, especially in lending, you're dealing in liquidity. So it's important, and some may call it a very altruistic thing, but I think it's hard reality for serious players in the lending space that you need to be a responsible lender. So issuing credit, yeah, I mean, you have algos, you have all sorts of things. You can issue credit to anyone. The point is, the story only starts there. What you need to see it is to look at it right to the end. Like I say in credit cards, there's only 2% of the story which starts when you issue a credit card, and so therefore headline numbers are nice. Okay, but how do you build a sustainable book? How do you get the guy to keep on coming back to you again and again and again, and to ensure that the guy avails of credit, but at the same time doesn't go delinquent? Okay, and so you got a responsibility as a lender also. You got to look at that whole cycle. Okay, and mind you, I think. So is the answer to say that can you underwrite many more customers than you answer to? Probably yes. Each player needs to understand his own level of credit risk and appetite, which he need to do. Okay, but I think more importantly, I think you need to, and that's the way. And I'm talking like a complete banker. That I think responsible lending is the I think responsibility of all players in the market. We can't be here to build up bubbles and therefore create artificial credit cycles, negative cycles. I think that's not what we want. A sustainable growth in the economy happens with good, prudent lending practices. Okay, there will always be a particular set of customers who will say that I didn't get a loan. Okay, but I think it's important that, and in the lending space, I think patience, prudency pays off.
So pushing
I don't know whether that answers your question.
Well, it half does, and that's why the remaining half of the question. Would the bank differentiate between a customer who gets a credit card and a personal loan? So for example, would a bank give a credit card but not give a personal loan? Or alternatively, give a personal loan but not give a credit card? And just tying back this question to your previous answer, that's why I'm provoking.
Well, let me tell you.
Provoking you.
Well, let me tell you. I think the credit algos built for PL and cards, they're similar only to the extent of about 70-75%. 25% there's a difference. That difference again because of the nature of the products which you have. PL is a planned offtake and a planned repayment product. Credit cards is not. Credit cards is talking about impulse lending or impulse buying and therefore lending, reading from that, etc. PL is not. Okay, without getting into too much of detail, from our own understanding, 20 years of understanding credit behavior between these two products, there is a significant difference in credit behavior between, say, a product like a PL, although they are pretty close, both are unsecured, okay, difference, and you need to build those into the algos. Okay, let me tell you for example, one thing. When there's a bad credit cycle, typical consumer behavior is that, you start off with saying, I protect my secured loan first, or the most pyara loan, if you may call. So if I have a home loan, okay, I will do whatever, I'll ensure I don't default on that. Okay, typically what happens, credit cards comes the last, because you can revolve, you can do all of that, and then you can do a balance transfer onto another card, and so on and so forth, etc. That kind of behavior or differences in behavior impacts credit, credit lines and credit behavior or delinquencies on the different products. So by nature, therefore, of that kind of customer experience, the credit underwriting is different from a PL, etc. You really can't compare.
Fair enough. Fair enough. I will now turn the lens around banks and NBFCs. There's some NBFCs who have done really well around the BNPL or EMI business. Bajaj Finance is a case in point. They really dominate. As a bank, you have significant advantage. You have a significantly large customer base. You have significantly lower cost of funds. Why is it that an NBFC is able to, at least from a perception point of view, dominate in the BNPL EMI business? What's your take there?
Well, I think Bajaj has done a wonderful job. They're probably the one NBFC who's done good in this particular segment of what we call consumer finance and of course PL, etc., etc. We in fact admire them and look at their practices, what they actually do. Okay, but the market is pretty vast. I mean, in fact, the consumer finance market is just about starting to sort of pick up right now. Even if you take all of card spends and all of consumer finance and PL put together, I think the opportunity is significantly large. And I do believe that there's space for many more players to sort of do it. And having said this, okay, these are tricky businesses. They're glamorous businesses, by the way. They're very glamorous businesses, but they're tricky businesses, okay? And so therefore, any player wanting to get in needs to have at least 2 or 3 key things in place. One is, of course, you've got to have a significantly large distribution width and depth to be able to cater to the kind of consumer demand which happens. Second is you've really got to have an extremely strong yet dynamic credit underwriting infrastructure built in, because these are loans taken at the moment of truth, which is at the point of sale. Okay, which means your credit decisioning cycle ranges between, say, 3-4 minutes to maximum 30 minutes, if you may call so. Okay, so you've got this whole sort of infrastructure, capability, risk, all of that necessary to do that. Okay, and then the way you look at this business, these businesses once again are low tenure, seemingly high IRR businesses, okay, but then of course there are strains on profitability. So you need to look at these products as within a suite of larger lending products, because it's a funnel for getting in customers. Okay, so any serious player in this business needs to actually look at that. Okay, so there are only a couple of players as we speak right now, but I do know of quite a few players who are serious about this business, and you'll see a lot of action happening in this space.
And from the bank too, I believe.
Absolutely.
Wonderful. My last question before I open it up to the audience. Banks versus fintechs. Where does the bank feel that fintech is competition to them, and where does the bank feel that fintechs are partners?
Okay, I think the last 4 or 5 years has gone in this huge debate ये मेरा customer है, ये किसका है, क्या है, मैं कर सकता हूँ, वो कर सकता हूँ. I think that's gone. And but I think that at least in the last 2 years, at least what I've seen, I think a little bit of, if you may call so, sanity has sort of set in. What is emerging out of it, at least the way we see it, and I would urge many people to do this. I think each player in the ecosystem, whether it's a bank, an NBFC, an e-tailer, a fintech, whatever you, I think brings to the table its own strengths. I think the problem happens when we all think we're Superman and we can do everything. I think sticking to the knitting with the basic principle of business is, I think, one. But there's ample enough opportunity, and I think that's the way to go, of partnerships happening, wherein each player brings to the table their own strength. Okay, that's point number one. Number two is, I don't think any one individual entity can crack the market on their own. Okay, it's just not possible. Okay, but bringing together forces and bringing together far more value to customers, I think, is the nature of the game. Okay, and the third important economic thing is that standalone trying to do everything is just not going to help you build a profitable business model. Ultimately, I presume serious players are in this game for the medium to long term, which means you need to build a good economic model. Okay, partnerships actually help in crunching the lifetime cycle of this model. So I see more and more partnerships, potential partnerships happening, and I think that's the way to go. What we've got to fight together, I think, is the fact that whether it's in payments or even in lending, if you may call so, we've just about scratched the surface and just about getting in right now. Yes, the growth has accelerated in the last 3 to 4 years, but I think we've got a huge headway to grow. Okay, and if the market grows, everyone grows. So I think that's the way we need to look at it.
Fair enough. Fair enough. Makes sense. I will now hand it over to the audience if they have any questions. We have somebody there.
Hello, I'm a chartered accountant, and I read a book wherein it mentioned that banking is required, banks are redundant. So what reply you would like to give to that author? I was just going to search the name of the author. So
Banking is required, but banks are redundant. Well, if you define banks as the traditional, brick and mortar buildings, people sitting and, doing paperwork and underwriting you or looking at big ledgers, etc. Well, yeah, that kind of bank, I think, is dead. Okay, and the banks of tomorrow will necessarily have to be like the fintechs or the attributes which fintechs sort of bring to the table in terms of innovative, agile, but also bring to the table or continue bringing to the table conventional banking attributes like trust, safety, managing risk, etc. I think it's a good amalgam too. So yes, the traditional banking which you saw maybe 30, 40 years back, maybe that's redundant, but the new banks or the banks of the future will necessarily have to morph into saying that I retain the good values and attributes of traditional banking, okay, and I imbibe the new attributes of the new age. So that's to come. I hope that answers your question.
So banks will become tech companies.
Yeah. We all have to change. It's about change. When the environment changes, we all as entities have to change. We know in our MBA classes, great examples of hugely successful companies which have overnight folded up. Okay, that's just about that, not changing. If you don't adapt to change, I don't think anyone can survive. Okay, and so banking as it was 50 years back necessarily needs to change. And I think the reason why we are all in this room as a big, great, homogeneous mass of people focused on financial services and technology is exactly this change.
So one last question. My father was a microfinancer and he always invested in people, not the business. So what is your take on this? Whether business or the person, entrepreneur?
Well, okay, let me try to answer this question. I don't know the complete perspective of why you're coming, but let me try as I've understood it. Okay, any organization is an institution fundamentally made up of people. Okay, all organizations are run through people. And what do I mean by people? I mean the innovation, you call it. Innovation stems from here. Innovation is not a fruit you pluck off a tree. It comes from here. Teamwork builds energy. Teamwork converts dreams and visions into actual reality. Okay, motivated set of people can achieve far more than, than sort of things which you can put on an Excel sheet. And I can keep on going on and on and on. Ultimately, any change, or if you look at even the history of change, change has been brought about by just someone asking different questions, a set of people asking different questions, and believing in that conviction and actually driving it. So yes, I think at a philosophical level, it's extremely important. Organizations are run by people. Organizations are run by the best people, the most motivated people. The leader of these organizations, I think, need to take that into cognizance to say that it's finally people who drive outcomes. Okay, the organization, the technology, these are sort of, inputs to only help you, assist you on the way. But it's finally people who make the difference.
Hi, I have a question, Nitin.
We'll take one last question. I think our times are up.
So, hi Parag, Rohit Krishna.
Yeah, hi.
There's this conversation that in Web 2.0, the digital or the technology companies, through payments, primarily have built strong ownership of customers. And over time, the profit pools of lending and wealth will also shift. And this seems to be one of the big questions for traditional banks. What is your house view or your view particularly on whether it's Web 3.0 or Web 2.0, how do banks gain, or are banks thinking that there is risk here in terms of losing customer ownership? And what is the way forward in Web 3.0 or whatever other way banks feel they will consolidate the ownership of customers?
Well, you're talking to a banker for 20 years, so my answer sort of is pivoted to that. So technology and choices today, I think, are if you may call so, they're giving choice to the customer. So I don't need to stick to one service provider. I have a choice of going to anyone else. Okay, and that is evident. We've all got to embrace that reality, okay, and accept the fact that choice. And so therefore, any serious organization needs to look at their customer offerings and keep on ensuring that core value which customers see, I think needs to sort of build it. Okay, is there a possibility that customers will go away for you if your core offering is poor or not up to mark? Answer is definitely yes. Okay. So I think that reality is then we've all of us in this room, all of us outside, etc., have got to sort of buck up, pull up our socks and ensure that our product portfolios, the way we sort of address customers, etc., I think needs to change. And that's why I think this whole merger of, if we call it conventional, traditional business and technology, assisting you to sort of be in that thing, I think exists. And that's the reason why we're all there. Having said this, when it comes to money, when it comes to wealth, when it comes to the way individuals look at who can take care of my wealth, I think that insight, that psychology, you need to, it varies by country to country, by the way. You go to the US, it's different. In Europe, it's different. In India, it's different. Okay. From what I have seen, at least in India, all of us, you, me, everyone put together, ultimately, whatever be the jing bang and whiz and etc., you need someone trustworthy to be able to take care of my money. They don't use it, lightly when they say institutions have a fiduciary responsibility to managing your wealth. Okay, and so therefore, going beyond technology and all of that, etc., brand, trust, consistent good customer service, consistently having values, a good governance structure, I think are important to build brands and trust, especially in the financial services space. It's not just enough to have processes and technology. And that organization which can I think successfully build both and marry both together, I think will ultimately hold the core, if you may call, to use the word as you go, the bulk of the customer wallet. Okay, so this may sound like a philosophical answer, but that is truly in reality. Okay, so you need to have both You need to have both, especially in the financial services space. It also works in other industries, but at least for the financial services, clearly technology, contemporary products, dealing with you in the way you would like to do, important. Okay, brand, trust, good corporate governance, good consistent practices, I think both are equally important. Both put together makes for a potent and sustainable sort of business proposition in the future.
Wonderful. Thank you, Parag. This was great. Thank you so much for sharing your insights so candidly. Really appreciate it. Thank you.
Thank you so much. It was a privilege sort of here. Thank you so much.
Thank you. Thank you very much, sir. Some very pioneering thoughts that we managed to get from both of you. I'm going to request you to please come together on stage for a quick photograph as well. Yes. Thank you once again. Ladies and gentlemen, on that note, let's also move ahead. It's time for another special address on digital payments, barriers, and drivers for the next $500 million. Joining us this afternoon, we have with us someone who's the Chief Operating Officer of National Payments Corporation of India, an ex-banker having worked with HSBC, Citibank, Kotak Mahindra Bank in India and across Asia. She is now helping NPCI attain its strategic objectives of offering simple, secure, as well as seamless digital payments experience to the consumers across the ecosystem. And that can actually lead to rapid digitalization of India. So we have with us none other than Praveena Rai, Chief Operating Officer, National Payments Corporation of India. Ladies and gentlemen, can we have an energetic round of applause to welcome on stage none other than Praveena Rai.
Good afternoon, everybody. So this is an interesting session post-lunch. We are going to talk about how we really grow our user base for Digital India and, more importantly, digital payments. So these are barriers and drivers for the next $500 million. So as per the RBI vision document, digital payments is for everyone, everywhere and every time. And when we peel this and we look at what everywhere and every time means, it primarily comes down to connectivity. Do we have the quality of connectivity required to commit that digital payments and digital solutions will be available everywhere when they are required? And everyone actually challenges us the most because it needs to address some of the biggest barriers as we go deeper and broader into our markets and user base. And that is really around affordability, access to identity, and literacy. So looking at the global landscape, there are large swaths of the world that still do not have adequate internet penetration. And here, closer to home, while we do have 6.5 lakh odd villages, which are largely well penetrated, you would have read about all the schemes. I think there is fiber optic going into every district in the country. But the quality of this service is still not where it needs to be to promise the every time and everywhere. And we still have some villages that require to be addressed for penetration. Now looking at affordability. Affordability, I think everyone in this room certainly owns a smartphone. The country has 1.2 billion smartphones. But when we look further, a lot of users are still on what is called regular phones, that we call feature phones. And interestingly, there is this new kind of phone that's also coming up that's not really, just a simple phone for a phone call, but you can actually, it has a small camera, you can do a scan function. So hybrid models are coming up to address this need of affordability, which is so much required to get to that everyone that we spoke about. And literacy, we're still a country with 74% literacy rate. And this literacy is not all in English. It is not even in just the major languages. The country has more than 121 languages, and if you add dialects, I think it gets more complex than that. And there is some interesting data point here that, there are a number of apps today that operate in different languages, but the number of users who actually use languages beyond English is only in the range of single digits, 5% or so. And mostly it'll be Hindi, Tamil, the usual top 4-5 languages there. But when it comes to customer service, and when they're trying to raise issues on the app, that goes to about 30%. Now that's really interesting as a data point because I think people just used to doing 1 or 2 functions on the app and they figure out some iconography that helps them there. But when they want to really interact, they get back to the language of their comfort. And that number is 30%. So really, this is one of the big barriers that we do need to address. And coming back to one of the biggest success stories for India, which is what defines identity. Today, when you look at UPI, for example, you need a debit card to get registered onto UPI. And do we have every single adult in the country using a debit card? Not really. I think the penetration is much lower when it comes to active users. And the only real instrument that we have available and accessible is this very large number of active users who use the Aadhaar. And the APS number tells you something here, that there are more than 300 million users who are actually actively using their Aadhaar card as identity. So if we look at the barriers and drivers, how do we connect affordability by creating solutions that work on a feature phone, address connectivity by going beyond just data and creating solutions that can work over a phone line, which can work under unstable data conditions. It can also work in the situation of a calamity. So one of the two, either data or voice, should be available under that situation. And then, of course, identity, moving into Aadhaar-based registration. And literacy, where we eliminate the need to read, to type, and really move this into what we can do by just speaking. So these, we believe, are big triggers to really look at solving the barriers that we have here. So this is how the numbers really stack up. 400 million odd feature phone users. We still have smartphone users who are not on digital modes of either transaction or usage. and of course, the big Aadhaar number. And if we take small swaths of all of this, we really have a solution coming up that addresses the next 500 million. So we spoke about voice, right? And then when we look at some data further there, voice really is getting more and more popular. You know, a lot of us do talk to some devices in our homes when we want to listen to some music, when we want to listen to the weather. My daughter wakes up and, you know, wants to know whether it's going to rain or not by talking to Alexa. And here the data is quite astounding, because there are now billions of users who are using voice as a means of communication. So whether it is using voice on WhatsApp, whether it is really using voice assistants, out of 7 billion odd population in the world today, 50% is actually comfortable and already using conversation as a means to interact with digital systems or digital equipment in a very easy and intuitive way. So this brings us to really what we can do with voice. So before we get into the solution, what really is this voice all about? And voice tech, and this is the Fintech conference, so I thought we should talk a little bit about this. While I'm not the expert here, there are 3 components that we should be able to talk in a language of choice. It needs to be translated from speech to text. Then it needs to be translated into the language of the machine. And we need a reconfirmation back, because when we talk payments especially, it's not just about information. We need to be really sure. We need to get the accuracy right. So we need a reconfirmation back to say, hey, is this what was the instruction that was given? So which means we are talking about getting the actual text back to voice or speech and the ultimate outcome. And all of this needs libraries to get created. It needs databases to get created using the vocabulary of the particular mode. In this case, we are talking about payments. Now, accuracy globally is in the range of about 80%, but that's really complex requirements. Like suppose you have an entire library that is digitized and somebody wants to, access content of their choice. That's a far more difficult problem to address. Whereas when we bring it down to payments, we are talking of a fairly limited vocabulary, right? So if I want to open my phone or I make a call and I say, pay Rohit 500 rupees, then there are hardly about 4 words involved there. And that very focused intent and limited context increases the accuracy phenomenally. So really, I think there is a very magical moment here that this payments domain is a very clear use case for voice tech to kick in. And needless to say, all of you would have experienced, right, when Alexa first came in and you wanted to hear a particular song. I'm sure that you said something and there was another song that really played up, but as training data really went into the database, the accuracy has become higher over time, and those similar mechanisms will hold good here as well. So really, that's what brings us to 123 Pay. Now, this as a product was launched by the governor a few months back. We've had early traction. The first few use cases are what I thought we can talk about. It's as simple as transferring money from A to B. You would have observed a couple of phone booths that are there outside in the corridors here that you can actually go to experiment this. That you can make a phone call and transfer money to a friend, just like you do using your smartphone and the app using UPI. This time you'll be doing it over a voice line and making a telephone call. FASTag recharge for your cars. Insurance payment. Conversion of the cash on delivery, so the entire e-commerce use case. And EMI collections. So these are some of the early use cases. Again, very context specific, with certain fintechs putting their innovative minds behind these use cases here. And then we have the ones that are already live. And this is what makes it so interesting. So electricity bills, the mobile recharge, and gas connections. So I really love the last example. If we look at between Indian and Bharat Gas and HP, we will cover most households in the country. In fact, nearly every household in the country. So it will create an experience that is ubiquitous, solving all the problems that we discussed right in the beginning. So right now, there are about 2 lakh active users who are doing this with the first program that went live. Fintech Ultra Cash took this live with Bharat Gas. And this is so convenient because they're just calling a number, booking for the gas cylinder, completing the payment transaction. And they just have to put the UPI pin. Apart from that, everything is very intuitive. How is the merchant really identified? Merchant is identified using scan and pay. We spoke of those phones where the camera is also available. And there is also a solution here where the application is embedded in the SIM card. So even if it's not a smartphone, the application can be pre-embedded in the SIM card, providing very interesting user experience for a regular phone user. The UPI number, so a UPI ID, every UPI ID can be mapped to a specific UPI number. And this is a big game changer because without a number, you really cannot use a UPI ID over a feature phone instrument. And of course, sound-based solutions. And we spoke of the e-commerce, cash on delivery kind of solutions here. So just sort of looking ahead a little bit, the possibilities that exist using voice is endless. And while we said it's the next $500 million, I would really love to be a user of this service once it becomes available everywhere. So you can make payments sitting in your car, speaking to the instrument. I mean, today, I think some of the cars do have some sort of high MG and things like that, but you know, they mostly don't seem to understand what you're saying right now, right? So we need to connect auto tech into fintech. But that's certainly one of the very interesting use cases. Being able to just speak to various IoT devices to complete transactions. And of course, conversational payments. Just imagine there is an ad playing out, and as the ad is playing out, if somebody wants to purchase that particular good or service, they are able to interact with the TV or the OTT and complete that transaction. So these possibilities, I'm sure, will come about over a course of time by the innovative fintechs in the market. So this is really what we have for benefits. Needless to say, the benefits of digital, I'm sure you are not the audience to whom that needs to be explained. So be it the user, be it the merchant, the entire convenience, the growth of business, access to working capital, creating the history of the credit transactions, all of those start coming into the picture. And ultimately, we believe, as has said in the past, that as we go more digital, there should be at least a 1% kicker in the national growth. So with that, I can wrap up. And some call to action here. There is a specific masterclass tomorrow at 5 o'clock. So I think it is in room 207 or 208. So those who are interested can attend that. This is being conducted by one of the experts in the space. And there is also contact people in case you want to really participate in this ecosystem. Because we believe that the next set of unicorns are probably going to emerge from here. So open to questions. Yeah, there's a gentleman here. Can someone take a mic to him? Or can you just stand up, sir?
Good afternoon, ma'am. First of all, that was a wonderful and very insightful speech. Ma'am, as far as NPCI goes, I think UPI is one of the most consequential innovations that have happened in the payments space across the globe. In the previous track, Mr. Rao was talking about trust in the financial system. So when we talk about the next billion, the next $500 million, so I believe it's been easier for the first $500 million to adopt digital payments and fintech because of the fact that we've had relatively easy access to internet and the Internet of Things and mobile phones and smartphones and other things, as you say, Alexa and all. When we talk about the next $500 million, as you yourself said, that there are 440 million feature phones, and when accounting for the demography where they live, there's a reason why they use cash, and a part of the reason is that they trust cash because it's tangible, it's something in their hands. So my question is, how important is trust when it comes to driving that digital payments or 123 Pay or other products? I think that's a barrier right now, if I'm not wrong, and how would you convert that into something that drives the growth?
I think that's an excellent question, right? We spoke of the physical barriers, and we have solutions to physical barriers. But this is really the behavioral barrier that needs to be broken, and trust is the most important element. And trust comes from experience, and the experience being positive. And I'll give you an example. We did a research a year and a half back on Aadhaar-enabled systems. And we were very delighted to actually find that about 25% of people do not remove all the cash from their account. Suppose they get a benefit transfer. They don't remove all the cash from their account anymore. So they used to do that. They get a DBT, they'd go to the closest bank branch, or they'd go to a bank mitra or a business correspondent, and they would take their cash out. But now we find that they take what they need, and there is a larger swath of the population that is actually keeping some money back. They're keeping this into saving. So we have actually that journey of digital inclusion, we are seeing that journey play out. And why are they doing that? They're doing that because now they're confident. Because within a 2-kilometer radius from where they live, they have easy access. If they want to go tomorrow and take that cash, it's probably a 20-minute walk away. So they have that access. When they go to take their money, it works. They have not experienced a failure. And when they have an issue, it gets resolved. So this is really the magic cycle. And that's where, including with 123 Pay and with UPI, the whole help functionality, the need to do digital resolution. So it's not just about the payment journey, but having the ability to go before and after the payment journey and ensuring that all of that is fulfilled in a manner that builds that customer confidence is very critical. And part B to that will also be, as we go deeper into the user base, the savviness of the customer to understand the requirements, the safety requirements of using digital convenience in a safe manner will be very critical. And the onus is back on us as the ecosystem to build that awareness and to create the kind of comfort and to create the security that is required. And the reason that 123 Pay is also kind of built on the UPI rails is because it builds in all the same security aspects that exist in UPI. So I think that those are the kind of few aspects to address your question. Yes, please.
Good afternoon, ma'am. So myself, Dharmang Shah. I think that Gem Trinity has done wonders for what has happened in our country. One point what I'd like to say is that today, in terms of financial products, so if I want to get a mandate registered, I need to use internet banking or debit card. But there is a very big segment which does not even have a debit card. They have an account thanks to Gem Trinity, but they don't have debit card, they don't have that product, internet banking, through which they can register a debit mandate. So maybe if you can throw some light on what solutions you are working for around it.
Yeah, I think so. 123 Pay is I think, the very first step into that space. And on the rails of 123 Pay, the value-added services can start getting built up. So we saw some of the more vanilla use cases, right? We saw gas cylinder booking and recharge and things like that. But on the core transaction itself, something like booking a mandate, the dispute resolution, digital dispute resolution, potentially at a later point, credit. So all of these are service layers that can certainly start coming in. But we need to get the basics right? So 123 Pay is there, and the solution needs to now find a larger audience, create the user base, and then start building the value-added services. And I'm sure the ecosystem will actually create a lot of the innovation around it. I think there's a man at the back, and then we can come to you, lady.
Hello, good afternoon, ma'am. My name is Charvak. Fortunately, I had the opportunity of exploring one of the tier 3 cities in which I understood the penetration of UPI that we had. Fortunately, it's been doing very great. But the way we have been discussing the next 50 billion that we are going to integrate, what are your opinions? I mean, what are your predictions, I would say, the kind of adaptability you come up with post-COVID, post-demonetization, UPI, the kind of evolution we have come up with. How much time is it going to take, and what is your opinion, like what pattern is it going to follow in adapting the next 50 billion?
So I think the good news right now that we should be very, very happy about is that so many users who came on board during the pandemic, we haven't lost them. We haven't lost them, and I think that's kudos to everybody in this room. And on the back of this, we have to build the next change. Timeline is always very, very difficult to predict, You know the standard exponential network curve. So I think as far as this proposition is concerned, we are at the very early stage. So we need the innovation to come in, need the early innovators to start adoption. And that's why I really like that gas booking use case, because it really creates at least one use case for every household in the country to use. And on top of that, we can start building the behavior of using this proposition. So timeline, anybody's guess. I'm not going there, but our job is to ensure that faster is better.
Great, ma'am. Thank you.
Did you have something? Are we done?
Good afternoon, ma'am. First of all, congratulations to the NPCI team for 123 Pay. And it's very interesting to see the way how you talked about voice tech and the deep penetration now, the use case of gas booking that you talked about. My question is, India having so much of diversity in terms of the language spread that is there, how is 123 Pay or NPCI adopting that variation in the tech that you are bringing in so as to be able to have more user adoption?
Actually, we don't have to do anything, It happens through the innovation in the last mile. So for example, let's say there is a fintech operating in Orissa. So somebody can just take on that market and say that Oriya and all the dialects of Oriya will start getting built into the solution. So this could be on the merchant side, this could be on the user side, acquiring, and the voice service providers start getting created there. So one could slice and dice this market in many ways. Right now we are seeing specific players go after specific use cases. But there is opportunity to go deeper into regional, deeper into languages. And it's not going to be hard kind of manual work to bring each thing in, because that's where we are depending on the more advanced technologies around AI, NLP, and building these databases is just training data. So it just happens with usage. While your accuracy may be a little off in the early stages, you'll start with, maybe 500 hours of data. And that gives you a certain base to start with a certain kind of accuracy. And over time, in month 1, month 2, month 3, and I don't know, we'll have to see exactly how it works out in the market, but I would expect that very soon this will reach an accuracy that every single time the confirmation voice back will tell you exactly whatever instruction you provided. So we'll have to get tech to do our job. Okay, so that's the last question. There's a time up here. So sorry, we lost the last question this side.
Okay, so this voice deck seems very interesting. For senior citizens whose voice keeps changing due to breathlessness or due to their lungs issue, what solution do you have for them? They are non-techno, so this voice deck really will help them. But what about the voice changes?
So, that's really, I think, where the whole AI piece comes in, because it can be taken to the level of hyper-personalization.
Okay.
Right? It can be taken to the level of hyper-personalization in terms of how AI can be used to train to understand this voice command. And that's a very interesting point, because when we keep talking about this next $500 million, we're not only talking about sort of people deeper down the pyramid from a socioeconomic perspective. We're also talking about youngsters. I interact with so many students, and they are so keen to get on board, and sometimes they're kind of stuck because that debit card is their parents, bank account is somebody else. They have the bank account. They have their own Aadhaar, right? Every baby has a Aadhaar now. So this Aadhaar is really going to allow that 15, 16-year-old teenager to start getting more capable of managing their day-to-day expenses. And the elderly, for whom, again, looking at those icons and trying to type something is also challenging. So these are solutions that really are going to open up swaths of the population across the pyramid.
So will you change the law also? Because in contract, you need a minimum years to enter into a contract. So with this kind of innovation, even 15
all of this
years,
is within the current realm of the legal and regulatory framework, so we don't really need to go there. I think both the Government of India and Reserve Bank have been extremely progressive in their policies and very supportive of the growth that we are having in both digital India and digital payments. And I think we're very happy to work on the back of that. With that, I'm going to say thank you. There's also a white paper on this that we put together with Digital Fifth that will be available at our booth as well as at the master classes. So look forward to more interactions and engaging during the course of the next 2 days. Enjoy the conference. Thank you.
Thank you. Thank you very much, ma'am. And I'd also like to thank our members of the audience for those wonderful questions that kept coming so that we could get more insights from Praveena ma'am. And on that note, ladies and gentlemen, we're going to quickly switch the gears and move forward to our next session. And this is where we're going to understand the role of open networks in creating a secured and democratized digital commerce. We'd like to invite both of our speakers on the stage to indulge in a fireside chat again. And this time we have with us Suresh Sethi, Managing Director and CEO, Protean eGov Technologies, along with T. Koshi, CEO, Open Network for Digital Commerce, ONDC. Thank you very much for joining us. And with that, over to you, sir.
So good afternoon, everyone. I think it's a tough session right after lunch, but with Koshi here, I'm sure we'll create enough excitement and traction in this particular session. So we are going to talk about something which We've been hearing people call it as the UPI moment for e-commerce. So clearly taking over from where Praveena left it and what NPCI has done in the space of payments. We'll talk in the space of e-commerce. And who better than Koshi to talk about it with us, the man at the center of action. So Koshi, I think, let me straight away dive into it. India Stack is today a global reference case. And we talk about the fact that creating an open digital ecosystem built on national identity has created various models for us. And there are clear studies which talk about the fact that India achieved inclusion targets in 7 years, what would have otherwise taken 46 years for us to do. Now that has led to the regulator and government look at various other areas, be it in the sector of health, education, and now e-commerce, to look at open digital ecosystems and see how they can be leveraged to create wider inclusivity, decentralized frameworks. So would like to hear at the outset what went behind the concept of ONDC and what were the building blocks which brought it to where it is today.
Thank you, Suresh. It's really exciting to be here. You very correctly identified the journey that as a country we have taken in the last 10 to 15 years' time, and which sort of built up its momentum in the last 7 to 8 years. You know, we provided an identity which enabled a large participation, and that enabled them to participate in very many government services as well as financial services. And then, as we just heard, and we were all discussing about UPI happened, which suddenly expanded the realm of financial participation. Now that gave us the confidence and the idea of an open digital foundation on which we can build enabling infrastructure for solving population scale problems. You know, when it comes to ONDC, it is even one more step forward. If you remember, Suresh, when we looked at ID and even UPI and so on and so forth, while it has proven to be the world's leading solution, but at the time when it started, it was seen as solving a developing country problem. So that, digital financial participation is less, digital identity, there's no identity and so on and so forth. When it comes to ONDC, it's even one step more challenging because this is a global problem. Global problem of market concentration rising out of proprietary technology network, leading to concentration and associated practices. And it is being a challenge not just in India, it's a challenge in US, it's a challenge in Europe, it's a challenge in China. While Europe and US is trying to look at the regulatory approach, and China is looking at the control approach, we are looking at the approach of technology, enabling markets and enabling policy. So the whole idea is something that is built on our progress till now. And what UPI has proven is that in any business, in any transaction, there are two sides, money and goods and services. UPI took care of the money problem. Such smooth, efficient transaction. But when it comes to the product side or service side, we have a challenge. So we said, can we approach the same thing to unbundle the building blocks and make them interoperable so that it does not become walled gardens. So what we are trying to achieve, as we know, is to break the walled gardens and make any producer or merchant to make their catalogs visible to an open network that can be discovered by any other platform without being bound to each other.
Thank you, Koshi. I think that's a great introduction. It's definitely disruptive because we are not looking at incremental change. There is immense potential to reimagine and democratize e-commerce. Now, one big question which comes is we are moving away from a platform-centric to a network-centric model. And there are large incumbents already in this space. So how do you see it going forward? Would it be a collaborative play or would it be competitive? I would love to hear your thoughts on that.
You know, the way it is looked at, it is really inclusive. We all are familiar with the existing digital commerce. It's been growing exceptionally well in the last few years. But all said and done, what is the extent of penetration? On the buyer side, it's 6 to 7%, and the seller side is less than a percentage. So essentially this, I mean, even if I was in that position, I would do the same thing. We tried to look at, give some solutions and for people of certain socioeconomic background. So we gave them the facilities, we gave them the products that they want, and at the conditions and service level expectation that is needed. Like I said, it's a 5-star service. You know, if you go to a 5-star hotel, you'll pay 500 rupees for a coffee. If you don't like it, just raise your eyebrows and somebody will change it. You go to the dabba wala, he'll say, "Aapko acha lagta hai to aap le lijiye." But in the hotel industry, we need everybody. Similarly, in the commerce, we need 5-star, 3-star, 2-star, everybody there, coexisting with equal opportunity for visibility. But getting competitive position based on what they have to offer, not because they have a captive audience there. So, and that is what is going to drive business going forward. So in that sense, I would expect the existing players would see it as an opportunity of growing the market from 7% to 50%. You saw the same thing happened in UPI. Sorry, I'm again taking the example. We just finished from there. Because nobody thought that we could, in 4 or 5 years time, nobody thought we could do 10 times or 15 times as market expansion, which we manage. And there, everybody will participate, the big and the small. So that way, it's an inclusive agenda, and we are seeing signal from the large and the small that they would like to be a part of it.
So I take it from you that you are seeing that with a lower penetration, this is only going to expand the entire network. So it will become a lot of collaborative play. And as the markets deepen, as more access is provided, the overall pie is big enough for everybody to play in over there. But what we see that while there's a lot of focus on merchants, on consumers, which is what we are talking about over here, it's buy and sell, we also see that ONDC has immense potential to streamline the supply chains, the logistics, because the part which is like in a way embedded is the entire logistics piece. How do you see this model powering the B2B in the country?
So it's a very interesting. I would like to two dimensions of it. One is so look at any normal business. It is each part of building block of the business is handled by the specialized entity. That's how they optimize their investment and everybody take the benefit of it. Let's look at what happens in the mobile phone. Initially, each of them had their own tower network and so on and so forth. Now they realize it's a waste of investment. So if I make a call in Airtel or Vodafone, it may go to the same tower and then get distributed. So what did it mean? Each entity, the tower people said, I am good at it. I'll give you the service. Yeah. Same is applicable in every business. But why do we need in digital commerce, somebody has to set up the whole logistics, somebody has to put up the whole warehousing, somebody has to do everything? There's no need. There can be specialized entities coming. So in that way, and when you have this participation of merchants today, which is less than a percentage, going to at least even 15, 20%, it cannot be built on the top of some large investment from somebody. Because the requirement across a country, across a state, intercity, hyperlocal, rural, village, everything is different. So the idea of open network for digital commerce is that each of them can be present as a provider of a service, which will allow the seller to make his choice. Let me go a little more specific. See, I might be a person who might have a large national market, so I may have a contract with a national logistics provider. Oh, I could be just a cake maker from Bandra, and I find that there are somebody interested in Delhi, some of my special cake for Christmas. I can just look into the network and say, hey, somebody is taking it there. And let's take the argument further. So that might be a little expensive because you're sending 1 kilo of cake from Delhi to Bombay. But everybody may not want, but only the people who are used to the nice cakes of Bandra. Tomorrow, I may say that, I find a warehouse as a service in Delhi. So in Christmas time, every week, I'm going to send probably 50 kilos of cake on a bulk logistics, which is also available on the network. And go there and then make a hyperlocal guy to deliver. So these are the kind of interesting model that can come. That's on one side. Similarly, on the B2B side, it can be even more revolutionary. If you look at Suresh, that let's say wholesaler to retailer, the example that you get. Today, they're actually giving two services. One is they're giving him the product. Second is giving the credit. And that's an area where neither a seller, neither the retailer nor the wholesaler is really good at. So that limits their options, but increases the cost. Look at the retailer today. If I want to add one more product, I have to go and promote. I may have to go to another wholesaler. I'm convinced that I'm worthy enough to be given a credit. Similarly, if I am a wholesaler, I'm not so sure about taking one more person. Now, the whole trail of digital commerce married with the revolution that we see in the financial transaction, again help you to unbundle products and credit. The credit will be handled through the whole AA, the whole network can beautifully handle. So suddenly opens up opportunities for the retailer and the wholesaler. So you're talking, I just took an example to see how the whole fundamental supply chain can undergo change with respect to new service providers and new specialized service providers, changing the opportunity for different growth and enhancing the market access. And that is going to be a humongous revolutionary change. I just want to add one more point. At this point of time, what we are creating is standards for the Lego blocks. So there'll be new people coming with new blocks, new people coming with new, building together with this Lego blocks. Either could be a spacecraft or could be a bullet cart. But beauty is left to the imagination, innovation, and specialization.
Yeah, I absolutely agree with you over there. And I think one very interesting industry which has picked this up is in the area of finance and banking. So today, as you rightly said, that as more digital data gets created, banks are today looking at it with a lot of interest to see how does this digital trail of commerce help them in their MSME lending. So I think ONDC will play a very strong role over there. And even when we look at these networks which are creating a continuous layer of data about buy and sell, they can be leveraged even at the point of purchase or at the point of sale. So I think that is going to be a huge potential, and we see across industry models coming up over here, which will create different use cases. The other clear area we see that, and again, since we are talking about...
I just wanted to have one dimension to the data that you said. In addition to, there are two dimensions. You highlighted one important point, the availability of digitally verifiable data, which is now can feed into the whole financial sector, transforming the financial sector. That itself is a very powerful motivator, helper. And similarly, on the other side, today, one of the challenges with the proprietary platform approach is that data is concentrated.
Absolutely.
When it is concentrated, it is not available for the endpoints. And the endpoints, they want to make their business decision. They want this market intelligence about at least their business. And tomorrow, with the ONDC coming in, that is what is going to happen. Empowerment of the endpoints. And that humongous amount of data that they can play with and the services that they can get from the people who play with the data will really help them to make smart business decisions, expand their markets, maybe within the country and across the state and across the country too. So that is, again, empowerment of the last mile is a beautiful thing that today is not possible to happen.
No, absolutely. Absolutely. And real-time access with the structure of the platform, or rather the network over here. But equally important I see is that today, when we talk about this as the UPI moment for e-commerce, we are alluding to payments, which I would say still is a lesser number of dimensions to it. The moment you talk e-commerce, it is more complex, it is more a layered transaction, there are multiple touch points, there's an experience layer which comes as part of it. Now the question is that a very strong governance and redressal mechanism needs to come into play, and also a seamless experience, which will, one, lead to trust and therefore leading to adoption. So I would like to hear your thoughts that what are we doing in this space in a decentralized framework where we are creating this layer of trust and governance to help adoption happen.
This is one question that I get asked in every session I go, and there's no single simple answer. It is only to put together a picture of how the world is changing and what are the compulsions and nudges and incentives and disincentives to change the way it is running. So even before we go into exception handling, which is like grievance or whatever it is, that's what we are normally used to. Let me take a slightly detached approach first. Whenever there is a business, a transaction, let's say my transaction, let's say I do 100 transactions a month. Service is in that 100 transaction, not just in that probably 2% of rejection that I may have. No, 2% of rejection, I am equally conscious. It's like the life insurance that we take.
Yeah.
We are reasonably confident we won't pop tomorrow morning. But say in case it happens, how about my family? So it's very equally important. I'm not questioning. So before touching that, I'll talk to the big picture. Is that I want to know how my experience, how I get a fair experience as a buyer. Today one of the challenges that is there is that, whenever you create a proprietary platform which is driven by scale, it is natural that when you are representing both the buyer and the seller, natural that you would like to influence a buyer to sell what you would like to sell, not what you would like to buy. So in that way, for the buyer, is he getting the best service in terms of making the right choices? Because we want to influence him. Like I always say, no, I wear Lacoste t-shirt, I have nothing against it, I love it. But is it compulsory that from people from Jammu to Trivandrum should wear always only the Lacoste shirts? So can't we, when a buyer application comes as a buyer's agent, he will realizing that I'm a Mallu during Christmas, during my Onam time, he will say hey, for the Onam party you have to wear, not Lacoste t-shirt is not cool. Because he has an incentive to do. So that is a kind of change. So that way, consumer service is also when you're buying, not just when you have an exception. Okay, now let's go into life insurance, exception. Exception also, today if you look at, I would like to address it from 2 points of view. One, what ONDC would do to prevent exception. One, what ONDC will enable in case of exemption. When it looks at what we are trying to do is prevent exemption, is the market structure itself. Look at now as normally how does an exception can handle? You have a problem, you bought something, you normally interact with the buyer application. In an existing system also you have a buyer application and the seller application, except that they're connected internally, tightly held. In the newer world, it's handled by 2 different entities. But you as a person will go and put your complaint in your buying platform. And in that buying platform will religiously send that to the seller platform, because buying platform has to make his buyer happy. And the seller platform will have to get this information and act upon it. Except that now there are 2 legal entities. There again different market models may come. For example, in some buyer applications, say that I am dealing with very elite customers who want exceptionally high 5-star consumer service. No questions asked, I wanted to return. He may, when the buyer application broadcasts that question that I want a mobile phone, he will say that, but I will pay the seller only after 30 days if the customer has no complaint. And if the customer just give it back, no questions, I will take it back. The seller who are willing to provide that kind of service level will offer with a premium attached to that service level. There's no compulsion that he should do.
Sure.
So he knows that 2% of the cases may come back, 5% he may come back. And if it doesn't happen, the buyer application will know that he will give the money back. At the end of it, sellers are there to make money. They are not there just to steal people. So this exception handle, this is a 5-star service level. There could be somebody running and saying that I am no return policy, it's a discount store. Like today we have the discount store. So this market will enable both kinds of sellers and buyers come to an agreement for what they are comfortable at. So that is why it became a self-correcting model. Look like a seller application. And normally it might be a specialized seller application. Let's say there could be somebody selling up a seller application to sell the cakes from Bandra. What can happen if he messes up his name? Nobody will buy from him. He wants to be continuously there. So how do we build a strong incentive? First, whenever any seller or application or buyer application come to the ONDC network, we establish his KYC. Second, he has to sign an agreement that he is adhere to the policies of the network. Third, he has to make sure his application meets the technical requirements, certified for the protocol that is there. With this, he has to also agree to any network policies that will be implemented by the community as a whole and adhere to his discipline as it evolves. And if he doesn't behave well, he can be kicked out or suspended. Plus, we are also going to create a network-wide rating. So now it's not that if, let's say, Koshi.com selling fashion apparel, he cannot suddenly resurface as Thampi.com with everything changed. But my PAN remains same, my GSTN remains same, unless I create a completely new identity. How much can you do? So that's why, because of this, there is a natural self-correction compulsion to the seller and a compulsion to the buyer to encourage this happen. So this is the ways of checks and balances that will build in. And like we said, there will be complete transparency of any complaints. So if, let's say, Koshi.com has 100 grievances, it will be publicly known that there are 100 grievances, 99 got solved, 1 became a dispute. That's why we are looking at the next stage. Even there could be sometimes disputes happening. It has to be evidence-based resolution. That's why we are working together to develop an online dispute resolution framework and so on. So there's a lot of checks and balances that will reduce the probability of challenges. And if there are challenges, to be resolved. If I again, Suresh, the area where we come from, if you remember, capital market 10, 20 years ago used to be like 400 crores transaction a day and 25% settlement related problem.
True.
Today you have 150,000 crores a day and practically nil problem. So that's why the digital trackability help evidence-based, ensuring that this will, that there's a disciplined behavior, compliance to the rules and regulations. And that's how we believe the market will mature.
I agree, and I think something what you alluded to in your commentary just now, the fact that we can create social reputation ledgers, and you can then create and certify, or in a way, let the people decide who's doing well and who's not doing well. And there's evidence-based rating which comes into play. I think that will go a long way in ensuring that people start building a trust. They see the transparency of the process. They see the way people are getting rated in a very democratized manner. I think these things are going to play a very, very important role in building the trust around the ecosystem. I think as we talk about public infrastructure, digital public goods, one thing we've clearly seen is they foster innovation. And it leads to multiple players coming in, because by design, an open system, a decentralized framework is all about giving an open, equal opportunity to multiple players to come in and build use cases and business models over there. So we are here in the melting pot of Global Fintech Fest with a lot of fintechs out in the audience and in this place. So what would be your message to them on the role that they can play in building and co-creating new models around ONDC?
Suresh, you asked a very important point, because today's proprietary models, there can only be 2 or 3 players in every domain. It's not that they don't innovate. They've got fantastic funds, they do fantastic innovation, but it's all left to themselves. And most of the time, that innovation only make them stronger, richer, bigger. Which means that, and the whole game is scale, not specialization. And that is a fundamental fallacy which we are trying to break. Now let me just give you an example. It's easy to. Let's look at the buyer side and the seller side. Buyer side, let's take a large company, like something like a bank who has got lots of digital consumers, or a fintech who already has digital consumers for fintech services. Now they are saying that, boss, today I can help you in digital commerce. Today, if they want to give digital commerce, they cannot, because if they want to give products, they need to tie up with the sellers. If they want to give mobility, they want to tie up with the taxi providers. If they want to give travel, they want to provide with, tie up with the travel agents, and so on and so forth. I mean, it's not their business. There's not cup of business. In the ONDC world, you don't have to worry. Every service provider is making himself or herself visible using the ONDC protocol. So now, as a buyer side, I need to only look at how can I make the buying experience more exciting? How can I tell Koshi, please let me use your history, give me some more input on you. I can give you better advice on what is a possible fashion which will meet your taste, your sensibilities. And instead of trying to convince, hey, Koshi, you have to only wear Lacoste, that is all cool. That is a big guy. Now imagine like a small startup from Trivandrum. He develops a Mallu product where he can take the Mallu voice and Mallu text, help to ask me the questions that is, because he is from there, he can understand my culture. He can ask me the relevant questions and convert them to a search from the whole universe of sellers available to select the best for me. True. And say that in addition to the special Onam dress, I can buy a Gagra Choli for my wife from somewhere in Odisha. How about mixing that? He's letting me, it is tickling my imagination because he has no agenda. Now on the other side, seller side, imagine one smart startup coming from IIT Madras, originally parents from Tirupur, garment business. He can today also set up a fantastic portal for his friends. But he'll have to go and tell that it's all efficiency. And they say that, I don't know this efficiency business. Okay, could be good. Can you help me sell it? No, that you go and register yourself on biggies. Can you get me the market intelligence? No, that the biggies will charge you and do. But tomorrow he doesn't have to do that. He says, boss, I'll first let your catalog visible to the whole billion plus buyers from the market. I'm coming in from market side. And when your markets get built up, bigger, I will give you efficiency solutions. That's a completely reverse but exciting journey he's offering to his friends. And that comes from innovation. So I just took 2 examples. So if you let your mind wild and take away from that, this platform model, like you said, and think about the possibilities that just explode for small and big to be equally visible and attractive and sustainable. You're talking about a completely different world. And that is what we need to get used to ourselves. So in fact, when I have in many conferences, I have in private discussion, people in their mental model can think only from the way of platform. True. Just adding one more point, Suresh. When you make today, it's not that we don't know that. When it comes to information dissemination, that's what we do. Supposing you want to create protean.com and I want to have koshi.com. Both of us can do, both of us will get equal visibility. I will not worry. I need to only worry whether I can make an HTML page either by themselves or with somebody else's help. I don't worry, hey, I have to make it register in Chrome, register in Edge. No. Everywhere I'm visible. So similarly, my vision in future, Suresh, is that e-commerce is not a sector in itself. Digital commerce is just one more channel for every business entity by making their products or services visible in an open network. So e-commerce as we see today will become irrelevant. It's not that e-commerce will become irrelevant as we see today, and it will become just an extension of commerce. In fact, I was just last year talking to a professor from Stanford. He said, Koshi, I used to run a course called digital marketing. I am sunsetting it today because it is not just, marketing is just one topic. There's nothing specialized there. And mostly it's digital. So when I told him about it, he says, let's go. It's going to be in tomorrow. It's not going to be e-commerce, something separate, where that part of it is handled by somebody else's rule. Rest of it's by your rule. Tomorrow, everything is as per the brand's rule. Those are the kind of excitement that is turning up.
So surely we look forward to ONDC becoming a case study at Harvard or Stanford. But I think our time is up, but thanks for a lot of information, a lot of touch points you called upon. And I think for the industry as a whole, it clearly becomes an amazing ecosystem of framework, because the more multi-layered, the more complex it is. Okay, drop the mic. The more opportunities are there to actually look at markets as a service. So on that, we will close. If there are any questions from the audience, I don't know if the organizers, we have more time, but if there's a question, we can take some questions, and then we can call it a closer to this session. Thank you very much.
Hello. Yeah, hi, my name is Mitesh, and I have been following ONDC for last 3-4 months, and really revolutionary. I see that US, China, all are trying to tackle this problem, but the initiative which India has taken is really incredible. What I want to know is that what are the barriers or challenges do you foresee in adoption of ONDC? That is one, this is a question which I had for you.
While the ONDC concept and protocol will give equal opportunity to everybody big and small, and we expect equal participation, the challenge that we will have to face is that the many small and micro enterprises and so on and so forth may not have the advantage of taking, exploiting the solution so fast. So while to make sure this theoretical opportunity is practically there at the whole level to reach that ultimate vision, there has to be a lot of digital education, digital literacy to be built up, a lot of solutions to be made available to handhold small and medium enterprises and so on and so forth. Only then they can actually make use of it. That's why we need to have friends and relatives and who will work in that. In that case, I am extremely thankful for Suresh and Prutyan, because he understands this complementary role that has to be there for ONDC, and he is one of the many leading institutions which has taken this view of providing these kind of SDK solutions, ready-made solutions, hand-holding, training, and the variety of things to essentially empower larger cross-section of sellers, merchants, and buyers to participate. And that is going to be a journey. So while the first part of creating protocol is the relatively easier one, this journey is going to be the most arduous, and it can only happen only with very active participation for a broad cross-section of people.
Koshi, I'll just add to what you were saying. I think two parts to it to add to what we just heard. I think one is going to be the entire journey of adoption. So naturally, the consumers getting comfortable, they building the trust in the ecosystem. That is going to be one part of the challenge. But I see a huge opportunity for all of us here, because each part of the journey today needs some level of assistance. And as you are looking at democratizing and looking at the last mile guy becoming included into this ecosystem, technology and digital can play a huge role in enabling them. And as Koshi called out in the last answer, I think our ability to give simple, small solutions to them to enable parts of their journey of adoption and integration into ONDC is going to be very critical. So I think as a fintech industry, we all have a role to play in enabling this.
Hi, Koshi, Rohit here. Rohit Krishna. I wanted to know, let's say we get of the 60 million MSMEs, let's say we get about 20% on the platform. Still, as a consumer, when I am searching for something, there has to be a visualization layer of how will ONDC visualize the 300 possible merchants who can supply that particular good that I want or service that I want. How are you solving for this? Because this is where the core of democratization and fairness quotient lies. How does one merchant get prioritized over the other?
Okay, first and foremost, ONDC doesn't do anything. It's a buyer platform, diverse buyer platform that will do. Let's go a little deeper. There are 1 billion consumers in the country, different hues and cries, different taste, different specialization, different priorities. So, as I told you earlier, the buying platforms that may come up will be trying to help the buyer to make the ideal choice. So you would see specialization happening here too. There could be some buying platform who might be catering to some particular segment with some particular taste and SLAs and qualities and preference and so on and so forth. It will help the buyer to sort, filter, use AI, use ML to focus on what he needs. Today, one of the biggest challenges that you are alluding to was that very often many of the platform has an incentive because of the association that he have with the sellers to prioritize something, not what ideally that is fair to the consumer. In tomorrow's world, when the buyer application is only loyal to the buyers, and he doesn't even know where the seller is coming from, he will have to take an extra effort to help the buyer to make the right choice. Based on price, it could be based on location, it could be based on rating, it could be based on specifications and so on and so forth. So it is theoretically possible that there could be very many options for the same product, but when you try to filter it this way, it really comes down. And the priority of the buyer application is to help the buyers to do this, not to push anything. I mean, that's what we today do too. Let's say, for example, sometimes based on what type of buyer I am, I may be going to Big Bazaar or I may be going to the street shop. Doesn't matter. But each place, there will be certain, and the person, I mean, if you are a friend with you to help you buy the thing, will help you to buy the most appropriate thing. And that's the kind of specialization and innovation the buyer application would come. It is not just a blind listing of some 300,000 products, because it's of no use to the buyer. Today, one challenge that is there, while some of them will help you to filter, but that filter is a biased filter. So what we are saying is same or better filters and algorithm would come with no bias to the seller, but to the bias to the buyer.
Understood. Thank you.
I think it's time up.
Thank you so much.
Thank you so much. I'm going to request both of you to please come together for a quick photograph as well. And thank you so much again for that insightful session and also those wonderful questions that we managed to gather from the audience. So if I could request you to please be on stage so that the lights are optimally utilized and our photographers will be able to capture this Kodak moment. Thank you once again. On that insightful note, let's quickly march ahead because up next we have none other than Girish Krishnan, Director Rewards and Merchant Services, Amazon Pay, who will be talking about the Amazon Pay Smart Stores. So it's going to be another very enlightening session for all of us as we look at Amazon Pay Smart Stores, wherein we let the customers experience the future of shopping. So I'd like to invite Girish Krishnan to please come on stage for our next session on Amazon Pay Smart Stores. And just a humble request, if everyone could please take your seats so that our next speaker can also begin his presentation. And as for those who are already sort of still standing, I'm going to request you to please take your seats. We have with us our next speaker, Mr. Girish Krishnan. I'd like to humbly request everyone to please take your seats, as our next presenter is already set to make his presentation. A humble request to everybody, please take your seats. Thank you.
Good afternoon. Thank you everyone for being here. So my name is Girish. I'm Director at Amazon Pay, managing rewards and merchant services. I'm really excited to be here talking to all of you about smart stores. So let's get into it right away. What smart stores? Smart stores is Amazon's Pay's endeavor to make offline shopping affordable, convenient, and trusted. As some of you might have already known, at Amazon Pay, our vision is to simplify daily lives and fulfill aspirations of every Indian by solving their payment and financial needs. Now, as we do that, Smart Stores is the first of its kind program which we have built to solve offline shoppers' problems and offline merchants' problems. Now, Smart Stores for customers is our opportunity to reimagine how shopping happens offline, right? We have built it to complement the assisted shopping experience the customers love at their local retailer, where they can touch, feel, demo the item, get convinced that it's the right product by talking to the salesperson, check out, compare products in the stores, and some of them also, in conjunction with what they see in digital environment, compare them together, discuss the offers, the prices, and then make the payment and pick up the item and leave immediately. That instant gratification is what a lot of customers seek. For merchants, smart stores enable them to market their services to the nearby customers, get a lot of footfalls to their stores, and then the entire suite allows them to actually offer the best in-store experience to their customers, and thereby getting higher footfalls, higher conversion, and higher sales. So before we talk about the intuition behind smart stores and the research that went behind it, I'd like to kind of play a video so that you guys get an idea of the experience. Can you please play the video, please? Can someone play the video?
With the launch of Amazon Pay Smart Store, your customers will experience a unique in-store shopping experience. As a seller, you need to ensure that they understand this amazing purchasing experience with ease. And for that, you need to know what exactly are the benefits for your customers. Amazon Pay Smart Stores can help you give your customers a comprehensive digital storefront experience with contactless payment options like EMI and bank offers, along with exciting Amazon Pay offers and rewards. Exciting, right? So how does this work? As a customer, once you visit the store outlet, open your Amazon app. Tap on the scan option and scan the QR code at the store outlet. You can now discover ongoing Smart Store offers on the app. Select and evaluate the product you wish to buy. With an in-store purchase, you can get some exciting offers and exclusive Amazon Pay cashback. Enter the final price to be paid for the product and proceed to pay. You can pay using credit or debit cards, UPI, net banking, Amazon Pay balance, or even through Amazon Pay Later option. You can also avail EMI option by using credit card, debit card, and Amazon Pay Later by selecting the tenure. Enter the OTP and it's done. You will receive a thank you page along with some exciting follow-up offers which can be redeemed for your excess repurchase in the store. You also get an instant cashback in your Amazon Pay account. That's it. Now you can collect your product and you are done. You also get an email with the digital invoice. So, transform your store's shopping experience with Amazon Pay. Reach out to us to know more.
Thank you. So let's quickly explore the intuition, the background behind this product. So as we were building out Amazon Pay, one of the things we were thinking was, what are some of the ideas that allows us to solve problems which are deep enough and which can impact customers and merchants' lives in a meaningful fashion, and thereby drive preference for Amazon Pay. As we were exploring that route, 3 or 4 interesting insights struck us. One is digital payments is growing. And again, all of you know this, there's no point talking about it in a FinTech fest, but still, right, this is not just a tier 1 city phenomenon. We are seeing digital payments aided by, the convenience and trust digital currencies and payments are offering compared to cash, driving more and more customers adopting digital. Now, what this is doing is these digitally savvy customers are now going to shops and they are demanding similar services from the merchant. This starts accelerating the digital adoption of the merchants. And therein lies a big opportunity to kind of help them with technology and accelerate that further. The other thing is the whole customer choice. Now, when we did a research, we found that in a lot of categories, in spite of e-commerce evolution, customers still like kind of going to the retailer, local retailer, and then making the offline shopping. And this is a large variety of customers, especially in very high ASP categories. And again, a lot of categories where the impulse purchase doesn't really kick in, where you need kind of an involved purchase. Now, that customer choice needs to be respected because that is how customers want to pay. And at Amazon Pay, we said this customer's choice allows us to then understand what those customers really want. Because if you want to really respect the choice, then we have to understand the problems they face. And if we are able to solve that deeply, then we will create value for them. So that led to an exploration where we then did a detailed research in terms of what are these problems faced by offline shoppers. And broadly, we could classify them into 5 buckets. Starting with discovery. If you want to buy a TV, right, a lot of people start searching online and seeing where do I buy the TV. And if you want a local retailer, right, it's still very difficult to find out which is the local retailer near my house where I can go and actually can get the best value and really get a good shopping experience. Second is transparency. While assisted shopping experience aided by a salesperson is great, in a lot of cases, there is some information people want more than what they get over there. For example, okay, this product looks great, but what did other people who bought the product feel like? Can I read the reviews and ratings? And therein, what we found was very interesting. More than 75% of these people in the store actually looked up an online review or rating and a price to validate whether the information they are getting in the store is correct. So aiding the in-store purchase with additional information was really an interesting and unmet need. The third is affordability. We know that getting credit is still difficult in India. And a lot of bank and brand offers which you get online are not available offline. Getting credit easily is still difficult in the offline store. And as it's improving a lot, but still there is a lot of value if you can accelerate that. Then comes the payment experience, right? Still a lot of payments fail. And in a lot of these stores, you will find that there are proprietary machines which don't accept all the cards you have. So if we could provide a payment experience which is failure resistant, very low latency, and then can accept the widest range of payment instruments where all kinds of offers apply, that's a big value add the offline shopper needs. Last is value-added services. So in a lot of cases, suppose you're buying a TV, post-order purchases is still a problem, right? So you buy an insurance or a warranty, at least I can't find a lot of paper which I have like got from local retailer. Hence, like being able to manage this seamlessly in an app, or even purchasing some of them, renewing some of them, being able to have it handy at the time of the need was an important problem offline shoppers face. So we said these are very hard problems in the offline space which has not been solved. If we can solve that, then we said, we can actually provide customers the best of both worlds. The positives they see in the offline, which is basically ability to go to a store, touch, feel, demo the item, right? Get convinced, ability to kind of negotiate the price. They innate trust the local retailer. They know that if there's a problem, they can still go there. That assurance is there, right? And of course, they can get it instantly. That instant gratification is there. Those are the pros. In addition, if you can solve the discovery problem, right? What if we are able to aid the customer additional information, like you saw in the video, right? About the store, the product, the reviews, the ratings, provide them all kinds of additional transparency in terms of whether it is like, specific features, product comparison. In fact, help the promoter give better information, to the customer at the time of purchase. Then like give the entire affordability suite, again, solve the payments problem, and then solve the value-add problem. That's like the best of the both worlds, especially for a customer whose innate choice is still offline. Now, the Smart Store value proposition attacks each one of those problems. So in terms of discovery, we saw that you could discover the store by scanning a QR code. What we've done on top of it is you can actually search for the store on the Amazon app and find out for different categories, the local retailers present around you. Now, these stores are just digital storefronts, right, where there's no inventory and where the merchant can promote his own store branding so that customers, and there are 100 million or 10 crore Amazon customers who use that app with the payment instrument stored. Now, your store is discoverable for them. So the footfall from the nearby customers is an important benefit merchants get by adopting smart stores. Transparency, so we talked about how customers like the assisted shopping experience in the store. Now, we have built it so that it complements that experience. In addition to what the salesperson gives you information, you can now check the second screen, your mobile screen, to get reviews, ratings, price comparison, all that stuff, but within the, the walled garden of that store, so that you are not distracted by online. Still, you're focused in the same store, right? So again, today there are a lot of offers which run, but again, transparency of information, being able to see all of them at the same place, being able to compare them and make a choice is missing for the customer right now, and Smart Stores solves that problem. Affordability, so again, Amazon Pay offers the widest range of payment instruments, and then you can easily get EMI with any of the instruments you have. In addition, we provide the widest range of offers. We've tied with pretty much all the banks and financial institutions on the Amazon Pay checkout. The same offers you get online now are available in a smart store offline. Amazon Pay Later, right? We have more than 40 lakh customers who've got Pay Later, so they can get instant credit any store they go. Amazon Pay ICICI card offers a 2% unlimited cashback rewards wherever you shop in the offline stores. So today there are more than 30 lakh customers who have ICICI Amazon Pay credit card. So now they can go and use that card in any of the smart stores. Payment experience, of course, we have there's the same experience which powers Amazon.in, 15,000 plus online merchants, 8.5 million plus offline stores. Now the same payment experience which people trust, they have saved their cards in it. These are more than 100 million, 10 crore people who have saved the cards. The same experience you're going to get in a smart store. Then finally, value-added services. You can actually buy insurance warranty right there in the store on the Amazon app. And the second thing is you even get a digital invoice, so you don't need to look for paperwork later if you have a problem with the product. It's so easy for you to access that, and then everything is in the same app. So those are kind of the 5 pillars and what the value we are providing, and what's been the impact. So we started this in 2020, and in the last 2 years, we've been able to solve some of the problems. We wouldn't say all of it, and we are seeing really good results. So it's been deployed in 18,000 stores across the country, and merchants are seeing higher footfalls, higher conversion, higher sales. And we talked about the intuition behind it, like there are more than 10 crore people who have the Amazon app installed. Now they are for discovering these stores, going there and making these purchases. So these stores are seeing anywhere between 15–20% increase in sales. The 10% new customers coming because of the Amazon app. There's a larger ecosystem in play, so we also go and talk to the brands. There is integration of the brands to prevent abuse and fraud, where we know that there is a genuine item being sold in a store. And of course, the bank partnerships allow the banks to also participate in it, help customers with card activation and engagement. So the entire ecosystem of customers, merchants, brands, and banks, all of them benefit with smart stores. And in terms of customer satisfaction, more than 90% of customers who have shopped in a smart store said that they would like to return to a similar experience the next time they want to shop. So to close it out, what's ahead for smart stores? So we are very excited to see the progress till now. And what we have seen is whenever we are able to solve a customer and a merchant problem deeply and they are able to show value to these stakeholders, there is a lot of adoption. So we want to continue in the same vein and say across categories, we want to offer the best in-store shopping experience for customers. So we want to preserve the customer choice. So the offline shopping preferring customer, we want to give them the choice and the best in-store experience using smart stores. So we're going to improve across all those 5 pillars we talked about. So discovery, we're going to work on proximity-based discovery. So as you're close to the store, you will basically get notified and your app will provide access to the offline merchants catalog, and you can actually go to the store and buy. In terms of transparency, we will encourage the promoter to get more information and also give better comparisons, tools in the hands of customer to make more informed choice when they are in the store. In terms of affordability, of course, we will enhance the affordability suite we have with like easier credit, more wider choices for the customers. Instant bank discounts, we are enabling it in the next 30 days. Payment experience, we are again testing with proximity-based payments, right? Like there's a lot of innovation to be done in the digital experience, especially on payments. And the last is value-added services. So by category, there are a lot of value-added services which you can offer. For example, installation, brand warranty, right? Post-order repair. A lot of these services can really enhance the customer experience. And depending upon the category, we can customize the experience in the store. So there's a lot to do here, and we feel and we are very excited to be in this space where we can really create value for the customer. And lastly, for the merchants, we really want to empower offline stores to succeed. The early results are exciting, but we think we can do much more. So we want to provide tools and services wherein they can provide the best experience for the customers who visit their stores. We are going to give them marketing tools so they can get rewards, reward coupons they can issue in the nearby area, get customers into their stores. They can drive footfalls. In addition to that, they will continue to get more and more affordability options for the customers, as well as more tools to kind of improve their promoter experience in the stores. So the ultimate objective here is to help customers and merchants and make the offline experience best in class through smart stores. So that's all what I had. Thank you. Now I think if anybody has any questions, happy to take that. Can somebody give a mic?
Hello. Hi, Girish. This is Saurabh from Airtel Payments Bank. Just wanted to understand how is this Amazon Smart Stores aligned with the ONDC network of Government of India?
So I know you probably sat through the previous session as well. So I think that's a separate topic. I think in the case of smart stores, I think what we can say is we are going deep into a customer and a merchant problem from an Amazon Pay perspective and solving it deeply, right? A lot of these problems, as you saw, are really hard to solve, and they require very dedicated focus and attention. And we at Amazon Pay work customer backwards. We dig deep into the problems of the customer, solve it, and in this case, the customer is both the end customer as well as the merchants. And these are really hard problems. And we go deep, solve that, create a moment of delight, and post that it's all about gaining their trust and then keeping it on, right? Like, so that's like the perspective we are having. And as a product builder, that's what drives me and my team. So the ONDC, et cetera, is like a larger, it's a vantage point at a much larger level. So I'll kind of reserve the comments on that and leave it to the experts. This particular problem, we are actually very excited about like the value we're creating. And I think there is business value in terms of, creating that for our customers and merchants.
Yeah, hi. Just wanted to understand how does the economics work for Amazon Pay in this scenario? I mean, considering that a lot of these retailers are open to using UPI as a payment instrument, which is zero MDR. If Amazon Pay comes in, are they willing to pay a certain price for it, or how do you take that hurdle away on the economic side?
That's a really good question. See, ultimately, all of these are hinged on a couple of, basic principles. It's about giving choice, reducing friction, and creating value. And I think we have seen this multiple times. Whenever we work customer backwards and create real value for our partners, they're willing to pay for it. Prime is a great example of that, right? Like, so you really go deep and solve the problem and create value and gain the partner's trust. That is when I think that makes sense as a business. So we are still in early stages of smart stores, but what we are seeing is we are able to create value for all the parties in the ecosystem, right? Like starting with being able to help the customers discover the stores, sending those customers to the store over there, and that's like real value. Once they reach the store, helping the customer and the merchant to arrive at the purchase decision, really, with an informed choice, that is really value. Then providing a host of digital payment instruments, right? So the the merchant doesn't even need an EDC device because the entire suite of instruments can be accepted in the store. And then we are providing a suite of instruments, starting with Amazon Pay UPI, Amazon Pay Balance, Amazon Pay Later, Amazon Pay ICICI card. In addition to that, the suite of you can use any bank credit card, debit card over there, and EMIs. Again, there is value. Again, when you look at like post-order, right, there is a host of value-added services. There's insurance, there's warranty, there's installation, a whole lot of services which customer and merchant value and creates like a definite impact on the experience. So all of these are value-adding things which we are doing with smart stores. And what we are seeing is that is leading to a significant growth in the output these merchants get, and it's leading to a delta output in the satisfaction the customers get. So that should be worth something. So it's going to take some time for us to perfect this across categories, but I think we are not really looking at like, profitability, et cetera, at this point in time. But the core tenet is that whenever you create value at that level, right, there is definitely going to be partners interested to kind of adopt that.
Hey, wanted to check how do you feel consumer financing, or let's say Amazon Pay Later, create value for consumers in the smart stores?
Can you just repeat the question?
Yeah, so I'm saying consumer financing, or let's say Amazon Pay Later, how is it able to create value for consumers choosing to use smart store concept at the retail
So
outlets?
with Amazon Pay Later, you get an instant line of credit, right? And so you can go to a store. So you're already qualified for credit. You get a line from Amazon, right? Like, so these are, if you use Amazon Pay in any merchant today, right? Like could be Amazon.in as a marketplace, or a lot of online merchants are there, right? And if you look at like a Swiggy or any other merchant who uses the Amazon Pay checkout, you will see the Amazon Pay Later line over there. So you can click on that, and then, you don't need to pay there. You get an instant line of credit, which you can settle it to the next month. So if you're going to a local Kirana store or a grocery store, or in this case, any store, for example, you're buying a TV or a grocery or, apparel, you can just like buy whatever you want, use the Amazon Pay later line, and then you get like a 1-month credit, which makes it much more affordable to you. And that's like a win-win for all, right? Like so, there is a serious affordability over there with Amazon Pay Later, and we have more than 40 lakh customers who are now walking to these stores with that line, and that just like boosts sales for the merchant, and there is immediate value for the customer.
Hey, hi, this is Priyanka. I have, I wanted to understand from consumer behavior, what is the biggest friction and what is the biggest motivator? Because you're putting a QR and they are used to use QR with a PSP apps. So I just wanted to understand how, do you find that as a friction?
So the QR is a means of discovery in this case. And like QR, as you know, has different uses, right? Like today, of course, the most ubiquitous use is for UPI payments. But QR itself can be used for discovery, and a lot of countries use it very, popularly, like, very, very prominently. The second thing is there is a discovery aspect from the app itself. So if you have decided to shop in a particular category, the Smart Store experience allows you to quickly find out the set of local retailers around the place you are. So I think from a discovery perspective, at least what we have seen is customers, and essentially there are, like I said, 10 crore plus Amazon customers who have the app. They are liking the fact that they can discover the local retailer, and that's like the primary thing from the app. Second is when they go to the store, they are primed to kind of use the QR for this navigation purpose. So those customers understand the use of the QR, and they are able to effectively use it. And in some cases, it's again like, the promoter also knows, because he or she has seen a lot of customers come into the store, use it. So they kind of collaborate and, enrich the customer experience, make it like a much more informative, purchase at the end of it. So, and then that's when we look at an NPS score out of it. More than 90% of the customers, when they get that informed purchase with the best offers, easy credit, and valued services, they rate this experience quite high. So that gives a lot of confidence that, because the customer is allowing us, one thing we know is that whenever customers love, they tend to repeat it. So those customers are actually looking forward to visit the Smart Store, any other Smart Store, for the next purchase. So that's like the key insight, we are banking on. I hope that answered the question. I think we are run out of time. Thanks a lot for, giving this audience and attention, and, enjoy the rest of the sessions. Thank you.
Thank you very much, Girish. And I do see that there are a couple of hands also up in the air. I'm going to request you to please connect with Girish offline as well in case of any further queries. That being said, our next session on the hackathon announcements that's about to be shared will commence in the next 5 minutes. So I'm going to request everyone to please take your seats, and we'll get the next session started into the next 5 minutes. That's a plan. I'm going to request everyone, please take your seats. Thank you. All right, ladies and gentlemen, we're about to get started with our next session, and we kindly request everyone to please take your seats. Once again, we request all of you to kindly keep your mobile phones on the silent mode. Thank you. Ladies and gentlemen, the Honorable Governor, Reserve Bank of India, Shri Shaktikanta Das, will be joining us shortly. So we kindly request everyone to please take your seats. And once again, a humble request to please keep your mobile phones on the silent mode. Thank you. Ladies and gentlemen, we kindly request everyone to take your seats. And we'd like to inform all our esteemed dignitaries, all our delegates of the evening, that we have the august presence of the Honorable Governor, Reserve Bank of India, Shri Shaktikanta Das. Please put your hands together to please help me welcome Shri Shaktikanta Das on the dais. And if I may also please extend a warm welcome to Shri Chris Gopal Krishnan, Chairman, GFF 2022 Advisory Board. Thank you very much, sir, for joining us this evening, and thank you very much for your valuable presence. With that, I'd like to invite Mr. Chris Gopal Krishnan to please share his words with the august gathering.
Sri Shaktikant Das, Governor, Reserve Bank of India, friends. When we met Sri Shaktikant Das for inviting him for this event, he readily agreed, and he also said that Reserve Bank of India will support the Global Fintech Festival. So I want to start off by thanking him for that. And clearly, this is an example of how all the ecosystem players, regulator, government, you had seen the government participation in today's event, as well as industry, come together to take our common dream of becoming a $10 trillion economy, becoming a leading economy in the world happen. How together we will do this. In this, the Reserve Bank of India has a very unique role to play. It has been playing that role very well, and will continue, I believe, to play that role. The role is about balancing innovation with regulation. Going to 10 trillion will require existing businesses to grow rapidly, will require several new businesses to be created, several new innovative businesses to be created, several new business models to be experimented and created. And it's important to understand these. Sometimes it takes time for us to figure this out. It's important in the context of a developing country, a low-income country like India with a population of 1.4 billion. Because ultimately it's all about trust that citizens will have in the system, trust in the entire ecosystem, that is, trust in government, trust in regulator, and most important, trust in industry. And together, that's what I believe we need to create. And there is a role for the regulator, but there's a role for the industry also here to make sure that that trust is secure and that trust grows over time. So with that very brief introduction, let me now invite Sri Shaktikant Das ji to share his thoughts on this occasion. And I believe that he will also talk about some of these points. Thank you very much. So please.
Yeah, I think it's okay now. There's a little bit of echo in the hall, but I guess you will be able to listen to whatever I'm saying or not saying, because sometimes the regulator also doesn't say many things but conveys it. So I'm sure you will be able to. You'll be able to get the sense of it. Chris Gopal Krishnan, distinguished participants, members of the audience, members from the media, and all the leading representatives and participants, big or small, that is irrelevant, from the fintech sector. I'm delighted to be here today in the third edition of the Global Fintech Festival. I would like to congratulate the organizers, in particular the National Payment Corporation of India, the NPCI, the Fintech Convergence Council, FCC, and the Payment Council of India, PCI, for organizing this event. The theme of the event, creating a sustainable financial world, is very relevant in current times. As Mr. Gopal Krishnan said, the representatives of all these three organizations, they met me. I was extremely delighted to hear that, after 2 years hiatus, after 2 years gap, you were able to organize this. And it is indeed timely because, especially during this pandemic period, it's technology, it is innovation, it is fintech, which ensured that as a country, the economy, the financial markets, and all activities, continued as usual, despite the hugely disrupting impact of the COVID-19 pandemic. In recent years, India has witnessed, as all of you would be very much aware, India has witnessed rapid progress in financial services sector. Technology, innovation, and fintech are working in tandem and contributing to the dynamism of this sector. In our journey towards higher levels of sustainable development and financial inclusion, these forces have morphed into force multipliers. We have leveraged a lot on these forces. We need to leverage even more. In fact, the theme I have chosen for my address today is fintech as a force multiplier, because we see a lot of opportunities not only for enhancing the scope, enhancing the the width and the depth of all that is happening in the fintech sector, but the way it can deepen financial inclusion, the way it can enhance and broad base its footprint in the journey of our country towards 2047. I think there is a lot of potential, and together, if all of us, that is the regulator and the fintech players, if we work together, I think we can create several milestones in our journey towards India at 2047. Let me now get down to the specifics. There has been exponential growth of technological enablers in India. Telecom penetration, availability of internet services, adoption of technology in facilitating access to credit, more efficient payment systems, and deepening of financial inclusion have made significant progress and are continuing to progress further. The total number of these numbers are known, but to put things in perspective, let me again reiterate, the total number of broadband internet users in India stood at 80.7 crore at the end of July 2022. Similarly, with more than 46.5 crore Jandhan accounts, 134 Aadhaar enrollments, and 120 crore mobile connections, new opportunities are opening up for implementing innovative ways of integrating and delivering the various types of services. This can be gauged from the emergence of 100 unicorns in the country, with a record of 44 unicorns established only during last year. For any society aspiring to grow faster, its financial institutions must be robust, efficient, and accessible. The next decade of finance will be more focused on two central themes. One, sustainable development, and two, technology-led innovations transforming the lives of the common people. Therefore, sustainable development, and ensuring a resilient financial system, they form the fulcrum for our policy architecture. As we have all witnessed, technology has been central to the resilience in the face of COVID-19 pandemic, particularly during the lockdowns imposed around the world, not just in India, but in several countries of the world. As you are aware, the degree of lockdown varied, but almost every country saw various forms and degrees of lockdowns. It has also been, that is, technology has also been central to our response to the crisis and in supporting recovery. Technology coupled with finance safeguarded the economies by ensuring seamless disbursal of loans, robust 24/7 payment systems, access to financial markets, insurance, MSME credit, pension services, and direct benefit transfers. As per the World Bank, at least 58 governments in developing countries alone have used digital payments to deliver COVID-19 relief to their citizens. The scale of operations in this regard in India was, however, much larger and much wider compared to most of the other countries, in fact, compared to all the other countries. The Global Findex Database 2021 reported a significant increase in financial inclusion around the world. Around the world, and especially in, around the world. In developing countries, 71% of people have bank accounts, up from 42% a decade ago. Approximately 40% of people who made a digital payment from their account to a merchant or to a utility service did so for the first time since the start of the COVID-19 pandemic. In India, the pandemic accelerated the push towards digitalization, especially in the rural areas. The period from March 2020 to August 2022, that is March of, when the COVID began in 2020, from March till August this year, this period has seen a massive growth of 427% in UPI transactions alone, which reached a new high of 657 crore transactions in August 2022 alone. The number of UPI QR code enabled payment acceptance points increased by about 9 crore, which constitutes about 86% year on year, to reach 20 crore at the end of July 2022, reflecting the growing acceptance and preference for contactless payments. I would now like to touch upon some of the innovations in our financial sector. These are areas where the RBI in some way or the other has been directly or rather closely associated with. The financial services industry in India has seen enormous transformation. Products like internet and mobile banking, electronic funds transfer, UPI, Aadhaar KYC, Bharat Bill Payment System, BBPS, QR scan and pay, digital prepaid instruments, and similar other initiatives have transformed the traditional banking operations. Banking hours have indeed been transcended. We now have digital, mobile, anywhere, anytime banking in our country. While several initiatives originated from the industry, the government and the regulators have created an enabling ecosystem to promote the fintech sector in the country. Initiatives like the Startup India, Digital India, the India Stack, account aggregators, peer-to-peer, that is P2P lending platforms, and 24/7 digital payment systems have proved to be key enablers in all these initiatives. The fintech ecosystem in India has indeed evolved and is poised for a giant leap. Let me now touch upon some of the other initiatives taken specifically by the Reserve Bank in this area. The regulatory sandbox framework was released in August 2019 with a view to foster innovation. With this, the Reserve Bank entered the select group of countries that have their very own regulatory sandbox ecosystem. After 4 theme-based cohorts on retail payments, number 1, cross-border payments, number 2, MSME lending, number 3, and prevention of financial frauds, number 4, a theme neutral 5th cohort was announced earlier this month. So that means it is theme neutral, it is open, and it is for the participants, the fintech players, to come with their original idea, whichever be the space. Earlier we were prescribing the cohort that we would like to have some initiatives in, let us say, in MSME sector and the like. Now it is open. So it's, if anybody has a new idea and works to work on a new product in a regulated, regulated environment, please approach the Reserve Bank, and our teams will examine your proposal and we will see how best we can carry it forward. So this theme, theme neutral 5th cohort has actually expanded the scope of the regulatory sandbox activity that we initiated in 2019. Now it reflects the Reserve Bank's keen desire to increase the footprint of innovation in the entire fintech space. The success stories emanating from our regulatory sandbox initiative include, among several other initiatives, they include the framework for facilitating small value digital payments in offline mode and the recently launched UPI 123 Pay, which was aimed at enhancing digital financial inclusion by enabling over 40 crore feature phone users to access the benefits of UPI in a safe and secure manner. The Reserve Bank, similarly, another initiative, the Reserve Bank for the first time organized a global hackathon titled Harbinger 2021 with a view to make retail payments more innovative. This witnessed very enthusiastic response. We received totally 363 proposals, including 22 from abroad, from countries like the United States and the United Kingdom. So 363 minus 22, the rest were responses received from players who are located within India. Now this exercise indeed gave us a glimpse of the creative talent pool that India possesses and reinforced our belief that India is well positioned to provide leadership in the fintech space. I understand that the winners of Harbinger 2021, all of them, or at least some of them, are also participating in this global fintech festival to further showcase their creativity and talent. More recently, the Reserve Bank has set up the Reserve Bank Innovation Hub as a subsidiary in Bengaluru. The hub has an eminent board of directors drawn from the private sector and domain experts. You may be aware that Gopal Krishnan is chairing the board of directors, and we have other experts and players from the domain experts from the private sector. The Reserve Bank is just playing a facilitating role, and it is entirely left, there is complete autonomy so far as the functioning of the Innovation Hub is concerned. The RBI, the Reserve Bank Innovation Hub, is currently undertaking several important projects. I am confident that going forward, this Innovation Hub will benchmark itself as a center of excellence. They have developed one particular product or a process. I will come to it a little later during the course of my speech today. We have also created a new fintech department within the Reserve Bank from January this year to have focused attention, to give focused attention to this evolving and dynamic sector. The objective of this department is not only to promote innovation, but also to identify the associated challenges and opportunities and address them in a timely manner. All matters relating to facilitation of constructive innovations and incubations in the fintech space with wider implications for the financial sector and the markets are being dealt with by this department in addition to regulatory issues, interregulatory issues, and international cooperation. Further, as you would be aware, the Reserve Bank is now working on the central bank digital currency, and we are working towards having a phased implementation of the CBDCs, both in the wholesale and in the retail segments. We propose to first try it out in the wholesale segment before we move and before we enter into the retail segments, but the pilots will be carried out. In fact, it will be a pilot is not the right word, but it's a kind of a phased implementation that we are looking at. Now, this is expected to give further fillip to the digital ecosystem in our country. Now, having just explained briefly the various initiatives that the Reserve Bank has taken, let me now focus on Fintech, the road ahead so far as Fintech is concerned. It is known that, it is very well known that Fintechs contribute to enhance efficiency in terms of service delivery and in bringing down costs. Through their customized products and customer interfaces, they provide an enriching and seamless consumer experience. They also have the potential to improve market access and a range of product offerings, apart from improving access to credit and financial inclusion in the traditionally unserved or underserved segments. In India, one of the most transformative roles that can be played by Fintech is in the area of credit delivery, in partnership with the traditional lenders, especially in the rural and semi-urban areas. Timely availability of credit at reasonable cost, especially for agriculture and allied activities and MSMEs, is very crucial for our economic growth. One of the key challenges currently associated with availment of such credit is that it's a largely paper-based process with high turnaround time. Sometimes it even requires multiple visits to branches of the banks. And it also requires at times several kinds of documentation, some of which can be cumbersome. Now, it also entails high operational costs for the lenders and opportunity cost for the borrowers, because a small farmer, every time he goes to a bank branch, obviously that particular day or that particular half a day or 2 hours or 3 hours, he's not able to work on his fields. So there is an opportunity cost from that limited point of view as well as from other point of view so far as the farmers are concerned. It also involves costs of various types to the lending institution. Now, considering these challenges and taking forward the Reserve Bank's Fintech initiatives, digitalization of agri-finance in India was ideated between the Reserve Bank and the Reserve Bank Innovation Hub. The idea was to enable frictionless delivery of Kisan credit card loans, that is KCC loans, in a paperless and hassle-free manner, and also reduce the turnaround time and avoid multiple visits to bank branches. I am happy to state that the Reserve Bank Innovation Hub has designed an end-to-end digital process. I repeat, the Reserve Bank Innovation Hub has designed an end-to-end digital process for seamless and quick access to rural credit. A pilot project based on this innovation has been launched in Madhya Pradesh and Tamil Nadu yesterday in partnership with the Union Bank and the Federal Bank respectively. For both new KYC loans, that is fresh KCC loans, for the new Kisan credit card based loans, as well as for renewal of such loans which had been sanctioned and disbursed earlier up to a threshold of rupees 1,60,000 per borrower. Going forward, based on the learnings from the pilot, the digitalization of KCC loans is proposed to be expanded to all districts of these two states, and not just that, but also to other states. It also depends a lot on the level of digitalization of the land records in various states. We are, the Reserve Bank and the Innovation Hub, we are in constant touch with various state governments, and there are other state governments also where the level of digitalization of land records is, it's in a very advanced and a very high level of, it has achieved excellent progress. So going forward, depending on the level of digitization, the digitalization of the land records of the states, depending on the success of these two pilots and depending on the learnings and the experience that we find in these two pilots, or if there are any loose ends or gaps, they have to be plugged. So depending on this experience, it will be expanded to the entire Madhya Pradesh, the states of Madhya Pradesh and Tamil Nadu, and also to other states. Eventually, our desire is to develop and operationalize an integrated and standardized technological platform to facilitate frictionless credit to all the segments of society for the whole country, with special emphasis on rural and agricultural credit. And let me say that if we can do this in the next 1 year, which we hope to do, it would be a major milestone in India's growth story and journey towards India at 2047. Another example of tech-enabled regulatory innovation by the Reserve Bank is the account aggregator framework. This is an important step towards realizing the potential of empowering millions of underserved customers to digitally access and share their financial data across institutions in a secure and efficient manner. The framework has been expanded, in the recent months, the framework has been expanded to include institutions regulated by the SEBI, the IRDAI, and the PFRDA. This is a progressive step to help customers gain control over their financial data and use it for accessing a variety of products, including credit, insurance, investments for their own benefit. Centralized KYC and video KYC are other enablers to facilitate seamless onboarding of customers in a digital and cost-effective manner. We are giving greater focus to these initiatives. The Reserve Bank is committed to take more such initiatives with the support of all stakeholders like you. In this endeavor and in collaboration with the stakeholders, 3 exciting new products are being launched later today, immediately after this particular event. That is, immediately after my address is over. Now, 2 of these pertain to enhancing the feature set of UPI by facilitating small value offline transactions through UPI Lite and linking credit cards to UPI. The third initiative is the enablement of cross-border inward bill payments using the Bharat Bill Payment System, that is the BBPS. Eventually, our desire is to, the emergence of fintech players, the emergence of fintech players and the growing popularity of their innovative products have challenged the existing players in the financial services in maintaining their market share, margins, and customer base. The incumbent firms are responding to these challenges by adopting various strategies which include making investments in fintech companies and also partnering with them. They are also enhancing their in-house capabilities to adapt to the new realities. A wave of changes brought about by the fintech companies have had a positive impact in terms of enhancing inclusion and further penetration of financial services. At the same time, these developments have also ushered in an era where enormous amount of consumer data is being generated and leveraged upon by a few entities, that is the so-called big techs, by virtue of their huge customer base. Such developments, while being very much welcome, they also raise concerns on concentration risk and potential spillovers as their level of engagement with the financial system strengthens in the years to come. Therefore, potential risks to public policy objectives of maintaining competition market and business conduct, operational resilience, data privacy, cybersecurity, and financial stability also need closer attention. As we have seen, the way digital lending has taken off in the recent past was phenomenal. While it has served the needs of various segments, it has also raised several concerns which manifested itself through spate of complaints regarding usurious interest rates, unethical recovery practices, and sometimes or quite often data privacy issues. The Reserve Bank has endeavored to address these issues proactively, and as early as June of 2020, regulatory guidance was provided to our regulated entities. Now, these guidance, among other things, mandated that digital lending platforms disclose the names of the banks or NBFCs upfront on whose behalf they were providing the credit. The recently issued regulatory guidelines on digital lending strive a well-considered balance between customer protection and business conduct on the one hand and supporting innovation on the other. Let me emphasize that while innovations are very much welcome, and I say it with all the emphasis at my command, that while innovations are very much welcome and the Reserve Bank will continue to be supportive of it and the Reserve Bank will welcome it, and we will in fact go 2 steps forward to discuss with you if you just come 1 step forward. But having said that, while all these are there and all these are a part of our agenda and our scheme of things and our thinking, now these innovations also must be responsible and should enhance the efficiency and resiliency of the financial system while benefiting the consumers. Robust internal product and service assurance frameworks, together with fair and transparent governance, will go a long way to safeguard the interest of the customers and ensure long-term sustainability of the fintech entities themselves. The level of due diligence and oversight exercised by the regulated entities on their outsourced activities need to be strengthened further. This would help in proactive mitigation of risks at the incipient stage itself. I would also like to flag certain material concerns regarding the unbridled mushrooming of digital lending apps. The need of the hour is to ensure assurance of safety after following a process of green lighting or whitelisting and due diligence by the regulated entities. The Reserve Bank, in associated with other relevant agencies, is taking steps to address this issue and take further steps as may be necessary. As we continue to support technological advancement and innovation, it is equally important that adequate attention is also placed on governance and conduct issues. I have already touched upon it, but just I want to add once again that at the end of the day, I want to emphasize that at the end of the day, sustainability of any fintech activity or business is about enhanced customer protection, better cybersecurity and resilience, managing financial integrity, and strong data protection. I wish to assure, and I just said this a little while ago, I wish to assure all of you, the fintech community, that the Reserve Bank will continue to encourage and support innovation. At the same time, we should expect the ecosystem to pay attention to governance, business conduct, regulatory compliance, and risk mitigation frameworks. The fintech road ahead will witness ever-growing traffic in addition to the existing players who are already there. It is therefore imperative that every player on this road follows the traffic rules for his or her own safety and the safety of the others. Let me now conclude by stating that a sustainable financial world is not just for us, it is for the future generations also. It is up to us how we want to move forward in this journey. The Reserve Bank's focus has always been on encouraging innovation by providing an enabling environment. Simultaneously, As the guardian of financial stability in the country, the Reserve Bank also remains watchful of any undue risk buildup and responds to them from time to time or as may be necessary. The fintech players like you, I am sure, will join us in this endeavor. With the amazing talent base that we have in India and the giant leaps we have taken in the digital and fintech space in recent years, I am confident that India is well poised to shape the future course in this area. As we set sail for a brighter future, I wish you all a safe and fulfilling journey ahead. Thank you very much.
Ladies and gentlemen, our Honorable Governor, Reserve Bank of India, Shri Shaktikanta Das, has also agreed to take a couple of questions from our members of the audience. So we're going to request you to please raise your hands and please keep your questions really brief. We'll have the mics quickly passed on so that we can have your questions and we can have Sir answer them as well. So any further questions, please raise your hands. Yes, we see a couple of hands. So could you please keep it raised? We'll just pass the mic to you. I also request you to please introduce yourself before directing your question.
Good evening, sir. I'm Sachin Bavri. I head the risk function in one of the LSPs. It's a Khata book. The entity name is ADJ Utility Apps. Sir, in context of the recent guidelines, digital lending guidelines specifically, for sure there are concerns upon transmission of risk, systemic risk, from reckless lending to regulated entities. And in that context, there were various measures that were announced there. One of them was the FLDG restraint. While, sir, the entire thought process intent is well appreciated, but I guess would you also tend to consider this to be a very harsh step where everybody is painted by the same brush in possibly adding to systemic risk, while quite a few of them may themselves be responsible and therefore not engage in reckless practices?
If I have understood correctly, you see this FLDG, what we have said in that first press release we issued is that it is under examination. We have not decided because the consultations are complete. There have been a lot of consultation. We have received a lot of stakeholder feedback also. But there were a few other issues which required much deeper examination within the RBI. So that is a separate exercise which is going on. And as and when we take a view, we will come out with that. But I'm not really able to, I would not agree with you that everybody is being painted in the same brush. I mean, there are regulated entities, there are unregulated entities. So there is a clear distinction between the two. Now, this is one area, this is an evolving area which has evolved over the last, several months or last maybe 2, 3, or 4 years. So now we have studied the entire sector. There was a committee, as you know, which was appointed. And all that we have done is that we have given the ground rules. Based on the ground rules, if anyone has a difficulty, you are always welcome to come and discuss with the Reserve Bank. We have subsequently issued first we issued a press release, which gave out the details of the scheme. Then we issued what we call a circular or a direction, whatever you call it. There we have taken into account some feedback we received. One major feedback was that the transition time would be required. So therefore, we have given some transition time of about 3 months. I think we gave up to November 30th, if I remember correctly. and we gave it out on 1st or 2nd September. So 3 months time we have given. So therefore, our intention is not to sort of, not to penalize anybody, not to stifle any activity. All that we are saying is that please follow the traffic rules. That's what I have said. And if there is any difficulty for anyone, please, you are welcome to sort of give your feedback, suggestion. We will definitely give it a look.
Thank you, sir.
On that note, we have room for just one last question. Yes, sir.
Hi, this is Mitesh here. I'm from Miss Call Pay. So they recently launched UPI 123 Pay, and sir, I was very fortunate that on the August event on 8th of March 2022, I was at your. So while I'm thanking you that you are giving a great push for UPI 123 Pay and feature phone payments, what I will also request is there any process where actually, because the cost of transactions at UPI 123 Pay is far exceeding the cost of transaction of traditional UPI, because of the telecom and other charges that are there. With the newly reform that is trying to come on 3rd of October, there is some suggestions on PIDF schemes and all that to bring new kind of subsidies. Is something planned for UPI 123 Pay as to a different kind of subsidies for people enabling payments in the rural India?
No, as you know, whatever subsidies and all that the government is giving, RBI doesn't give any subsidies, and surely the NPCI also cannot give, because it's a kind of it's a non-profit company, but it has to run on commercial lines. Now, any new product or any innovation in the initial months or in the initial years, obviously the costs will be more because your overheads are also loaded onto your costs. But going forward, as the volumes increase, I suppose things even out. But without knowing specifically what your problem is, I cannot really. In any case, subsidy is something which RBI doesn't give. But I really don't know your specific issues. We will discuss with the NPCI and see what is the exact issue. Maybe our department has already discussed with you. I will take a feedback and let's see what can be done about it. But let me clarify that the Reserve Bank does not give any subsidies.
On that note, ladies and gentlemen.
And also, any product has to be, the whole idea of innovation is that it has to, it has to be cost effective. So therefore, at the same time, the innovators also will have to see in what way the costs can be minimized. Because if you depend on subsidy for a perennially or for a long period, I think it's not a good thing. And as innovators, as players in the fintech space or digital space, I think you will know better that it has to be ultimately, at the end of the day, commercially self-sustaining.
On that note, ladies and gentlemen, once again, can we have a huge round of applause for Sri Shaktikanta Das for sharing his valuable words. And sir, I'm going to request you to remain on the stage as we will now be marching ahead with the NPCI launches. I'd like to thank Mr. Chris Gopalakrishnan. So thank you so much for joining us. With that, we'll also set the stage right now, ladies and gentlemen. And as we all know that the Reserve Bank this year in its monetary policy meeting decided to allow linking of credit cards to UPI, thereby providing additional convenience to the users and also enhance the scope of digital payments. This idea is now becoming a reality with our next agenda, ladies and gentlemen, which is where you'll actually be witnessing history in the making with the launches of much-awaited RuPay credit card on UPI, UPI Lite, and Bharat Bill Pay Inward cross-border bill payment solution. So on that amazing note, it is only befitting that I also invite Shri Bishwamohan Mahapatra, Chairman, National Payments Corporation of India, and Shri Nandan Nilekani, Non-Executive Chairman of Infosys and Advisor to NPCI, to please come on the stage. kindly request all of you to please take your seats. As a part of the NPCI launch, first up, ladies and gentlemen, we have with us Mr. Bishwamohan Mahapatra, who's a non-executive chairman of NPCI, a central banker with a career spanning over 33 years at the Reserve Bank of India and retired as its executive director in August 2014. As the executive director in RBI, he handled banking regulation and policy and was also instrumental in implementation of the Basel III regulations. He was also the faculty in the areas of banking regulation, supervision, and risk management. So to present the welcome address, may I humbly please invite Shri Bishwamohan Mahapatra. And can we have a huge round of applause one more time, ladies and gentlemen.
Good evening. Namaskar. On behalf of NPCI, I have the pleasure of extending a very warm and hearty welcome to Honorable Governor, Reserve Bank of India, Sri Satyakanta Das. He has been a constant source of inspiration and guidance for NPCI. If you see every monetary policy that he announces, he will include something for NPCI to push the envelope further so that NPCI really is on the toes and we work on different services and products to make the consumer's life more easy, more friendly, and more, of course, secure and sound. I am also grateful to Sri Nandan Nilekani to be present here today. I extend my warm and hearty welcome to him. He has been a constant strength to NPCI. He is our honorary advisor on innovation and public policy. So whatever NPCI does in this area, I mean, we have his blessings always. Thank you, sir. So today we have gathered here to launch 3 NPCI services which were announced by Governor in different which are announced in different monetary policy announcements. As I told you in the beginning, that Governor pushes the envelope further and further. So every time he'll announce, and we really appreciate that, and it keeps us on our toes, and we try to deliver on the promise at the shortest possible time. The 3 launches that we'll make in his august hands today. 1 is the RuPay credit card on UPI, 2 UPI Lite, and 3 BBPS on cross-border bill payments. A little bit about these 3 products. As you know, the RuPay credit card on UPI, if you use a credit card, more so if you go to rural and semi-urban areas, you don't find a POS machine so that you can use your card. Now, if the RuPay credit card runs on UPI Railroad, probably with the help of the UPI QR code, one can use the RuPay credit card and do the transactions. So this will ensure further penetration of the RuPay credit card into the rural and semi-urban areas and ensure financial inclusion. The second product or service that Governor is going to launch today is UPI Lite. As you know, UPI is a real-time retail payment system. By real-time, we really put a lot of pressure on the information technology system of the banks because the accounts are debited and credited on a real-time basis. And as you know, 50% of the transactions on UPI are for smaller values of less than 200 rupees. So if we can transfer or somehow manage to take this on a direct pressure on the bank's CVS system, probably the UPI will run more efficiently, there will be less number of transaction declines, and this also will be equally real time, but on a lighter mode, on the wallet itself, there will be UPI, so we call it UPI Lite. And third, but not the least, I mean, Indians are all over the world, and people are living in many countries, different countries. Their families may be here, the old parents may be here, their houses may be here, or they may be subscribing to some mutual fund, SIPs, or insurance premium, monthly premium or quarterly premium, whatever it may be. They'll be able to pay cross-border for these services through the railroads of the BBPS system. So cross-border payment will be enabled by this facility, this service. So all these, as I said, were announced by Governor in his policies in different points in time, not very far, maybe within 1 year's time, these were announced, and we are able to deliver it today, and it will be launched today. Governor said that in August, UPI transaction was 6.5 billion transactions in the month of August itself. Sir, our aspiration is to have 1 billion transactions in a single day. I mean, so we have set the goal very high so that NPCI can enable 1 billion transactions per day. And we know, we are very sure, with your support, with the ecosystem player support, with the bank support, and the TPAPs, Fintechs, and all of you, and the consumers, I mean, we'll be able to achieve this milestone. And the government, the RBI, the ecosystem players have all been supportive to NPCI in its journey. And we are a 12 years old organization, and we aspire very high, and with your blessings, we'll be able to achieve that. And sir, we now request you for the launching of these products. Okay, I think as for the program, I'll request Sri Nandan Nilatani to speak, then Governor will launch the programs and have his keynote address. Mr. Nandan Nilatani.
Honorable Governor of RBI, Shri Shaktikant Das Ji, Shri Mahapatra, Chairman NPCI, RBI CGM, Mr. Vasudevan, government officials present, and digital payment ecosystem partners. It's really great to be here. It's a very exciting time. And I think we are seeing the Indian digital payment journey being pushed to new boundaries. And I think we all agree that what has been achieved is phenomenal, nothing short of phenomenal. Now, it's difficult to imagine, but the idea of UPI is less than 10 years old. It was conceived around 2013. It was launched in 2016. And then, since then it has taken off dramatically over the last several years. And credit goes to all of you and to NPCI and most importantly to RBI, because I think RBI has become a world leader in combining regulation and innovation. And I think credit goes to Mr. Das. I think just before the pandemic, Mr. Das and I were in Basel at the meeting of BIS, where all the central bank governors were there, and they're all marveling at what India has done. So I think credit goes to RBI for showing the world how to combine regulation and innovation. So the great. And I can say, when I joined Aadhaar UIDAI as the chairman in 2009, the first phone call I got was from RBI, saying we want to use the ID for financial inclusion. So even the thinking has always been how to use technology well, and we have seen the revolution with Aadhaar, UPI, and now we are moving on to more things. And ever since 2014, the Prime Minister with the Digital India program has completely accelerated first the jam trinity of Jadhar and then mobile, and now the UPI penetration as we talked about. But I think this is just part of the journey. I think a few things that are coming which I think are very exciting. One is, of course, the account aggregator system, which RBI has championed. I think the account aggregator system is going to create its own set of revolutions. And once it's applied to credit and lending, it will make lending as simple as making a payment. And therefore, the whole lending will change. But at the same time, because it is all based on data, it will be much more sounder and risk-free. So even as we grow digital lending, applying account aggregator is just going to make it even more scalable. And I believe it will have a massive impact on democratization of credit. Another big initiative is the whole ONDC, which is the Open Network for Digital Commerce. NPCI is one of the shareholders, 20 shareholders, and this again is a wonderful initiative by the government. And the idea is how do we disaggregate e-commerce and allow retailers to participate, suppliers to participate, different logistics companies to participate. And this is going to have a big impact on how commerce is done, because everybody in India will now be doing e-commerce. So every small retailer, every small supplier will be doing e-commerce. It will have a big impact on hyperlocal commerce and quick commerce, because a small retailer will be able to participate. And this combination of credit enabled through UPI and enabled through account aggregator and ONDC will fundamentally reorder the supply chain of India to become far more efficient and far easier to reach products and services to everybody. Now, in particular, I want to acknowledge that the payments group at RBI has really been at the cutting edge, led by Mr. Ravi Shankar, Mr. Vasudevan, and they combine both knowledge, but also understanding of risk. Because when you sit as a regulator, when you're sitting as an innovator, everything looks hunky-dory. But when you sit as a regulator, you also have to think about fraud, about losses, about things going wrong. And I think this combination they've been able to do very well. Now, I think the launch of the things today will actually democratize UPI even further. Today, I think we have about 260 million people using UPI. And I think with the launch of the offline UPI at 123, I think we can add another 500 million people to the payment system. So we'll be having 500,000 people in India doing digital payments. We already have about 150 million people in India using Aadhaar-enabled payment system. Again, something that was done by UIDAI and RBI about 8 years back. And that is, again, has 150 million users already using AEPS to withdraw money in small towns and villages through a network of a few 100,000 BCs. So that's been another big change in the way money is reaching to the poor. And I think all these changes that they're coming in will be a game changer for India. I think on the credit side, I personally see the launch of UPI and RuPay credit card as the first step of credit on UPI. And I think it's a very sensible first step because we already have an existing credit product like RuPay, and by making it available on UPI, you are testing the waters of credit. But as we go forward and as I think the RBI gets more confidence with this, they will, I'm sure, right, Mr. Vasudevan? I hope so. I'm sure they'll open up to more forms of credit on UPI, and therefore there'll be new native credit abilities on UPI like BNPL and so on. And imagine if there are 400, 500 million people on UPI, and if they have access to native credit using BNPL and other tools, and using the digital footprint of their transactions, there'll be a massive democratization of consumer use of credit in a very, very healthy way, because it'll all be based on data. So I think that's really the next big thing which will happen there. Also, I think the good thing about UPI Lite will be that it'll benefit the whole load on the banking systems. I think the banking systems have massive load of transactions. And if the bulk of the small value transactions can be taken away from the banking system and done locally, I think it will reduce the pressure on the banking systems of the bank. So this will also increase the speed and reduce the technical declines. And I think getting this right will be very important to get to that 1 billion a day that Mr. Mahapatra talked about. Also, I think the BBPS cross-border is very important. I think in general, cross-border is going to be very important because India is the country which gets the largest amount of remittances in the world. Indians send $86 billion a year of inward remittance, and this is sent from places where they work, whether the Gulf or Singapore or US or whatever, and there is a requirement to enable them to send money quickly, cheaply, and I think, I know that NPCI is working on building the cross-border pipes. So in general, building cross-border pipes for bill payment and for remittances, for creating a global acceptance network. All these will be very important for the global dispersion of the technology that we have. Also, we don't talk about it, but the technology infrastructure at NPCI is among the most advanced anywhere in the world. They have built these platforms like UPI entirely on an open source stack at very low cost using commodity hardware and built it for scale. So right from day one, they talked about how do we build an infrastructure for billion a day. A billion a day is not a small number. And the fact that they're confidently talking about doing it means the confidence they have in the infrastructure that they have built. And that infrastructure now is being reapplied to other applications they have like IMPS and AEPS. So the underlying core infrastructure is now being standardized by NPCI, which is a phenomenal technical achievement because it's happening while it's online. And we don't even know that behind the scenes, they're doing major surgery and putting this at a whole different level. I think another point I just want to emphasize is what I would call as combinatorial innovation, that this infrastructure is actually having a huge impact on the country. And I'll give you two examples from the capital markets. The first has been the revolution in IPOs, because we have connected UPI to ASBA. And today, any large IPO, like a LIC IPO, more than half the transactions, I think, are UPI on ASBA, which means that people on their phone are applying for shares. They're blocking the money using ASBA, and the money is only deducted when they get the allotment. And this has had a big impact on streamlining our primary markets. And the second thing is the impact of recurring mandates on systemic investment plans, or SIPs. India today last month got 12,000 crores of money into SIPs. And that's happening because you can give a recurring mandate, either an NACH or using UPI autopay. And because of that, domestic money is coming into capital markets. And one of the reasons why our capital markets have withstood the FPIs going out is precisely because domestic investors were coming through SIP route, all enabled by the technology at NPCI. So, there are a lot of ripple effects of all this which are impacting the economy, impacting India's global situation, reducing risk and so on. So that is something which is very, very interesting. But anyway, I think today we have some great launches, but this is just the beginning. I think there are many more things NPCI has to do. There are many more things that RBI has to enable. And I'm sure that India will continue to be a leader and role model in the world of financial technology. Thank you very much.
Thank you very much, sir, for sharing your visionary thoughts with us. Ladies and gentlemen, it's that time of the evening wherein we gear up for the big launch, as we have been discussing about. And that being said, first up, we shall begin with the launch of the RuPay credit card on UPI. So I request our Honorable Governor, Reserve Bank of India, Shri Shaktikanta Das. Sir, I request you to please activate the launch by tapping the tab.
Introducing RuPay credit card on UPI. Today, India has over 8 crore credit card users with the potential to reach 30 crore credit card users by the year 2026, which will fuel the growth of GDP of our country. Today, the usage of retail credit has diversified with the inclusion of young non-metro users who are driving spends through credit card. However, the merchant ecosystem has acceptance of just 68 lakh cards at POS terminals. To ensure increased acceptance and usage, Reserve Bank of India has approved the linkage of RuPay credit cards on UPI, making it a seamless, digitally enabled credit experience. With credit on UPI, customers will get one-stop solution for all their credit card needs. They can pay their credit card bills, check credit balance, manage credit life cycle, get UPI help for credit card dispute, set up UPI autopay for bill payments. And for merchants, it opens up the avenue to cater to a new set of credit customers, thus ensuring growth in their business. Credit cards on UPI will ensure easy, safe, and instant digital transactions. Let's see how this works. To link your RuPay credit card with UPI, open the Bheem UPI app. Click on the Add Credit Card option. Select the bank that issued your RuPay credit card. Now, select the RuPay credit account. Enter the last 6 digits and validity details of your RuPay credit card. Enter the OTP received. Set and confirm your UPI PIN. And it's linked. Now let's see how to make UPI payment with RuPay credit card. While making purchases at any credit-enabled merchant store from your Bheem UPI app, scan the UPI QR code. Choose credit card account as your debit option. Now enter the UPI PIN to pay. And you are done. You can also enjoy the benefits of RuPay credit card on UPI while making payments for groceries, movies, travel, food, shopping, jewelry, restaurants, and much more. Now enjoy a seamless digitally enabled credit experience with RuPay on UPI.
Can we have a huge round of applause one more time, ladies and gentlemen, with the launch of the RuPay credit card on UPI. I'd like to request our dignitaries to please take your seats so that we can also invite up next for the live transaction demonstration. I'd like to invite Mr. Kunal Kalavatia, Chief of Product, NPCI, to please come on stage. We will now be witnessing the live transaction demonstration.
Good evening, Nandan sir. Good evening, Chairman sir. Thank you very much. I think credit for today goes to India, the Indian consumers who have given us this glory on digital payments. Credit goes to RBI for setting up the vision for digital payments constantly year after year, and I think leading this path. Credit goes to the banks, the ecosystems, the fintechs for standing up, for spending late nights developing the ecosystem around us. Credit goes to Team NPCI. Thanks for working hard. Thanks for getting me on the stage and making it confirm that the transaction goes through when we attempt now. This is live transaction. When the screen blanks out, it's a planned blank out. It's when you're entering the PIN, you can't show the PIN page. That's why you're blanking it out. So don't worry, it's planned. Credit goes to UPI. With so much of credit, we thought, let's add credit to UPI. We're going to show you a live demo. I have my friend Deepak who will be helping me through the process of the credit card live transaction. Yes, on the screen, we're opening the Bheem app. The Bheem app is live. We have Punjab National Bank and Union Bank already live. We have Indian Bank who's already moved into production. We've not been able to add an account, but it's live in production. There are many banks who will go live in the coming next 1 week itself, live on credit cards. We go to the top left-hand corner where you see the bank logo, and you can see the credit accounts which are linked already. Yeah, that happens. That's with technology. Yeah, I think we can see the second and the fourth screen is the Union Bank credit card and the PNB credit card linked on the Bheem app. Yes, I think the first thing before you shop or you make commitments on shopping, I think it's prudent to just check how much do you carry. So Deepak, if you can tell me how much you're going to be shopping me. Deepak? Yeah. So I think the latest iPhone. Yeah, no, I think this is a bit short there. You can't buy the iPhone, but you can buy something for 49,919. That's the balance. The customer can check the balance. Now I think we do a transaction, Deepak. So we'll do a small value transaction, Deepak. You can buy me something. We're going to scan a merchant QR. Yeah. Yeah. We're doing a small value transaction for demo, but I can assure you we'll buy something out of this credit limit available. We'll add to the economy of the country there. You select the bank account or the credit card account. The customer gets an option, chooses the bank account, confirms. That's when the screen is going to blank out after the send button. But that's when he's entering the PIN. He's entering the PIN. He's not supposed to tell me this. You're not supposed to tell your PIN to anyone. the transaction gets processed, and it's done. The buffering is because of the network here. It's intended. Thank you. Thanks to everyone here for making this transaction a success. Thank you.
That truly deserves a thrilling round of applause, ladies and gentlemen. One more time, everyone. And with that, we will now gear up for the launch of UPI Lite. Once again, I request all our dignitaries to please come forward to activate the launch by tapping the tab, sir.
Under the guidance of RBI, NPCI has ushered a new era of digital payments, which is both secured and seamless in India. This superior payment experience has helped the UPI platform to scale from a single transaction to 1 million and now billions of transactions. UPI has enabled new segments of trade and commerce and is now on its way to make instant payments available across the globe. With the growth of digital transactions in India, there is a need to further innovate and make payments even faster and simpler for consumers. RBI has laid down the vision of offline payments and has supported the ecosystem by enabling an on-device wallet approach to support fast offline payments. Taking this vision of RBI, NPCI has created UPI Lite, which will enable an on-device wallet for faster and simpler payments. While the vision is to enable offline payments, in this phase, UPI Lite will make payments simple, fast, and secure. The enablement will not only improve user experience but help the ecosystem to grow. The UPI Lite will help customers to make transactions without cluttering their passbook or bank statements. User will also experience better transaction success rates. This solution also helps banks to better manage the load on their IT systems and is a scalable solution. Presenting UPI Lite, bringing speed and convenience to India. With UPI Lite, you can now transact with any UPI Lite enabled application and make payments without the need for a UPI PIN. Let's see how it works. Download any UPI app, enable UPI Lite by adding funds using your UPI PIN. Add funds from your savings account to the UPI Lite wallet. These funds will reside in the common library of the UPI app, which provides the on-device wallet service. Now, every time you transact, you need to do a secure login to the application. You can either scan a QR, enter a UPI ID or a UPI number, or use any existing payment flow on UPI. Transactions below Rs 200 can be done via UPI Lite without using UPI PIN, thus making UPI faster and bringing a better customer experience for all Indians. UPI now faster, easier and more convenient. Powered by NPCI.
Well, I'm sure everyone is eagerly looking forward to another live transaction demonstration. I'm going to request our dignitaries to please take your seats so that I can invite once again Mr. Kunal Kalavatia to please share with us the live transaction demonstration. Over to you.
Thank you. I think with such a heavy-duty launch in the panel here, the audience is here, I think we want to make it a bit light. I think the demo starts with one small exercise. I think you need to show your smartphones. I'm not carrying one right now, but I think your smartphones, please. I think I request everyone to download the Bheem app. Dilip, Pravina, I've done my due there. Yeah, you can download the Bheem app. This product is available to you right now. Big heavyweight banks, SBI, SDFC, Kotak, Punjab National Bank, Union Bank, Canara Bank, Utkarsh Small Finance Bank. If you have bank accounts there, you can connect the account right now, do a transaction yourself. I will be sharing my UPI ID with everyone here. Small contribution works. Again, I think just walking you through how this is going to be working, it's very, very simple. You go to the left-hand side of the Bhim app, the bank logo, you can see you've attached the UPI Lite. Let the screen settle. Yeah. You can again do, I think you click on the UPI Lite tab. You can see the actions that you can do. You can add money, you can send money. When you're adding money, the max limit is allowed is 2,000 rupees anytime. When you're sending money, the max transaction is 200. But let me tell you, as a customer, you don't have to remember, we've done something smart here. Josh, you want to possibly see how we add money. So if you have a balance of 1947, which is the time when we got free, we're in a free world with digital payments now. 2000 minus 1947, I don't need to do maths. The app will calculate it. So that's the smart top-up logic that we built up here. If you want to add up, you can add up money there. When you're sending money, we'll scan a QR and see how the smart logic again comes back into play there. We'll do a bit of a play there. Yeah, I think when you're adding, I think 201, please, Josh, it automatically moves to the main account. So as soon as the transaction is going beyond 200, the app automatically detects it, moves it to the main account. If you go down, make it 20, just remove the 1, the UPI Lite account features there. If you press confirm, it goes through, no entry PIN required, the transaction goes through. It declutters the app, it declutters the passbooks of the consumers, no PIN required. For the banks, it declutters their tech infrastructure. So that's Lite for us. This is because of the network here. I think the screen comes faster than this. It reduces the transaction time from 5 seconds to less than 2. It is going to reduce TD by 80% and business declines by 50% for low-value transactions, which is a significant portion of UPI transactions today. Almost 54% of UPI transactions, which is on the higher side than 3 billion transactions a month, is less than 200 rupees ticket size. So that's a big, big enablement. While we call the product Lite, it has a heavy-duty job to do. Thank you.
Thank you. Thank you very much, Kunal. And with that, ladies and gentlemen, it's now time to gear up for the launch of the Bharat Bill Pay Inward Cross-Border Bill Payment Solution. So once again, I'm going to request our dignitaries to kindly step forward to tap the tab so that we can all witness history this evening.
Bharat Bill Pay is an interoperable platform that offers convenience of recurring bill payments to every citizen of India. Bharat Bill Pay has transformed the bill payment experience for every customer and every biller, making bill payments seamless, helping Indians to pay bills faster and quicker. Bharat Bill Pay strives to service the customers and its key stakeholders, billers, banking partners, fintechs and TSPs, and support every Indian make bill payments seamlessly. It's time to extend this benefit beyond boundaries and service 30 million plus non-resident Indians. Presenting Bharat Bill Pay Inward Cross-Border Bill Payment Solution. A unique solution created to help non-resident Indians pay recurring bills for their loved ones in India. Let's see how it works. Meet Kumar, a site engineer working in Dubai. He often sends money to Kollam, his hometown in Kerala. He remits substantial sum every month to his brother for paying utility bills for family. Despite making regular transfers, he has no way of confirming whether the bill has been appropriately paid and on time or not. The process is cumbersome and lengthy, but has he got to live with it? No, he doesn't. With the Bharat Bill Pay cross-border bill payment solution, he can now make bill payments easily through any of the exchange house's app, website, branch or collection point. This solution will enable bill payments across the globe for Indians, thereby empowering every non-resident Indians to pay bills easily, bridging the bill payments gap, bringing in new opportunities with multiple payment modes and channels. Bharat Bill Pay, empowering payments for Indians everywhere, anytime, anywhere.
Let's have another prolific round of applause, ladies and gentlemen. And I think by now we know what's the drill, what's coming up next. Another live transaction demonstration, for which I'd like to invite on stage Nupur Chaturvedi, CEO, Bharat Bill Pay, and Shweta Shetty.
Hello. Good evening all of you. When Mr. Neil Kedi asks us to push the boundaries, we don't just push them, but also cross them. With that, we will attempt a cross-border transaction here in this hall, helping Mr. Kumar that we see sitting in Dubai to make a payment for his family back in Kollam. Can I request for the screen to be brought up, please? Yes. So our payment partner for today's launch is Lulu International Exchange. We now have their app, which we will open. The customer needs to log in to this particular app. We have Federal Bank powering this transaction from the India side. Once the customer has entered the app, he will see a very familiar logo that you all know by now, which is the Be Assured BBPS logo. Under the BBPS logo, all the categories that are enabled for NRIs will show up. Can we just click and see all the categories, please? Once the categories come in, Mr. Kumar will then select which category does he want to pay for. In our case, it will be a lending EMI transaction that we will attempt. Given the bandwidth here and the network issues, I am using the word attempt. My apologies for that. The customer then selects the category, which is EMI, post which he will select the lender and enter his loan account number. Yep, let's move forward. Some tech glitches, apologies for that. But given the fact that it is happening outside of India, we can expect some of this. To reiterate, the first exchange house to go live is Lulu International Exchange. They have a presence in 9 countries in Middle East as well as Southeast Asia. They will enable not just the digital app, but also their physical points for doing assisted bill payment transactions for the Indian diaspora in these countries. Our payment partner is also Federal Bank, which has a market share of more than 20% of inward remittances even today. With this, hopefully, the number of transactions and their market share should increase upward. Also, I would like to thank our TSP partner, which is DigiLedge, which has worked overnight over the last 2 weeks since the RBI approval came in to enable these 2 partners to go live. Yes, so now we have the biller coming in. Once the biller name is entered, there's a requirement for the loan account number, which is entered. On pressing continue, the bill of Indian lender gets fetched. Here are all the details that you can see. The amount is mentioned in 2 languages, which is the local currency as well as INR. Once the bill is fetched, the customer can choose to either pay or schedule. In this case, here is the successful transaction that has been powered by BBPS. So finally, I can take a breath. And with that, thank you very much for all the partners and all the audience. Thank you very much. Thank you very much.
Thank you very much, Nupur. And ladies and gentlemen, while we have witnessed history with the launch over here, can we once again have a huge round of applause, everyone coming together? And on that enthusiastic note, we'd also like to invite the partners who have made this possible. So first up, for the RuPay credit card on UPI, I'd like to invite the partners to please come on stage for a group photograph with our dignitaries. May I please invite Mr. Atul Kumar Goel, Managing Director, Punjab National Bank. We request you, sir, to please join our dignitaries for a group photograph. We'd also like to invite Mr. Kalyan Kumar, ED, Punjab National Bank. Mr. A. Mani Mekhalai, Managing Director, Union Bank, and Mr. Nitesh Ranjan, Executive Director, Union Bank. Well, let's also hear it for the partners who have made this possible. We thank our partners for making the launch of the RuPay credit card on UPI possible. With that, let me also move ahead and invite our partners for the UPI Lite. May I please invite Mr. Parag Rao from HDFC Bank, Mr. Nitin Chugh from State Bank of India, Mr. Nitesh Ranjan from Punjab National Bank, Mr. Kalyan Kumar from Punjab National Bank, Mr. GPJ Gupta from Kotak Bank, Mr. Atul Kumar from Canara Bank, Mr. Sukhsagar Roy from Indian Bank, Mr. Govind Singh from Utkarsh Small Finance Bank. Let me please invite our partners to please come on stage for a group photograph. Our partners. Thank you very much. And now, ladies and gentlemen, we'd like to invite our partners for the Bharat Bill Pay Inward Cross-Border Bill Payment Solution. May I please invite Mr. Adib Ahmed, Managing Director, Lulu Pay, and Mr. Ashutosh Khajuria, Executive Director and CFO, Federal Bank. Can we also have a huge round of applause to welcome our partners for making it possible for the launch of the Bharat Bill Pay Inward Cross-Border Bill Payment Solution. Thank you very much. As I once again request our dignitaries to take their seats. Ladies and gentlemen, and now to present the keynote address, once again, may I please request Shri Shaktikanta Das, Governor, Reserve Bank of India, to please share your valuable words with the August gathering.
Once again, good evening. It's very difficult to give, address twice in the span of about an hour or so. But Shri Mahapatra, Shri Nandan Nilekani, distinguished members of the audience, I am extremely delighted that these three products have been launched today. And as was pointed out, these were announced by the RBI as a part of our monetary policy statements. Usually in the monetary policy statements, we have a part B, where we make other related announcements, that is announcements relating to whatever falls in RBI's domain. So these were announced in the last few months, and I would like to first place on record my deep appreciation and congratulations to the entire team NPCI for making this possible. They're on our right side and making good progress. Best wishes to all of you, and please carry on the excellent work which is being carried forward by Sri Mahapatra, Dilip Asbe, where is he? He is somewhere here, and the entire team. Now, I remember in around the time of the demonetization, this UPI was just taking shape. I can see Mr. Hota seated there. He was, I think, perhaps that time he was the CEO. And around the time of demonetization, it was a big challenge to see that the entire exercise and the entire UPI gets a major push. And thereafter, the pandemic, in 2020. So other external, other developments enabled us, helped us to push the, the entire UPI system. And in fact, if I can say that it is not just an innovation, and as Nandan Nilekani pointed out, I think UPI has emerged, and let me say very clearly, UPI has emerged as the pride of the nation. It's a phenomenal product, it's a phenomenal progress, but we need to also remain extremely watchful as the volume of transactions are going up, as the scale of operations are going up. We need to be extremely watchful, and there has to be constant upgrading of our systems, of our backup facilities, of our disaster recovery facilities, and of our, the hardware, and also internal, internal skill upskilling, and other exercises. I mean, we need to be in tune with the time. So it's a huge responsibility which is cast upon the NPCI, and I'm sure the entire team NPCI will be able to do it. Now, there are some themes on which, the whole, the entire initiatives under UPI are being initiated. One is interoperability. Interoperability between systems and interoperability cross-border also. BBPS is just a beginning, and we have earlier announced about the linkage between UPI and the Pay Now of Singapore that will be formally launched, in the next few months. Similarly, the subsidiary which has been formed by the NPCI for its international operations between RBI and NPCI and the subsidiary company which has been formed, we are now in discussion with several other countries in our neighborhood, in Asia as well as in Southeast Asia and in Middle East and in other parts of the world, to have that kind of linkage between UPI and the payment systems of their countries. So interoperability, making payments faster, making payments more secure, providing backup systems so that it is safe and sound, and it works 24/7 into 365, and focus on constant upgradation of systems, processes, upscaling in sync with the requirement of times. I think just as we have launched these three products, on these three products also it is possible that, we will, as we go forward, there will be inputs, there will be market feedback, there will be feedback from customers. So constantly the customer feedback has to be taken. One on UPI 123 was a point was mentioned by somebody from there about the difficulty that he is experiencing with regard to UPI 123. I would like to look into it in greater detail. I will ask our officers, and also I would request NPCI to provide, provide us the details what exactly is the issue and how best it can be dealt with. While I said that we do not provide subsidy, and that is a factual position, but we can certainly, being an enabler, we can certainly sort of provide necessary facilitation to see that how best, what is the best outcome that we can launch. Having launched UPI 123, we would like UPI 123 to succeed. Similarly, having launched these 3 initiatives today, it should be our endeavor to ensure that these three systems also, these 3 products also work. So we have to, it has to be a joint effort between between the Reserve Bank, between the National Payment Corporation, just as I said in the earlier part of in the earlier address, that there has to be a joint, there has to be a partnership between the Reserve Bank and the fintech players. We have to work on the principle of partnership, then only we can realize the best potential that fintech offers to, for our development and for the coming time. So once again, my congratulations, and I'm very happy that Nandan Nilekani has made it possible to be here. And once again, my congratulations to the entire team members of NPCI. My congratulations to all the other fintech players who are participating and have put up are showcasing their products and their initiatives. I think this is one area where India can play a major leadership role in the world in the days to come. So best wishes once again, and with this I would like to conclude. Thank you.
Thank you very much, sir. It's indeed an evening that's celebrating innovation and possibilities. So on that note, I'd now like to invite on stage Ms. Praveena Rai, Chief Operating Officer, National Payments Corporation of India, to please propose a vote of thanks for the launch session that we just witnessed. Please put your hands together and please help me welcome on stage Ms. Praveena Rai.
So we've really seen 3 amazing products that have just been launched. And when I look at each one of them, we've got on one hand RuPay credit card and UPI to deepen the penetration of credit. We've got UPI Lite to enhance the experience of the customer. It's going to be faster and more convenient. And we've got the international BBPS, which is going to help us build bridges cross-border. So this is, I think, 3 different axes on which these 3 products operate. And it's really giving me goosebumps to even think about this. I would like to thank everybody who's made this happen. Mr. Shaktikanta Das, thank you so much for being here, sir. The guidance from RBI, working very closely with the entire team from DPSS, CGM, Mr. Rabi Kumar, and the whole team for their guidance, setting the direction through the payment vision, which provides us the guardrails, as well as gives us the vision against which we can really think and operate. Thank you so much, Mr. Nandan Nilekani. Thank you for being here, all the leadership that you provide for digital impact, and more importantly, every one of them that moves towards social and public good. It really inspires us. And sir, our chairman, Mr. Mohapatra, your direction, vision, strategic direction, as well as the governance that you drive for us really keeps us very grounded and ensures that we execute to all these expectations and promises. I would also like to here call out the support, the phenomenal action and activity from the entire banking community, all the senior bankers we have here, without whom we will not be able to do anything in the digital payments marketplace. So I would say, you keep hearing a lot of things about banks, and banks, are slow and innovation is happening through other modes. I think without the innovation driven by the banking community, we will not be where we are on digital payments today. So thank you very much for that. And the entire fintech ecosystem that's shown up in large numbers, some and many are here, many of the ecosystem participants who are not here, so thank you for making all of this happen. A lot of the outcome we see here has happened at very short notice. So thank you very much for that. And of course, the NPCI team, the direction from Dilip, who's not satisfied with even that billion a day, as well as the entire group, various functions that have put this together, and the GFF and PCI units who created this excellent event and the forum for us to come together, celebrate, and be a part of this launch. So we really feel that this has set the stage for the next big leap. And we hope that this will add to making the India stack into a global stack that we will all be very proud of. And I think on behalf of the ecosystem, I will say that we will fulfill this promise on the back of which we have made these launches today. Thank you very much.
Thank you very much, Praveena ma'am. And indeed, we could also see from the vibrant smiles of the team, as they often say, the teamwork makes the dream work. So once again, congratulations. And with that, let's also have a huge round of applause to thank all of our dignitaries for joining us this evening. If I may request you all to come together for a group photograph, sir. One final group photograph, if I may please request you. We'd like to once again extend our gratitude to Shri Shaktikanta Das, Shri Bishwa Mohan Mahapatra, and Shri Nandan Nilekani. Thank you very much for joining us this evening, and thank you for making us witness history with the launch this evening. Well, I can see that there's a lot of movement over here. So that being said, we'll also have some announcements for all of you. We will be hosting the hackathon session right now. So I'm going to request all the members of the audience who are interested to be a part of the hackathon announcement session, please be seated. We will get the session started in the next 5 minutes. So I'm going to request all of you to please be seated for the hackathon announcements coming your way in the next 5 minutes. To inform you that the awards night is about to begin in the next couple of minutes. I repeat, the awards night will begin in the next couple of minutes. So I'm going to request everyone to please be seated so that we can get started with the hackathon announcement session and then the awards evening. I'm sure all of us are eagerly looking forward to it. So I'm going to request all of you to please take your seats. Thank you. All right, as they say, it's not over until it's over. So I'm going to request everyone to please take your seats. We will be doing the hackathon announcement session right now in the next 2 minutes, post which we'll also be part of the awards evening. So I hope all of you are eagerly looking forward to it. I'm going to request you all to please take your seats. Thank you. All right, ladies and gentlemen, I'm back on the podium, which means we do have a couple of announcements for all of you. First up, we'll have the hackathon announcement coming up. So I'm going to request everyone to take your seats, and post that, we'll have the awards evening. So let's hold on to that energy and that enthusiasm for a little more while, and post that, we'll also have the Sundowner party in store for all of you. So everybody, very quickly, please take your seats so that I can invite our speaker for the hackathon announcements. I'm going to request each and every one to please take your seats. Thank you. And now, ladies and gentlemen, could we please have everybody's attention? And I really mean it, everybody's attention. All the ones who are seated at the side, thank you so much. All the ones who are still standing here, let me announce that we still have one more session lined up, a very, very interesting hackathon announcement coming up your way. I'm going to please urge everyone to take your seats. It's not over until it's over, so I'm going to request everyone, please take your seats. And we're going to have with us Ashutosh Dubey, who's a senior lead innovation management, to come on stage and gear up with the hackathon announcements. But before that, once again, all the ones who are still standing here, if I could request you, please very quickly grab your seats. It's time to bring on board our next speaker as well. And after that, we also have the awards. So we'd like to, sort of do this fast and seamless, just like UPI Lite. That's the plan. So I'm going to request everyone to please take your seats. Everybody. All our delegates, all our members of the audience near the stage area, if I could request you, please very quickly take your seats. And I thank you all for your attention. Thank you so much for your time as well. And with that, we're about to get started. And also, I'd like to request the jury of the Global Fintech Awards to please take your seats in the first row. All the jury members of the Global Fintech Awards, I hope you can all hear my announcement. I'm going to request you to please take your seats on the first row, the jury of Global Fintech Awards, because we're about to get started with the awards evening as well. All right, so looks like we do have everybody's attention here, at least all those who have taken the seats. If that's the case, can we have a round of applause? Please help me welcome Ashutosh Dubey, Senior Lead Innovation Management. Can we please have a louder round of applause, everyone? Everybody, together, everyone. Wonderful indeed. Thank you so much.
Good evening, everyone. It's difficult to get attention after a big launch. But I'll keep it very crisp so that you can understand what we are doing next. So what we have done today, we have shown it to you, but what is the plan for next steps, next 3 years, next 5 years? So as we are all living in the VUCA world, innovation is only the sailboat which will help us to drive further also. So keeping that philosophy in mind, from the innovation aspects, we are targeting 3 areas of innovation. One is the breakthrough innovation, one is sustainable innovation, and one is the disruptive innovation. And today I'm trying to announce the 3 areas which we are trying to launch today in this GFF platform. The first area which is a breakthrough innovation area, which is blockchain for us. We are trying to launch from today this blockchain hackathon. The key areas which we want to address in this hackathon is on the interoperability, scalability, and multiple blockchains talking with each other, adoption in the ecosystem, what are the top use cases. These are the top themes which we are trying to address with this hackathon. Our objective is to bring the ecosystem up with this hackathon because we are seeing so many challenges in adoption of the blockchain, but how to bring everyone in par. And that is the ultimate goal to launch this as a hackathon theme. The prizes for the grabs is around 40 lakhs rupees. Top one is 15 lakhs. Second one is 10 lakhs. And fifth, 5 lakh is for the third one. There is a QR which you can see on the screen. If you can just scan it, you are able to go in the page where it is already launched. So people can do the registration. They can submit their ideas. These ideas will be open for next 1 more month. And the next 3 months, we will try to close this hackathon. This will be a combination of idea plus a technical solution being delivered in the end goal. So I'll request all the fintechs who are interested, not only in the blockchain space, but at least in the Web3 space, they should definitely register for this hackathon and try to participate in it. The next theme which I'll address here is on the disruptive side. Disruptive, why? Because this technology is already there, but we need to evolve on the more use cases, adoption side of it. This we are calling it as Tech Hackathon. The key themes here is, we have kept it generic right now for data science and AI/ML, but this we used to leverage on the infrastructure side of it. Infrastructure, what I mean is the technology infrastructure, how data science and AI can improve or increase the automation on the back office side of it, infrastructure side of the operations. This hackathon will target on that. This already is live. You can scan the QR, and the prizes will be not displayed right now, but what we have thought is we have identified the key organizations which has come up with these solutions. NPCI team will sit with them, try to complete a POC first, and then we can incorporate those solutions in the system. The third area, which is on the continuous innovation, which is also required. So now every time you will not do a technical development or something. That's why we have come up with a concept of designathon, which is like doing innovative designs for RuPay on the go. As you all know, RuPay on the go is a solution which is adopted across the ecosystem in the form of different variables. There are secure elements which has been put up. There is, you have watches, variables, anything which is there all on the RuPay. We want innovative designs to come up as this hackathon based on designs. The objective is the new designs can be developed by the designers. It can be anyone. It can be a technical design. It can be a marketing design. It can be a solution design. But interested designs can be evaluated by NPCI team. This is also live. You can see in the QR. These QRs are already placed across the GFF portals. And you can definitely reach out to NPCI team to understand more about this hackathon in NPCI Pavilion. So that's it from my side. I'm open for any questions, if any. Thank you so much. Okay. So thank you, I'll request everyone to visit NPCI Pavilion once. You will get more ideas about this hackathon, how you can participate, and come up with us to partner in this ecosystem to solve these challenges. Thank you. Have a nice day.
Thank you very much. I hope all of you managed to scan the QR code in order to participate. And with that, in case any further queries on this, then you can also please connect with Ashutosh. That being said, let's also march ahead because we're also about to start with the Global Fintech Awards evening. So we're just going to request everyone to please be seated so that all the rest of our members of the audience can also join in and we can get started with the awards evening. So stay tuned. We'll be back in just next couple of minutes to get up for the big awards evening.
Left my home for this, starry-eyed, it's no surprise.
Check. All right, ladies and gentlemen. Well, I'm sure everybody's looking forward to the awards evening. And that being said, we're about to get started in the next 2 minutes. Once again, we request everyone to please take your seats so that we can roll the Global Fintech Awards. I'm going to request everyone to very quickly take your seats. And if I may also request the jury members of the Global Fintech Awards to please occupy the first row. Please take your seats on the first row. The jury members of the Global Fintech Awards, I request you to please occupy the first row. And everyone, please be seated. We'll get the program started in the next couple of minutes. Thank you. Years, fintech adoption rates have increased at an exceptional rate globally, which have also been the highest and contribution of these fintech companies and people to the fintech sector. So the GFF Fintech Awards is actually in its debut year, and that will recognize outstanding emerging startups, disruptive technologies, unique business models, and innovative founders and entrepreneurs. Now, first up, I just mentioned the fact that the Global Fintech Fest, the awards, is in its debut year. So can we have a youthful round of applause? Come on, let's come together, bring that energy, because it's the debut year, so let's give it all that love and all that enthusiasm as well. Now, that being said, let me also inform you all that with 25 unique award categories, we have 4 unique classifications. So first up is the Special Fintech Achievements. We also have the Best Fintech Trendsetter. And then we have the Best-in-Class Solutions, Best of Payment Innovations. So on that note, 25 unique award categories across 4 unique classifications, and we're all set to recognize the global fintech glory. On that note, before we move ahead, I'd also like to take the opportunity to thank our jury members for their valuable time coming together to pick our winners this evening. We'd like to thank Ms. Amna Ajmal, Group Executive Merchants, Acceptance and Digital Partnerships, MasterCard. Mr. Anil Kumar Gupta, Partner, Microsave Consulting. Mr. Anish Sarkar, CEO, Sodexo. Mr. Anubrata Biswas, CEO, Airtel Bank. Mr. Naveen Surya, Chairman, Fintech Convergence Council. Mr. Devang Nerala, CEO, NTT Data. We'd like to further thank our jury members, Lars Markel, Banking Lead, Viva.io, Mr. Srinivas Jain, Executive Director and Head of Strategy, SBI Mutual Funds, Ms. Lizzie Chapman, Co-founder and CEO, Zest Money, Mr. Pranay Zaveri, Managing Director, India and South Asia, Euronet Worldwide, Mr. Rajesh Vadhwa, CBO, M2P Fintech, Mr. Riju Datta, Co-founder, Cashfree, Ms. Shruti Chandra, Senior Assistant Vice President, Invest India, Ms. Suzanne Chishti, CEO, Fintech Circle and co-editor, the Fintech Book Series, and Mr. Syed Mushir Ahmad, Founder, Director, FinStep Asia. So can we also have a round of applause for our jury members? Because all the winners that will be felicitated this evening, it's thanks to our jury coming together. I'm hoping there were some fireworks as well, in order to pick out those winners there. But that being said, looks like we're all set to get started with the very first segment. Now, the only way I can find out if you're all set is, I'm going to ask you, are you all ready? I want you to please give me a big, loud yes. We've had some serious sessions, but now let's put on our energy hats and our party hats. So, ladies and gentlemen, are you ready? That's wonderful indeed. But one more time, let's make it louder. Are you ready? Wonderful indeed. Well, I'm ever ready. On that note, we're about to get started with the very first segment for the evening, which is Special Fintech Achievements. Now, to do the honors, I'd like to invite on stage Mr. Dilip Asbe to please come forward and to also firstly share his thoughts around the entire awards evening as a jury member as well, and then we'll start off with the felicitations. So, Dilip sir, I'm going to invite you on stage. All right. Mr. Dilip says, let's directly get into the awards. All right, so if that's the case, let's start off first up with the Fintech Startup of the Year Award. That's the very first category. So let's find out the winner.
Jar.
Jar it is, ladies and gentlemen, as the Fintech Startup of the Year Award. They managed to receive a jar full of happiness right here with the very first category. Huge congratulations. Fintech Startup of the Year Award goes to Jar. And now let's move on to our next category. This is Fintech Woman of the Year Award.
Any guesses? Mabel Chaco, Open Financial Technologies.
Mabel Chaco, Open Financial Technologies, ladies and gentlemen, as the Fintech Woman of the Year. Congratulations indeed to you, Mabel. As they often say, a woman on a mission needs no permission. So huge congratulations there. And with that, let's quickly move on to the next category. This is Fintech Person of the Year India Award.
Because it's a different person.
Fintech Person of the Year India Award.
Any guesses? With the strategic sale, what they have done, maybe they can buy this place out. Any guesses? Ajay and Vasu from BillDesk.
Fintech Person of the Year India Award. M.N. Srinivasu and Ajay Kaushal from BillDesk. Mighty congratulations. Well, as the smiles galore, let's also move on to the next category. This is Fintech Person of the Year International Award. Let's find out the winner.
Revolut, Nikolai Storonsky.
Huge congratulations to Nikolai Stronovsky from Revolut.
I think he's not here.
He's not here, but we do have a video message. So let's have the video on the screen, please.
I'm thankful for this reward and I'm truly honored. And I'm sorry I can't be with you in person today, but I hope to visit you all soon and hope you enjoy the festival today. India is one of the most dynamic fintech markets in the world and is a key growth market for Revolut. And it's very impressive for me what India achieved in digital payments ecosystem. Revolut is very excited about the opportunity that exists in India, the potential to make meaningful contribution to the dynamic fintech ecosystem. India will play an important role in establishing and strengthening Revolut as a truly global financial super app. Providing frictionless services to customers is a priority for Revolut. And to be receiving this award in the presence of the movers and shakers of the Indian and global fintech industry makes this even more special. I keenly look forward to visiting and experiencing your beautiful country soon.
Huge congratulations to Nikolay Stronovsky. With that, I'd like to thank Mr. Dilip Asbe for doing the honors. We have Ms. Paroma, who's the India CEO of Revolut. And can we have a huge round of applause as she receives this award on behalf of Nikolay? Congratulations. And with that, thank you very much, Dilip sir, for doing the honors. Let's move on to the next segment. This is Best FinTech Trendsetter. Now, to do the honors, may I please invite Mr. Srinivas Jain to please come forward and present the awards in this category as well. First up, ladies and gentlemen, we're looking at Most Design User-Friendly Interface FinTech App Award.
Any guesses? It's Paytm.
Paytm, ladies and gentlemen. Most Design User-Friendly Interface FinTech App Award. I'm sure so many of us have used Paytm as consumers as well. Can we have a louder round of applause? Come on, everyone. Wonderful indeed. With that, our next category, ladies and gentlemen, Most Innovative Use of Technology Award. Let's find out the winner. Zol, ladies and gentlemen. Can we have a huge round of applause one more time? Let's congratulate Zol. Congratulations, and thank you very much, sir, for doing the honors. Thank you once again for joining us. And with that, let's move on to the next category. And to present the awards, may I please invite Mr. Anish Sarkar to please come on the stage. Well, now we're going to focus on the next category, which is Most Scintillating New Product Launch Award. I'm stuck on the word scintillating, so I'm really curious. Most Scintillating New Product Launch Award. Can we have the cue card on the stage, please?
And the winner is Times Internet.
It's time to have a round of applause, ladies and gentlemen, as we hear it for Times Internet. I'd like to request representatives from Times Internet on stage. All right, so looks like time's up. We don't have the winner probably here, but huge congratulations to Times Internet, and we'll take that back from you, sir. And on that note, let's also move on to the next category, which is Best Bill Payment Solution Award. And let's find out the winner.
And the winner is Innovative Payment Solutions.
Innovative Payment Solutions, ladies and gentlemen. Best Bill Payment Solution Award. Do we have the winner here? If not, if I could request Swat. Do we have a winner here? A representative from the team? All right, then on that note, if I could request Swati to please come on the stage to receive the honor on behalf of Innovative Payment Solutions. As the fanfare continues, let's also move on to the next category. This is Best Business Correspondent Award. Let's find out the winner really quick.
And the winner is FinNew Solutions Private Limited.
FinNew Solutions Private Limited. Huge congratulations to the entire team. Do we have the team here to receive the honor? FinNew Solutions Private Limited. All right, then on that note, if I could request Neha to please come on stage to receive the honor on behalf of FinNew Solutions Private Limited. And with that, we'd like to thank Mr. Anish Sarkar. Thank you very much, sir, for doing the honors. Let's also invite on stage our next jury member. We have with us Mr. Devang Nerala. If I may please invite Mr. Devang to please come on stage as well to do the honors for our next set of categories. Well, first up, we're focusing on Best Digital Banking Solution Award. So that's the category we're talking about. Let's find out the winner.
And the winner is Open Financial Technologies.
Open Financial Technologies, ladies and gentlemen, huge congratulations. And up next, the category, ladies and gentlemen, Best in Class B2G Solution Award.
And the winner is Online PSB Loans.
Online PSB Loans, ladies and gentlemen, the winner of Best in Class B2G Solution Award. Let's invite the team on stage to please receive the honor. march ahead, because up next, the category is Best in Class InsurTech Startup Award.
The winner is Girnar Insurance Brokers.
Well, let's have a round of applause as well. Let's come together to congratulate Girnar Insurance Brokers. And if I could request the team to please come on stage. All right, if I may please invite Saloni to please come on the stage to receive the honor on behalf of Girnar Insurance Brokers. With that, I'd like to thank Mr. Devang Nirala. Thank you very much, sir, for doing the honors. It's time to invite our next jury member. May I please invite Mr. Pranay Javeri to please come on the stage, sir, to also present the awards for the next set of categories. Thank you very much for joining us this evening. And let's gear up for the next category. This is Best in Class Lending Solution Award.
Hello, everybody. I guess we need to see a lot more energy, ladies and gentlemen, in terms of applauding the winners and recognizing them. So a big round of applause for the winner, HDFC Bank.
HDFC Bank, ladies and gentlemen, Best in Class Lending Solution Award winner. Congratulations to the entire team. Well, as Pranay sir had mentioned that we need to bring that energy in the applause, so let's move ahead and let's find out the next category, which is Best in Class Mobile Banking Solution Award.
The winner is Paytm Payments Bank Limited. It's another award for the Paytm.
Paytm Payments Bank Limited, ladies and gentlemen. Best in Class Mobile Banking Solution. So let's keep those mobiles aside and let's come together and have a round of applause. Can everybody come together? One more time. Let's have a huge round of applause, everyone. Paytm Payments Bank Limited. Mighty congratulations. Moving ahead. Best in Class RegTech Solution Award.
The winner is Bureau ID India.
Bureau India, ladies and gentlemen, for the Best in Class RegTech Solution Award. We'd like to invite the team to please come on stage. All right, so on that note, if I may please invite Shivani to please come on the stage to receive the honor on behalf of Bureau India. winner. Can we have a round of applause as well? Well, let me also inform you that we have two winners in this category of Best in Class RegTech Solution Award. So while we'd like to congratulate Bureau India, we'd also like to hear out for the winner as well in this category.
Well, the joint winner is Hyperverge.
Hyperverge. Can we hype up the applause, everyone? Let's hear it for Hyperverge. And if I could please invite the winning team to please come on stage. Do we have the team here from Hyperverge to receive the honor? Well, on that note, I think it's only befitting I once again invite Shivani to please come on the stage to receive the honor. Well, high chances when you come on the stage, even the winner turns up. So yes. Congratulations to Hyperverge. And with that, I'd like to thank Mr. Pranay Javeri for doing the honors. Thank you once again, sir, for bringing that energy back inside the hall. And with that, let's move ahead and now invite Mr. Rajesh Wadhwa to please come on stage to also present the next set of awards. Now here, ladies and gentlemen, let's also take a look at the next category. We're talking about the Best in Class Stock Trading Solution Award.
And the award goes to Dhan.
Dhan it is. Can we have a wealthy round of applause, everyone? Let's congratulate Dhan. Best in Class Stock Trading Solution Award. And if I could also request the team to please come on stage. Do we have the team here? Well, if not, if I could please request Swati to please come on the stage to receive the honor on behalf of the team Dhan for the Best in Class Stock Trading Solution Award. Let's move on to the next category. This is Best in Class Wealth Tech Solution Award.
And the award goes to Tata Capital.
Tata Capital, ladies and gentlemen, the winner for the Best in Class Wealth Tech Solution Award. I'd like to request the team to please come on the stage. Do we have the team from Tata Capital to please come on the stage to receive the honor? All right, so then on that note, let me invite Neha to please come on the stage to receive this honor on behalf of Tata Capital. Neha, could we also have you on stage to receive the honor? Well, let's march ahead to the next category. This is Most Promising Financial Inclusion Program Award. Let's find out the winner.
This is interesting. The award goes to Lyra Networks.
Let's have a massive round of applause. Let's hear it for Lyra Network. Most Promising Financial Inclusion Program Award winner, the Global Fintech Best Awards. Now the next award category is Best BNPL, Buy Now, Pay Later Solution Award. So let's find out the winner.
And the award goes to Yabex India.
Yabex India, ladies and gentlemen. We'd like to invite the team from Yabex India. I know we're talking about buy now, pay later, but you don't have to applaud later. We can have a round of applause now as well. Come on, everyone, ladies and gentlemen. And with that, I'd like to thank Mr. Vadva for doing the honors. Thank you very much, sir. And moving ahead for our next set of awards, may I please invite Mr. Deepak Chandnani to please come on the stage to also present the next set of awards. Thank you once again, sir, for joining us this evening. And with that, let's move on to the next category, Best KYC Solution Award.
And the winner is ScienZ Technologies. Well done, ScienZ.
ScienZ Technologies, ladies and gentlemen, can we have a huge round of applause for the Best KYC Solution Award. We're almost inching closer and closer towards the end, so let's hold on to that energy and let's hear it for the Best Neo Bank Award. Let's find out the winner.
And this winner is Finew Selection Solutions Private Limited. Finew Solutions Private Limited.
Finew Solutions, ladies and gentlemen, for the Best Neo Bank Award. Well, let's have the team on the stage. All right, so then on that note, if I could please invite Saloni to please come forward to receive the honor on behalf of Finew Solutions. That's a better idea, sir. Moving ahead, our next category is Best Payment Aggregator Award. Let's find out the winner for the Best Payment Aggregator Award.
In my view, very well deserved. Cash-free payments.
Cash-free payments, ladies and gentlemen. Let me inform our members of the audience that you don't get taxed to applaud. That is also free. Come on, let's hear it, ladies and gentlemen, for cash-free payments. And with that, I'd like to thank Mr. Chandnani. Thank you so much, sir, for doing the honors. And our final set of categories, and to do the honors, may I please invite Mr. Naveen Surya to please come on stage, sir. It's our final categories for the evening for the Global Fintech Awards 2022. I hope all of you are mighty excited let's move ahead and let's find out the winner for the Best Payment Enabler Award.
Okay, and the award goes to what? PCI? No, sorry. You guys are awake. Okay. Pay next. Congratulations.
Pay next, ladies and gentlemen, Best Payment Enabler Award at the Global Fintech Awards 2022. I also hope all the award winners are staying back, because after this we'll also have a group photograph. So the award winners, please stay back. And our next category, ladies and gentlemen, Best Prepaid Wallet Award.
Any guesses? Wow. It's like lottery. Yes, Paytm. Paytm Payments Bank. Congratulations.
Paytm Payments Bank again, ladies and gentlemen. Best Prepaid Wallet Award. And that brings us to the final award category, sir. Yes, ladies and gentlemen, the final award category. This is the Best UPI Payments App Award. And the winner is...
Any guesses again? Wow, Paytm, of course.
Once again, Paytm, ladies and gentlemen. I hope the Paytm team has enough space to keep all the trophies next to them. Massive winners this evening. Congratulations to Paytm. And with that, thank you very much, sir, for doing the honors. I'd now like to invite all the winners to please come on stage. We're going to have a group photograph with your shining trophies and your shining smiles. So let's have all the winners so far. Let's have you all very quickly on the stage. Time for a quick group photograph. You can also bring your trophies along with you. Well, let's have everybody, all the winners, to please come on stage. Winners, please don't feel shy. Please come on the stage, all the winners, everyone. Please come on the stage with your trophies. The winning teams right here on the stage. Time to smile for our photographers. All right, congratulations to all the winners. And on that winning note, it's time to party actually. All right, so we're hosting the Sundowner party in Jasmine 3 Hall. So let's carry forward the conversations and the celebrations in Jasmine 3. Well, that's where the Sundowner party is. So let's all put on our party hats and let's enjoy the rest of the evening. But please don't forget to come back tomorrow morning at 9 a.m. I know we'll all be in high spirits, so please do come back at 9 a.m. tomorrow. As of now, enjoy the rest of the party taking place in Jasmine 3. And we'll see you all tomorrow morning as well. Let's head to the party once again. The party is taking place in Jasmine 3 Hall. Thank you so much and see you all tomorrow.